Testing. Are we live? Oh, wait for it. Is it live? I think it should be live. Hold on. Is it live or a little early? Yes, there it is. Good morning, ladies and gentlemen. Oh, yes, we are live. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts Bootcamp and Real Estate course. But if you don't know what day it is CPI day. So CPI, yeah, we are live, baby. It's coming out in 9 minutes. We are about an hour before the bell, a little bit ahead of our schedule here, but whatever happens here in the next 10 minutes is probably going to define the rest of the day and most likely the rest of the month. So hope you're ready, Chad. We got a couple of things to go over. There's a little bit of news here and there. Again, Elon Musk sold about $6 billion worth of stock. There was a couple of other things. Again, Micron had another update. You got Donald Trump drama and a couple of political things. You have Sam Zell shutting down a SPAC, and then we also have a lot more earnings on the way. But literally now, next about 8 minutes, we're going to have the CPI, and we're going to go over everything that you need to see. Literally, we'll have all of it. Again, if you didn't watch the watch list, I'd probably go watch it now. My expectation is that headline is going to come down, and that core is going to go up. I think headline will give a good reaction, but we'll see. We're also going to be watching the Fed futures and the yield curve live here. So, Chad, I hope you're ready, and good morning. Oh, how are you, Chadadonia? Are you ready? Today, you might watch the yield curve go crazy, you know? You might watch the Fed futures. Oh, they might go crazy. Good morning. What's up, Zuraj? What's up, Devin? What's up, Jasmine? How you living, Connor? Hey, so Mikey, Carp, Nukdum, Remixable Ding. Good morning. Oh, I see you too, Twitch. I see y'all ready to go, baby. Good morning. What's up, Charlie? How you living? What's up, Porsche Main? Bronze Gaming, I know, CPI morning. Hallelujah, hallelujah, hallelujah. Oh, why did you say that, bro? I didn't even think about that song till you said it. Now I got to get it queued up, man. Damn, how you going to do me like that? Yeah, nothing matters till we break 420. What's up, ED? Ed, I said ED, Ed, what's going on? Yusuf, Ed, Josue, $, Void, Steven, Anthony, Scott, Mayhar, Sean, Jonathan, Little John, Zuraj, Graham. Oh, Lucky Soldier, what's up, baby? Good morning. Good morning, Carson. How you living? Lito, what's up, man? Oh, good morning. What's up, Dr. Suede? I'm glad. I honestly didn't. I thought half of y'all were still going to be sleeping. I guess I'm the only one on this West Coast time, man. That's crazy. That's crazy. So, Chad, I hope you're into it. Let me see if I could get you any other news. So let's talk about it a little bit. Let me give you some updates. Again, I'd be watching Fed futures and the yield curve. Report comes out here in 7 minutes. So let's go over some things. Looks like July consumer price data, blowout jobs data is going to make this one tricky. Here's a quick look at what forecasters in the survey are expecting from the key line items. Consumer price index monthly change 0.2 versus 1.3 in June. CPI excluding food and energy is expected to go 0.5. CPI year over year 8.7 versus 9.1, and then 6.1 on core versus 5.9. These are the expectations. So let's see, what do we got? These are going to be the factors. These are the top 5 subcomponents to be looking at. So, again, a lot of people, right after this release comes out, we're going to do this here live. We'll see what people are talking about, and we're going to get the report. But simply, we'll watch gasoline, motor vehicle insurance, rent and shelter, used cars and trucks, utility piped gas services, and then this is just the remaining of everything else. But pretty much those 4 or 5 other categories are going to make up most of everything that we got here. So we'll see if forecasts for the monthly change in headline CPI range from 0.4 to unchanged. Gasoline prices fell steadily throughout the month, according to Omar Sharif at Inflation Insight. That should translate to a drag of about 0.4 of a percentage point on headlines. So the big question here today is how much will everything outweigh lower energy costs? With regard to the other major component of non-core food, the general consensus seems to be continued strength should be expected. Wow. So that's actually a little bit of a shift. It looks like some people are saying that food didn't move, and if you didn't hear that, literally, they're saying you could factor in about 0.4% of headline CPI could be attributed there to gasoline prices. So with regard to inflation, the two components to watch will be rent and vehicle prices. Consumer Price Index measures rent rose last month at the fastest pace since 1986, surprising many analysts. Housing costs more generally are the highest component of the index, which means that happens to have the front of the outsized importance in the overall direction. Vehicle prices, they've been a major driver of inflation throughout the pandemic, owing partly to the status of the poster child of the pandemic-related supply chain disruption. The now widely tracked Mayhem index of used vehicle prices fell in June and July, but of course, it doesn't map perfectly for the CPI. So here's commodity-related CPI components with real-time indicators, most notably a regression of gasoline prices, likewise airfare, apparel, bread, coffee, electricity, food, and milk. So this is where they're getting it. Implied gasoline contribution. Damn, so some people are saying 0.4, some are saying 1.4. Very interesting. This one's a little bit crazier of a chart to read, but it's a pretty picture. Why so early? Because you have the CPI coming out in 4 minutes. So I'm giving you guys the update right now. There's a lot of notes coming in. So again, everything I'm reading right now, none of it even means shit because once this report comes out, this is more or less what to be watching for. So we will see. Head of iShares Investment at America's BlackRock says service inflation will show strength in July and likely to still point to higher inflation, while headline is seen to be softening thanks to easing energy. BlackRock expects core inflation will remain above 5% to end the year and warrants shorter-dated inflation-linked bonds. If we get it, what's expected today, Fed policymakers are likely to just shrug off this slowdown in headline. If they don't, you can bet that there will be a wave of criticism. Ex-Treasury Secretary Lawrence Summers and Nobel laureate Paul Krugman, who have opposing views on inflation last year, were on the same page last week and insisting that slowdown in headline shouldn't be the basis for a Fed policy pivot. This will be the third to last CPI report before the midterm elections. And that likelihood within voters' views comes cemented on inflation. And inflation sticking around on the radar screen of bonds. That one's a little crazy. Oh, wait a minute. It's not out yet. 2 minutes. All right. So let's see. I'll have the numbers here in a second. Yeah, Chattadonia, like the video, but good morning. We have waited a long time for this. It is here, my friends. It is here. One of the most longest awaited CPIs. Do you know they say this is arguably the world's most popular or like important economic data ever? Again, it's very, very interesting. So, oh, Boomer showing some love, baby. Where is it? Horn. This is your final. Horn before CPI goes up or down. So this is your final 9.1% horn. So embrace it. Horn. Oh, they don't feel me. They don't feel me, Chad. I hope you're ready. All right, about 2 minutes. 2 minutes or 1 minute, 10 seconds. Oh, I don't know. Can we do it in the morning? We're not landing, Chad. Yeah, we're not landing. 1 minute. Oh, get ready. It's early, too. How do you feel? I'm very excited. So let's see Alan Ruskin at Deutsche Bank. In terms of reactions, the market will initially get more excited by downside core than an upside surprise. So let's see. 1 minute. Oh, yeah, it's here. So, again, you got a little bit of a pop. Take note coming into it. Futures were down 0.38 or were up 0.38. You got a couple of names up. Like we said, if you didn't watch the watch list, I take a big look at the bank stocks. I mean, some of you can trade this pre-market if you would like, but that is totally going to be up to you. Are you allowed to trade the pre-market? Like, can I get some of these? Are these even trading? Nah, they're not moving. They only let you do the after hours. About 15 seconds, Chattadonia. Here we go. Here we go. Ba-da-ba-ba-ba. Okay, Lord, bless it. Let's see what we got. Oh, that's my other alarm going off, just in case. Oh, Pop and lock. Hold on. Oh, man, Tesla just rocketed. Bonds are rocketed. I'm waiting for it. 8.9. Let's see. I don't know why I didn't have my easy one up. Yes, you had 8.5 year over year, and core went to 5.9 bullish. That's it. They both came down. Again, I'm not looking at the components just yet, but month over month did not increase. Excluding food and energy, it went up 0.3. Year over year, 8.5%. Expectation was 8.7. And then excluding food and energy, 5.9. Estimate was 6.1. That's actually wild. So it really, first glance, is very, very positive. So again, flat headline, and notably core also becomes in below expectations. So not literally, both of them came in below. Yeah, that's going to be gas there. Rally continues, my friends. We'll see. Let me get my pretty pictures and some of the points here. We're going to find out, again, what factors it was that move. It is still 8.5, 100%. But that is definitely, it coincides with a lot of the notion that things have changed a lot. Fed futures are probably going to get blown out, yeah. How much am I down on that one now? That one, again, Fed future odds. So I'm down $200 off of that move. It's actually not too bad. That's good because then that means we can make some money on the downside. But literally, Fed futures are probably going to chill out. I wonder what the yield curve is going to do. The yield curve already immediately 0.05 has chilled out. But finally, a suggestion that inflation may have peaked. A big move in the 2 years. 2-year bonds are moving down 17 basis points. Stock futures have already soared more than 1%. Again, core CPI gain lower than expected is probably one of the most bullish things right now. I'm shocked. I can't even believe it. So here, let me show you your new picture, man. This is why you guys got to believe. Like, literally, this is why you are getting some level of bullishness right now. Just take note. This is a drop. It's been so white. Why can't you see it? Oh, it's because it's black writing. Yeah, look at this. Oh, look at that, man. So you have your drop, and then even core is now edging down. So that's a lot different than what we expected from those pictures coming in. Again, this one is pretty bullish. We'll wait for the reaction because honestly, it's going to make one move here. It'll chill out for 10, 15 minutes, but we will see. I called it. I don't know. I think this was even a lot more bullish than I could have ever expected. Again, it's positive. It's very, very good. Headline came down, but core, that did not go up. I thought that thing was going to move up, but it did not. But again, it's very, very bullish here. So we're going to see, again, real average hourly earnings have decreased 3% year over year. July real average hourly earnings decreased 3.6 year over year. July consumer prices rose 0.3 versus previous month. July core prices rose 5.9, estimate 6.1. Energy prices fell 4.6% over the month as the index for gasoline and natural gas declined, while prices for electricity increased. So here's the broad takeaway from the mix of core inflation. Quote, the index for all items, less food and energy, rose 0.3 in July, a smaller increase than in April, May, or June. The indexes for shelter, medical, motor vehicle insurance, household furnishings and operations, new vehicles, and recreation were among those increased over the month. There were some indexes that declined in July, including those of airline, airfare, used cars and trucks, communication, and apparel. So pretty much, this is this is your smallest month-over-month change in about a quarter, to be honest with you. So banks are already rocking it up there. Watch some of the names that are kind of guttered because of earnings. And like we said, watch like NVIDIA and Intel and those chip makers. I said if there's going to be any bullishness, those will be good. But literally, NASDAQ futures have rocketed up over 1%. Remember, this was up only 0.38 just about 4 minutes ago. Now you're up 1.7. So we'll see where this gets its first little footing and bounce. Treasury curve inversion briefly exceeds 58. Oh, whoa. Hold on. Wait, down the 2 and the 10? So this is delayed. The yield curve is inverted more because I'm getting a different report there. Again, Fed futures. We already watched those move on the bonds. Hold on, I got a couple more updates for you. The 0.3 increase is lower than all but one of the 61 estimates in the Bloomberg survey. Asset managers were the only one to nail that one. So literally, this is so bullish in the sense that you remember how every economist missed the upside the last two times? Well, nobody expected core to go up like that or to go down like that pretty much. Not one. There's literally out of 61 estimates, one person thought core was going to stay at 5.9, or come down to 5.9, which is wild. Here's the skinny on rental inflation. Rent of primary residence rose 0.7 in July after posting a 0.8 increase in June. Owner's equivalent of rent residence was up 0.6 in July, following a 0.7. So literally real estate prices month over month only went up 0.1. For cars, new vehicles were up 0.6 in July after rising 0.7 in June. Used cars and trucks are down 0.4 in July after rising 1.6 in June. The 0% headline month-on-month figure also matches the lowest estimate in the Bloomberg survey. Just 4 of 63 forecasters got that right. Bro, this was so bullish, nobody expected it. In that sense. Not one. Literally, you probably have a total of 5 economists. 10% of economists expected it to drop like this. So that's amazing. Steepening snapback, the Treasury yield curve as the bond market rallies sharply. The 2-year major beneficiary of the CPI relief trade is down. This takes the 2-year curve back to 41 from the pre-CPI level around 48 basis points. Risk assets are loving this. S&P futures are spiking higher now, about 1.6. Bitcoin is up nearly 2, while the Bloomberg dollar index is down about 1%. Oh my gosh. The dollar's probably going to rocket off of that. I haven't checked yet, but that's what that report said. So here's a side-by-side of the report, the July month-over-month versus June. Both reports are dominated by energy, size of the box, but this time energy price decline brought them down to the number down to 0 on headline. So here it is. Last time energy, this was June. This is when it was very, very hot. But again, even rent and shelter was number 1. But now you cooled about 3-4% off of energy, motor, fuel, gasoline types. Again, food was actually the hottest on this report. Rent didn't really do much comparatively to last time. Food was kind of hot last time too, so it did cool down. And then literally it was just energy services. But airline fares, rent, travel, none of that really, it all really chilled out. Yeah, this is probably the most bullish report you could have gotten. Now I know why. I told you, man. Jen Psaki, you know what I'm saying, bro? You know, they're working hard, bro. I don't know. Like, the Corinne tried to let you know. She was telling you, she said, bro, listen, man. She said, we did a lot of hard work, and it's time that y'all recognize the hard work that the president has brought forth. That is why we are excited about 8.5 CPI. You know what I'm saying? We did it. We made it. Gadflies of the Fed, including Summers, as we mentioned before the Fed was released, will warn policymakers against relaxing their effort as core inflation increase of 5.9. We are way, way far off from any semblance of price stability. So a little bit of reality is starting to come in here. They said, recognize that 8.5% inflation. Oh, my gosh. So much hindsight bias is about to come up. Oh, no. What's about to come up is a lot of FOMO. That's it. I'm just saying. It's not even going to be hindsight bias. It's going to be like hindsight squeeze type of vibe, you know? We're going to see. I mean, again, I would still keep in mind there's going to be a 1 to 2 day reaction, but we will see what happens and how it plays out from here. But Ira Jersey, chief U.S. interest rate strategist at Bloomberg, he says better than expected core CPI print will be a strong positive for the Treasury market, particularly the long end. So the knee-jerk reaction is unsurprising. The strong steepening of the curve may not last, however, as the better than expected core still doesn't mean it will fall. In fact, although better than expected, the core may be stickier than the market seems to be anticipating. So a lot of people are already kind of putting in their warning. I've already literally, last 2 quotes are already said, be cautious. Here's initial reaction from Ellen Goske, G10 economist at PGIM Fixed Income. She says the weaker than expected CPI print suggests that the Fed could adopt a more cautious pace tightening going forward. So that's an extremely bullish comment. The White House will doubtless say that this report justifies what they declared after the June CPI. That was a backward looking and that inflation is coming down just as they had anticipated. So they're already even giving comments here on what the White House is expected to say. Back to 50 basis points. Tesla coming back up. Where is it? Dude, the yield curve is back at 40. That's crazy. So yield curve is almost half in by 50%. It was at 58. No, it was at 48. Excuse me. I'm tripping. But very, very big. So interest rates will stay higher for longer. Well, the problem with the bullish, there's a couple of things to be bullish about in general. One, this is the first sign of inflation kind of calming down. This is one of your biggest declines in month-over-month inflation in the last 3 months. So people are going to like that. That could be bullish in some ways. But then now the next level is this is moving Fed futures, and people are going to start trying to factor in how the Fed is going to go out. So it's either going to be people are going to talk about no raising rates, stopping, even cutting. But now that's going to be the next debate here. Unfortunately, you have one more CPI before Powell, but this is where I'm saying over the next couple of weeks now, this may give us what we want. There is a knee-jerk reaction, but, this was something positive more or less. Again, this could have been a little bit messier of a report, but right now it just came out straight across the board. It was just slowdowns in every area, which is something we could be proud about if you work at the White House. Jim Paulson, chief investment strategist at Luthold, he said, wow, finally, the anecdotal evidence that inflation was easing has finally showed up in a mainstream inflation report. The Fed is rapidly losing its case for further tightening, and this report reinforces for investors that either a new easing cycle has already begun or we're getting very close to one. Look at that plunge in 2 years, almost 17 basis points from being up about 1 basis point. Some will doubtless take heart that the Fed pivot narrative is intact on this report, but remember, we have another jobs report as well as another CPI to get to before the September meeting. It's not moving the needle much on market pricing for September. However, according to WIRP, 69 basis points of tightening is still priced in, which suggests that markets are leaning more towards a 75 basis point than 50 after the strong jobs report on Friday. Quote, this should snap the 4-day losing streak for the S&P. Art Hogan, chief strategist at B. Riley. What did that mean? Inflation could be coming faster. A recession, it depends. Does Powell cut rates or does Powell stop? That's the next question. But again, I think we could talk about this, but before we get ahead of ourselves, just keep in mind that this isn't going to, it just keeps alive the Fed pivot narrative. So nobody knows how the Fed is going to pivot, what's going to happen, but this report, it has fanned the flames and it's keeping alive that bullish pivot idea that has gotten people feeling a lot bullish. Pretty much, it's keeping alive the fact that Powell just might, again, because imagine now next month, if you get a negative print on CPI, well, then there you go. That could open up the door to a lot of stuff. So keep that in mind. One of the dangers is that the gains in equities that we're seeing will produce a relaxing in financial conditions that actually undermines the Fed's policy tightening. It will be interesting to see how Fed officials address this in the upcoming remarks. S&P is up more than 12% since mid-June, even before today's market rally, assuming we close higher. It will be a cautious thing to look at. Here's a good one. This one's a great one. Ready? Look at this. If you remove the energy wild card from the report, the headline month over month would have been 0.42. Assuming we continue at the constant month over month, CPI will be 8.4 at the year end. Project your own scenario. So look at, depending on, I don't know, am I allowed to mess with this? I don't think I can. But this is excluding energy. We still would have went up only 0.4, believe it or not, which isn't too bad. Micron just got a price target cut at UBS to 80 from 90. Energy declines drove CPI. So again, here is now your updated chart. I'm going to need to save this one. It's a long picture. It feels very long. So here's CPI. This is now how it looks. So core dropped a little bit, stayed elevated. As you see, it's probably one of the smaller blocks for energy. Still big. And then again, right here, man, services actually chilled out. So if anything, this was one of your just all across the boards, you actually got a real slowdown in a lot of categories. So we're up 1.75. We've shot up about 1.5% since the report came out, but we are not getting above this one, which is interesting. So here's another comment. Cooler CPI has understandably tempered the bond market's view of the Fed policy path. The rate hike needle for the Fed September meeting is leaning back towards 50 basis points rather than 75. Also note the moving target of terminal rate estimate in 2023 is back below 3.5 and down from 3.7. Further out, the market is still happy with around 60 basis points of rate cuts for the second half of the year. And then what else we got? Bond yields tumble. Let me get you this one. So here's just an update. I mean, this is what we're talking about with the yield curve already, but this is very bullish. Again, this is the yield curve from yesterday to today. This means short-term interest rates, those have came down as expectations are dropping. The 2.5, and this is the 7-year. Is this the 10-year? The 2.57s, 30-year. These ones didn't move too much, but this is very interesting. To say the least. Again, this is showing part of the bullish reaction just even in bonds, so that's what we're going to see. But nothing is still for certain yet. Although this is a good reaction, a lot of analysts are saying it, but even myself included, there's still a little bit, again, it's not dagger in the coffin yet, but today is very, very bullish so far. So Victoria Green, Chief Investment Officer at G Squared, quote, while this is to be celebrated, 8.5% inflation is still well above what the Fed wants to see. 50 to 75 basis points are still on the table for September, and more data will come in by that point. Again, to give you a recap, if you're just getting in here, inflation is decelerated more than forecast on gas price drop. Core CPI gain also comes in lower than expected. Rent inflation creep higher while used car prices fall. Stock futures soar. Treasuries rally, and gold rises. And it's crazy. It's crazy. This will be the first time the yield curve inversion meant nothing. I doubt it, but we'll find out. Who knows? Again, if it does come back to uninverted, that would be curve steepening. So depending on how the curve steepens, sometimes it's actually very bullish. So it's like a catch-22. The yield curve can warn things, but if it does really recover naturally, bonds and a lot of things chill out and recover, if it does it in the right way, it could be very bullish. 75 is only 17. I think it's going to move a little bit more, though, because, again, the actual Fed futures aren't moving too much, and some people are still kind of waiting. But that's the next question. Again, we've already read like 4 or 5 comments, and a lot of them are kind of implying just watch where those Fed futures go and kind of how this gets digested. Again, if I could give you anything, the thing you got to worry about right now, does anybody know the next thing to watch? Damn, it did drop to 16, though. But there is one thing you need to be watching right now. Again, obviously, we're going to get some more reports here. You're going to watch upgrades and downgrades in a couple of banks. But there is one thing you need to be watching now, like immediately today. It's the next thing we're looking for. And no, it's not data. It's actually not that crazy, believe it or not. Hallelujah, 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 hallelujah. The Fed speakers. So remember, we've been saying that, yeah. Fed speakers, they come in probably within an hour here, a little bit right after the bell. Yeah, we want to watch the reaction, but take note of the Fed speakers because how that now drives the bonds, the yield curve, and all these things that have just moved very violently at this report. Again, Fed futures just changed rapidly. Yield curve has declined a lot. Watch for the Fed to talk this up or down, and they are going to kind of give us the direction, but don't underestimate the bullish spirits of the market to kind of take over. So keep that in mind. Here's a chart of the year-over-year change in used cars and trucks according to BLS. Man, they're making me get you all these pictures, bro. See, so this is good, though. At least we're getting to go over all the CPI pretty pictures live. Usually I have to give you guys the recap, so hopefully you guys are getting to see this come in. So this is used car prices that they're talking about. Used cars and trucks, according to the BLS, price of used cars were up 6.6 in the year through July, which marks the smallest 12-month increase through June 2021 and the 41% increase through February 2022. So not too crazy, but again, they didn't come down too much, but it is still a big change that puts used car prices at a pretty big inflection point, more or less. And then shelter continues to be a growing contribution. It's year-over-year CPI. Here is a chart that's highlighting it, showing rent of primary residence, RPR, and owner's equivalent, OERR, which currently contributes to 1.5 of the 8.5. The index of these two components is now up 6% year over year. Interesting. Very interesting, actually. I don't believe it now. So this is the year. This is literally just real estate moving. This is the real estate and rent prices. Again, that still went up, but the thing was it didn't jump up by a lot this month. That's why you didn't really watch CPI go up in any areas. But ironically enough, the CPI of all of the rent numbers year over year are 5.9, and that's exactly what we got in that core today. So very interesting. Very, very interesting. To Michael's point, world interest rate probabilities are moving around a lot since we posted last update. Market is pricing for September Fed meeting now down to 59 basis points. So this is actually moving the needle for markets in a big way. So honestly, I think the analysts are a little behind that on the Fed futures. Matt Maley, chief strategist at Miller Talbach, quote, some people were starting to think we could get a 75-point hike in September or even a mid-meeting hike this week. This weaker than expected CPI takes that off the table. In fact, it might even cause some people to look for a pause from the Fed. Michael Pond, head of inflation market strategy at Barclays, he says this is a necessary print for the Fed, but it's not sufficient. We need to see a lot more. You could think about this print sort of like the weather. It's better today than it's been over the past few days, but it's still summer. There's a lot of humidity. S&P futures are now up 1.8 from being down or just up under 0.4 before the release. Despite the moderation in rent and shelter in terms of monthly increases from June to July, it's still rising on year over year. Last month, it clocked in 5.8. The good news is that it's still below the rate of average hourly earnings for production and non-supervisory employees, which was 6.2. But you can see from the chart that these tend to track each other over time. Wow, so this could be a big indicator, Chattadonia. That's actually crazy. That's actually crazy. Oh, man, we're going to talk about this one. Bro, this one's wild. So take a look here. Let's zoom in a little bit so you can see it. But essentially, this right here in blue, this is wages. And this right here is rental. So pretty much rent is up 5.9 and wages are up 6.3. So look at the trajectory. And then also, I mean, look at some of the downside and how things have played out. This might be kind of the CPI indicator that lets us know a little bit about the real employment tracking real estate more or less, or when do wages actually get clapped. Yeah, real wages did drop, and that is a good point. 100%. Think banks are the play for the day? Oh, yeah. 100%. I think banks and chip makers, I mean, some things are up more than others. Like, to be honest with you, I think you will get a big move on a lot of tech stocks as well, too. Anything with risk on, because now inflation's dropping, bond yields are surging. Anything with long duration really might be able to benefit very, very well off of this. So I do like Bank of America and JP Morgan as laggers, but it doesn't mean I would entirely shun tech stocks coming into this morning. I mean, the real question now is how long does the first rally last? When do we calm down, and then do we get that juice flowing in a little bit later here? But I'm not bearish anymore. I'm not as bearish. I mean, I think the bear is still going to live in me, and he might go hibernate. But assuming this doesn't turn into a 2-day bust and that the Fed doesn't try to talk this down and scare the shit out of everybody, I do take this as very bullish, though, because, again, this is like the reverse of what happened at the last two meetings. So I have a couple of notes to give you guys, but I'll share with you a little bit of my opinion right now. Simply put, if you compare this to what you had last meeting, you have the exact opposite on the bullish side. And what I mean by that is now out of 50 or 60 economists, only 10 of them forecasted anything remotely like this. Only 1 out of 60 economists expected core CPI to come down, to expect it to not go up to 6.0. So that's wild. And then the only other 4 or 5 of them expected headline to even come down to 8.5. So like literally even your best economist this year, Oscar Munoz, he was wrong on everything by a pretty wide margin. There was a lot of other people. Again, you still had every economist wrong. So that on the long end, that I take that as bearish because then that kind of shows the uncertainty. But in the short run, until we get the next CPI and everything else, this is bullish in the sense that it's just showing that a lot of people were not really expecting this to be this type of bullish. Again, if you've been here since the morning, we've gone over it. It's like, why are the numbers showing up like this? We got to see energy and oil and what's got affected, and then you're noticing houses didn't go up. Wages had a nice little increase. So it was very, very crazy to think. But, yeah, that's where I stand on it. So you guys have seen this chart. Here is the heat map that we go over. Here is the largest weighting of everything else. So this is what we could see was the hottest. And I save all these so I could compare them if we like. But literally on this CPI report this morning, eggs and photographic equipment had the most inflation. Literally anything with the most inflation, look how small their weighting is. So non-alcoholic beverages, they had almost 1% weighting. They did 2.3. But anything, even flour dropped. I mean, some food things are still up, but you can see it. Not really much went crazy. Dang, that's actually wild. So, like, anything that had a price increase all just has a way, way smaller weighting on the index. So here's what came down. So take a look at all the things that dropped. Literally gas, 5%, energy, motor fuel. Those all dropped 7%, and that's 15% of the index. So, again, I had that other one. Where is it? We could do a model of it, but essentially, depending on the energy impact and how you think it's going to move, I mean, that will determine where we go from here. Does that make sense? So pretty much energy is having a very big impact on the CPI at this point when you're watching those weightings and how they're playing out. Wait, where's the other one? That ain't it. There he is. I'm going to just save you too. Jerome is not your savior. Services, they are climbing, but definitely kind of chilled out a little bit. But yeah, energy down 3%. That's 9% of the weighting. Lodging, so travel even went, that's 1%. That dropped 2.7. Personal computers dropped 1.7, but they've literally been declining for the last quarter in a row, and then that's about it. Bro, very interesting. Very, very interesting. My goodness. So Bloomberg Commodity Index jumped after the release. It's now up 0.54. Jason Bloom, head of fixed income on alternatives at ETF Product Strategy. He says, good news for stocks and bonds, but watch for commodity prices in Q4 and beyond when the SPR release ends and the Ukrainian harvest goes missing. Damn, he said the Ukrainian harvest goes missing. No doubt CPI will begin to trend lower, but the 2% in 2024 depends largely on a flat to lower commodity price environment. Highly likely, in my opinion. Dennis Debauchery, founder of 22V Research, says the report obviously is very positive for markets on the day. Rates are lower, rate hike expectations are lower, and worries about too hot CPI have been reduced. We will still need to watch commodity markets for clues continue to drop in gasoline prices, and energy costs can help to continue to moderate. Victoria Green of G Squared. The index of gasoline prices slumped 7.7 last month, biggest decline since April 2020 when coronavirus lockdowns hampered demand for fuel, but prices are still up 44% in the past 12 months. Two-year yield is now down 14 basis points, 3.12. Michael Pond says that the report reinforces Barclays' view that the Fed is likely to slow the pace of rate hikes to 50 basis points at September meeting after the double dose of 75. If the numbers had to even come in as forecast, that would have increased the chances of 75. So for now, we feel pretty comfortable about our 50 basis point call. If the banks start calling for 50 basis points, just watch out. So here it is. This is core services excluding rent and shelter in yellow, and then rent and shelter going up. So it did kind of moderate. Again, that's why I'm saying it's still elevated, and it's just probably a break. You're probably going to watch this rear its ugly head in the next coming months. But if you can see this thing chilling out rather than kind of this, straight up trajectory, it's a little bit better than not. So, I mean, we'll see. Hallelujah. Angelo Manolatos, U.S. rate strategist at Bloomberg, he notes that core services, excluding rent of shelter, has yet to peak. The sector contributed to service price disinflation. If the pre-pandemic period is an area to keep an eye on, see if core services are pricing it in. The breadth of inflation, the July reading of 71% is saying 71% of the CPI basket is increasing in the market, more than 4% of analyzed basis for month over month. Some relief for the Fed after June's high is 74. So this is showing you literally this report, 71% of everything in the basket has increased, but last month it was 78% or 74.8, excuse me. So you had a 3% drop overall, if that makes any sense to you guys. Top of the morning. Morgan Stanley, Ellis Zentner, he says Fed officials are uniquely to see this report as a signal to deviate from their steep tightening. We foresee the end of this year. They say the report makes 50 basis points more likely, more than 75, but a lot will depend on August CPI release next month. Let's see. Ira Jersey says Fed Chair Powell's Jackson Hole speech could be the next major Fed event outside normal FOMC. Powell may note that the pace of price is slowing, but he has not yet shown a strong enough downtrend for the Fed to back off tightening monetary policy. For the front end, this probably means much more volatility, but we still think that the 2-year Treasury curve will sell off more as the market recesses. Yet again, the Fed's commitment to fight inflation, particularly the employment, remains so strong. Byers, Jersey, and Manolatos, our analysts show that the lower volatility read sticky components of core CPI have peaked in July, but that medium-term volatility sector continues to jump higher. If the low volatility cluster stabilize at this higher level, these combined trends may keep core CPI underpinned and the Fed hawkish. Hot dog. So they're just talking, again, this is just looking at some areas of the CPI have more volatility than not. So take a wild guess. What do you think high volatility means in purple? Just, again, high volatility items on the CPI report. So what they're saying is they want to see the low volatility items and the medium volatility items chill. Otherwise, core is still going to be a problem. Not rent, believe it or not. Rent is a big one, but it doesn't mean it's a high or low volatility. Yeah, energy. So high volatility, this purple chart, this should look like an oil chart to you, right? This looks exactly like crude oil, pop, drop, pop, and come down again. That's high volatility, has a big weighting, but now the other factors, those are more lower volatility. That's why people are worried about inflation, because 71% of every other industry is going up, and then they're not really items that have a lot of volatility, if that makes sense. So keep that in mind. And honestly, one thing to notice now, it's been about 30 minutes. Again, inflation, CPI has came down. It's been very, very bullish on a lot of the numbers. Yeah, CPI was good. We've gone over a lot already. But you'll notice you've popped up about 1.5%, but we stopped moving, and we have yet to even get past, is that 420? Is that 418? 418, 419. So very interesting in that sense. So last night, Fed futures were pricing in a 73 probability of a 75 basis point for September. They are now at 44. Overnight index swaps are pricing in 31 of a third 75 basis point rise, and they are no longer even convinced we will get 100 basis points in the next 2 meetings. So here's a chart of contribution from each broad category of consumer price, which adds up to 8.5 on the year. The few things to note. Let me get for you, my friends. Please hold. Do you think this is bearish? Pretty much not until August. I mean, I have to wait for the Fed and a couple of other things, but I do think there's a lot of positivity that came out of this. But that only opens up the window pretty much till next month. But the rally might be able to keep going. So this chart right here, the importance of this, energy inflation over the past year, and the importance of the downdraft in July. This is clearly the biggest category moving around. Again, that's literally right here. Shelter, food, and core inflation are high and possibly still rising. This is the kind of stuff that Fed officials may gravitate towards for arguing ongoing tightening. Used car and truck inflation is largely normalized, but there's still perhaps a way off to go in terms of further downside. Outside of used cars, you are not seeing much of a moderation in goods inflation yet, and that will be a big deal when it finally comes in. So we should keep in mind that the half a point hike in September is, compared with previous cycles, a large move. The Fed hadn't done that in 2 decades before the 50 basis point in May. And with half a point boost next month, the top of the Fed's target range would hit 3%, a level unseen since the start of 2008. It's hard to call today's here's a bear one. Hard to call today's CPI. Oh, no. This is a bullish. I read it wrong. Hard to call today's CPI report anything but dovish. The market reaction is rally, and financial assets is pretty obvious, and 50 basis point next month looks like more of a likely path. For the Fed, of course, there is still another payroll figure and inflation print to come, so nothing will be etched in stone. The market mood is certainly risk on. NASDAQ futures are up 2.3, while Bitcoin has risen 3.5 as of 8:58 New York time. Neil Duda, head of U.S. economic research at Renaissance, he has some words of warning. Quote, this data will fuel talk of a policy pivot, but for me, the issue really boils down to the labor market. Short-term inflation expectations and gasoline prices, this story in May and June. That's not the story now. Wage growth is running red hot, and absent a turnaround in productivity, this will ultimately fuel higher prices. Hot dog. The play is going to be tech stocks and banks. That will be it, and then depending on how you want to gamble about it, you go around. But Chad, we've been here already for about 30 minutes. Again, the bell rings here in about 30 more minutes, so I need you to like the video. I need you to say what's up, say good morning. Again, we've came over a lot of stuff. I should probably just open up all the pictures that I saved to kind of give you guys a recap here. But I'm going to go get me like a water or something, kind of stretch her out a little bit here. I'm going to give you some nice... Let's just give you some nice just inflation documents, okay? I feel like you guys like inflation documents. I'm going to give you my inflation data library. Is that okay? Can I share this with you? Do you have your Chad library card? I hope you can find some benefits of this. We'll give you a couple of points to look at. You know what I'm saying? You see, there you go. You can leave up all these up here. And then I'll turn Tesla into the SPY. But give me a second. We're going to give you some analysts and other people to listen to right now. I love you.
I have to stay on guard. I think that's really the most important thing. We're kind of having a mathematical recession, but this recession isn't going to be deep enough to loosen up the historically tight labor market. And as long as that's the case, you're going to still have inflation pressures.
James, do you also see a problem with potential wage price spirals, considering the fact that people are going to look for perhaps bigger incomes on the heels of a declining real income?
Lisa, I think the labor market is the story right now, and it is confusing, I think, for all market participants. We do have participation rates not back to pre-COVID levels. The productivity data, as mentioned, are poor. Wages are going higher and higher. And I think we've unsettled the labor market so such we really don't know what it looks like going forward in a post-COVID era. So for now, the employees, the wage earners have the upper hand. We are seeing continued pressure on small business. We are seeing difficult to fill indices at all-time highs, and we're seeing wage growth high. And you combine that with some of the other metrics, save the energy. This is still an inflation story. Yeah, better data at the margin is helpful. But we still have a price problem. We have an inflation problem, a regressive tax on all citizens. And the Federal Reserve, I think, is full on. I don't think this pivot or this notion of a pivot is going to bear out. And I think we stay at elevated Fed funds rate well into 2023 when I think we get the real recession.
James, just to push back, a lot of people would say you're so gloomy. Everyone on Wall Street is so gloomy, and yet you're seeing earnings that are hanging in there and actually expanding. You're seeing a jobs market that, yeah, it is going gangbusters, and that's a good thing. You're seeing an economy that's resilient. Why can you not be optimistic?
A couple things on that, and it's a fair point. Earnings were better, but what you see in earnings is you see price. You don't see units. And that's a big difference. You're not seeing a higher volume of goods going through. You're seeing the price level being accepted by markets. And that can exist for a time as long as the consumer balance sheet is healthy, which is turning at the margin worse. We're seeing savings rates drop. We're seeing credit expansion, credit balances increase. We're seeing charge-offs increase. So the point that I would make is if labor rolls over, which it may, if we have this demand destruction, we continue to see claims pick up, the consumer's not going to be quite as good a shape as I think markets believe.
Richard, what's your view?
So I think, Lisa, there's a couple of things. You mentioned earnings there. I think there's only two certainties that I would argue we have as we go through the remainder of this year into early next year. Number one is the Fed's likely to be tightening. Maybe today you could argue not as certain as maybe you were a month ago, but that's still pretty certain the Fed's going to be tightening. And number two, profits are going to be decelerating. I think that's the big story. Earnings growth in the S&P is still about 25% on a trailing four-quarter gap basis. We're actually predicting we're going to see a profits recession first half next year. I think the real weakness in the economy comes next year. I don't think we're there right now. And so I think to some extent there's a little bit of a head fake going on right now where people thinking that everything's calming down, everything's fine, we can go back and speculate in the markets. I'm not quite sure it's such an easy story as that.
Does today move the needle at all, Richard, for you? Do you change any of your allocations or your views based on the print we just got?
No, I don't think so. Look, Lisa, the Fed is still historically behind inflation. If you look at the real Fed funds rate, which throughout my entire 40-year career, everybody said that was the gauge that you used to tell if the Fed was tight or easy. The real Fed funds rate right now is about minus 6%. That is historically low. The only time it was lower, more negative, was in the last several months. But we're still in no man's land for negative real Fed funds rate. I find it very hard to argue that the Fed is actually an inflation fighter with an historically negative real Fed funds rate.
James, final word?
Well, it's not an uninvestable market, Lisa. As you know, the dividend story has played out beautifully for the year. The payers and the growers, the more defensive equity names have performed brilliantly versus the non-payers or the aspirational growth. And the bond market, from an income perspective, is as generous as it's been in a while, despite the rally in July. We have good corporate bond spreads. We have triple B type names, quality companies, free cash flow traded in 4.5% yields. And the muni bond market has caught a bid in July. So the bond market seems to have found its footing. And there are certain pockets of the equity market that are absolutely investable, particularly for income-oriented people.
Richard Bernstein, James Camp, both of you are sticking with us. Right now we want to take a look at some of the stocks on the move, and they are very much on the move with the NASDAQ strong, more than 2% rally. Abigail Doolittle here with more. Abby.
Hey, Lisa. Well, yes, we do have stocks very much on the move. On that good news is good news CPI report. This, of course, means that yields have come in. That's helping out big tech, launching the markets higher. We have the likes of Apple up 1.5%. Banks rallying too, though, as the yield curves start to steepen a little bit. JP Morgan Chase up 1.4%. Tesla has the technology component, and it also has the fact that Elon Musk has sold $6.9 billion worth of Tesla in preparation for the possibility that he's forced to buy Twitter. And then finally, this is probably the most interesting one in a way, Lisa. Coinbase up 1.6% in the pre-market, down sharply. This, of course, after they disappointed with their user forecasts and revenues. But Bitcoin is now higher on this better than expected CPI report. That seems to be helping Coinbase at this point. So this morning, truly a risk on.
Abby, thank you so much. Coming up, slower inflation providing the administration with some relief ahead of midterms.
This is the fastest
decline
in gas prices in over a decade.
They're playing it. Look at
$1
bro. They're playing the quote.
56
Wait,
days.
tell us about the hard work.
Conversation is still ahead as we
I thought they were going to tell us about the hard work, man. I thought they were going to tell us about, I said, bro, that was it. We should have known. We should have known, man. We should have known. So, oh yeah, Elon sold $6 billion in stock, but again, the market's kind of liked it as it positioned him for the Twitter stuff, but we've already gone through a lot. I don't know who's just getting here. Good morning. I hope you're ready. We did start a little earlier today, like way earlier. Like my body, I was like a couple of minutes ago, I almost pooped in my seat. Anyway, I won't tell you about that. But anyways, what I'm trying to say is we're glad you're here. There is a lot. If you didn't see it, very bullish reaction. You have people arguing it out right now, but inflation came down. It dropped below on every metric. Again, if I could say anything about this meeting, it was just like the last two, but on the reverse. Out of 60 economists, less than 10% of them even forecasted inflation dropping or the CPI coming down like this. Literally, only one person thought core was going to go up only 5.9, and then only 5 other people thought that the headline would come down this low to 8.5. So pretty crazy. Oscar Munoz was far off the mark, actually. Again, no, even Oscar was wrong. Again, that's the funny part about this one is that, like we're saying, a majority of everybody was still wrong, and to me, that kind of screams of volatility, but we'll see. Yes, there is Fed speakers, and that's the next thing. We can't break past 420 now on the SPY, and that's what I'd be looking here at the cash open once we get that, but we're going to find out. So let me give you a couple more reports. The 2-year yield is steadied above 3.1. No, where was it? All right. So what's behind the surprising slowdown in July? New model looks at inflation in 4 categories: supply, demand, and energy prices. So let's get rid of these other pictures so you have a full map. But pretty much lower energy costs and slightly tighter Fed stance were the main drivers of the deceleration at 8.5. At the same time, sizzling demand paired with supply constraints continue to put upward pressure on inflation. With these last two factors harder to contain, the Fed has had a tough task ahead of it and will likely need to be more hawkish than currently expected. Prices for utility natural gas services slid for the first time since January, helping bring the energy index down. They're still up more than 30% a year ago. Tech mega caps and battered semiconductors climbed ahead of the bell. Futures are extending. Even Coinbase is going up. Evan Thoreau, global macro strategist at Manulife Investment, he said he'll be watching break-evens, and the challenge here will be for markets not to celebrate too much and declare victory. Quote, break-evens tend to be well correlated to market sentiment, and the price of crude more specifically. A weaker dollar and risk-on tone would support the price of oil. And bring things away from the target. That's not something that markets or the Fed ultimately want. The rally that we're seeing in equities is bound to give heart to those who say mid-June low in September. Probably not coincidentally, one day after the Fed's policy will have proved to have been the trough of the bear market. The other camp says once the Fed tightening drives the economy in a recession, there will be a whole nother chapter to come in the bear market. Again, this is probably even going to just wide open the range, man. That's crazy. Here is a chart of index levels of the two big reopening categories. Please hold. Again, bro, you got charts for days today, man. You got charts for days. This is a reopening category, hotel rates and airfares. So these have been moving around a lot from month over month, and therefore they've not been easy to handicap. They both contributed to softer core inflation for a second straight month in July, following outsized increases this year as a whole. It'll be important to keep an eye on both of these. So literally, which one's which? How do I make a zoom? I can't see it. I think yellow is lodging, and then blue is airline prices. So again, that's a pretty steep drop if you look at it. These drops right here are both big factors that have went down. Those went down like 4 or 5%, or 2% at least. So looking ahead at the August release now, it may continue to get a little bit better in energy with the average gasoline price in August already down 7 than July. If gasoline remained here, the gasoline contribution would fall 1.6 to 1.7 from the linear regression model. So pretty much you could, if gas stays at this same price coming into next month, you could factor in a pretty much almost a 1.2% drop in CPI if gas could stay lower pretty much at these prices, believe it or not. Even barbershop inflation came down quite a bit. This is interesting because it's such a labor-intensive industry, so economists sometimes look at it as a good read on overall cyclical state of economy. Another remarkable aspect of the chart is just how high wage growth is in this sector relative to price inflation. So let me get you that chart. You guys want the barber index? So here it is. They're even saying barber inflation has dropped a lot. Your price of your haircut at the peak of this year was 30% higher or 20% higher than where it was today. So that's good. Have you been getting discounts at the barber shop? I hope you have. A report like this brings to mind massive credited to the late Leon Britton, a UK politician. Quote, remember that 1 month does not make a trend, but also remember that every trend starts with 1 month. Ooh, okay. The 2-year rallied above 3.1 and back to where it was before the jobs report last week. Clearly, there are limits of a more extended relief rally in the front end. With Jackson Hole at the end of August, the other jobs report, CPI print looming before next month's Fed meeting, it's safe to think that the days of big intraday swings are not behind us just yet. Peter Brookvar, chief investment at Bleakley, quote, we know there's another CPI figure along with the jobs number before the Fed meets again. I'll say this again. They will be going 50 basis points in September, and I doubt much past that. One more quick one for the labor-intensive theme. Wage growth in hospitality, largely restaurants, has also been moderating, but we haven't really started seeing that moderation show up in food away from home. CPI category, this will be another interesting one to watch. So here's another one. So now this is comparing, what's it called? Your leisure and hospitality with eating outside pretty much. So although Airfare and other things have came down. The price of eating out is the most expensive it's been since 1990 on a CPI relative basis, which is interesting. Very, very interesting. Bucking the trend for lower prices, the electricity index rose for the fifth straight months. Americans' power bills are at the highest level in at least 20 years after a 15% increase year on year. So that makes it a little bit more interesting. So gas price came down, but your electricity is up. Should I still buy an EV? I don't know. Seema Shah, chief strategist at Principal Global Investors, she doesn't think U.S. equities have hit their bottom. This is textbook bear market rally. Technicals and sentiment drove the upturn, and momentum is carrying it for now. Markets have become overly optimistic about the Fed outlook and even the economy. But as we get into quarter four, earnings growth will show clear signs of struggles, and inflation will be easing slowly, giving markets an important reminder to further rate hikes are absolutely necessary. Ba-da-ba-ba-bop. Oh, yeah, like the video, man. Like the video if you're voting. What time is it? 6:20? Oh, my gosh, bro. I haven't even given you the rest of the updates. So we got about, 6 minutes here? I think it's time we move on from inflation. Again, it did good. There's a lot of other things, so let's give you the rundown. U.S. headline inflation slowed more than expected at 8.5 last month from 9.1 as gasoline prices declined. The core print, which Jerome Powell has indicated is more illuminating, stayed at 5.9 on a monthly basis. Both headline and core prices came in less than forecast. Elon Musk sold $6.9 billion of Tesla shares, saying he needs cash in case he's forced to buy Twitter. And if some equity partners don't come through, he has offloaded $32 billion of Tesla stock in the past 10 months. Musk said he will start buying Tesla stock again if the Twitter deal dies. Twitter's legal effort to force him to consummate the deal is set for October. Futures and treasuries jumped on better than expected inflation. Stocks in Europe had been steady while those in Asia fell, while chip makers in the U.S. peers followed their peers lower. The dollar dropped against all G10 peers and oil declined. Donald Trump will be questioned today by New York's Attorney General, who's probing potentially fraudulent asset valuations by his company. Trump posted that he and his company are being attacked by all sides. The deposition, delayed a month because of the death of his ex-wife, comes in days after his Mar-a-Lago residence was searched by federal agents investigating whether he took classified documents. Micron will slow hiring but has no plans to slash headcount. Person familiar said. SoftBank, they expect to post a gain of more than $34 billion from selling down their stake in NVIDIA and Alibaba. Or Alibaba, not NVIDIA. Honhai's profit beat on demand for cloud products offset sluggish smartphone sales. Bank of America hired Eric Cohen from Millennium Management to lead equity sales and trading outside the U.S. Fox missed narrowly on profit and revenue. After the close, Disney may announce almost 10 million new streaming subscribers. Coinbase dropped pre-market after reporting a record $1.1 billion loss, heading for a 16% slump in 2 sessions. It has also missed on revenue and trading volume. The Curve Finance Exchange has a security incident, asking clients to revoke contracts and suggesting hackers stole about 500,000. Celsius creditors plan to probe the conduct of insiders, including CEO Alex Mashinsky. Russia is getting ready to resume flows through a pipeline to Central Europe after refineries in Hungary and Slovakia stepped in to resolve a problem over payment in transit. A couple of companies may sell fresh, high-yet grade bonds today, $24 billion worth. The Rhine River in Germany is dried up. 10 a.m. July wholesale inventories, 10:30 EIA U.S. inventories for oil. 11 a.m. Fed Evans, 11:30 $30 billion of 119-day CMBSs. 1 p.m. $35 billion of 10-year notes. 2 p.m. July budget statement, and 2 p.m. Fed Kashkari speaks. You got Disney and Bubble earnings today. The curve has chilled out. People are debating what Donald Trump's raid means. Trump-backed Tim Michels won the Republican primary for Wisconsin governor and will face Democratic Governor Troy Evers. Wisconsin Lieutenant Governor Mandela Barnes won the Democratic Party to take on Republican incumbent Ron Johnson. James Bullard, a voter member of the FOMC, said the Fed will be proposed to hold rates higher for longer should inflation continue to support the downside or the upside. Chinese consumer inflation picked up to 2.7, fell at the fastest pace in 2 years. China said it concluded military drills around Taiwan, but pledged to continue regularly patrol the area near the island. U.S. crude inventories climbed for a second week. EIA numbers will confirm that today. COVID caused fresh problems in China. The country locked down urban areas of Guxi, home to massive copper smelting with refiners. Oil fell on the expected resumption of flows from Russia to Europe. Workers at Shell's Prelude floating LNG extended a strike. Bank of America will start fresh talks with investors Monday to sell parts of a $15 deal to fund the buyout of Citrix. Kohlberg will buy 50% of USIC from Partners Group, valuing it at 4.1. Sam Zell SPAC will shut down September 19th and return cash to investors. Wendy's slid pre-market after restaurant margins and U.S. comp sales missed. Full-year guidance beat. Unity fell after guidance missed, but Piper Sandler said he's increasingly, analysts said they're increasingly confident on the company's expansion beyond gaming. Carlyle's Kwasong Lee asked for $300 million over 5 years, but was rebuffed. Nikolai named Michael Loscheller as CEO to replace Mark Russell. Roblox rebound in July was a relative bright spot after second quarter miss. Morgan Stanley said with KeyBank that they praised the report as a step in the right direction, but shares tumbled pre-market. And Europe, EON dropped with record energy prices. And China's planning to boost it. Robart arms are replacing shelf stockers in Japan. A bunch of flight cancellations. And on this day in history, the Louvre Museum opened in Paris in 1793. That's the quick version of today's news, ladies and gentlemen. So we got a couple of plays. Chad, I'm going to want to hear from you for a little bit. But we started early. We got our CPI. I hope you're ready, Chadadonia. A lot to digest if you don't have the gist of it all. It is looking bullish until the Fed speaks and until everybody starts debating the very far, far out future. So, ladies and gentlemen, boys and girls, here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, ladies and gentlemen. So before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to the people who have sacrificed more than most of us ever have and ever will, and that is the veterans of the United States of America, baby. So on behalf of the Cult, the people here, the people not here, we just want to give a huge special shout out all the veterans, active servicemen, past servicemen, anybody who has served this country. God bless you and thank you for doing what you have done. And shout out to the police officers, the firefighters, the doctors, the nurses, the teachers, all the other public servants out there as well too, baby. God bless you and thank you for your support. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Senators! Oh, man. Oh, it's game time, baby. Oh, no. Let's go. Oh, good morning, Chadadonia. Oh, yes, the Jets have been sent. I hope you're ready. Again, I got a couple of plays that I'm going to be looking at. We're going to have a lot of activity. Hopefully you watched the watch list yesterday, because then you kind of know where we at with the bullishness, man. We talked about it a little bit, but there's a couple of plays, so I'll share with you mine, Chad. JP Morgan, Bank of America, XLF, Coin, Roblox, and then XLV, and then now Tesla, NVIDIA, Micron, and TSM. That's literally all I'm going to be watching. I think we'll get a lot of other plays there in the meantime. But again, right now, initial reaction is bullish. It could flip by the end of the day, but this was a better report than literally 90% of economists were even expecting. So keep that in mind. But Chad, let's go. We got about 2 minutes. Drop me your first play. Let's go. Come on. Let's go. Let's get it. Let's get it. Like the video. And good morning. I hope you're blessed. But let's go. What's the first play of the day? We have to rush through the news and everything else. Tell me what you're looking for. Tell me what you're searching for. AMD, Meta, SPY calls, Tesla, NVIDIA puts, NEO, TTD puts, Roblox, Riot and Mara, TQQ Banks, NVIDIA, AMD, JP Morgan, NVIDIA calls, Sega, Roblox, Disney, ACHF. I think I might have read that wrong. NVIDIA, Rivian, XLF, Unity, SPY, WBD, JP Morgan, Megal, Labu calls, Microsoft, JP Morgan, Unity calls, Plug, Baba puts, Baba calls, AMD calls, Law on the Dow, Amazon call, Airbnb, TNA, Disney, Twitter puts, and UNG. Ladies and gentlemen, there's 1 minute left. So let's get it. All right. I think everyone's feeling pretty bullish. Would you guys say you're bullish or bearish? Please vote. Oh, wow. The chat is 72% green off of 3,000 votes. Wow. Wow, wow, wee wah, baby. Thank you for streaming early. It's my honor, man. I'm telling you. This was a very long-awaited report. I'm very surprised it came in this good, but again, you know, we should probably do this for next month, but just keep that in mind. We still have another month coming in, so I hope you guys are doing good with that. Let's have some fun here. You got about 30 seconds. Call out any plays. We will call out any news, and then we will go from there. I'm excited. So, yeah, let's see now. I would watch the banks. Let me know if the bank stocks open. Again, JP Morgan and Bank of America, those are the ones that are lagging the most. So just keep that in mind and then watch which industries outpace. Round 1. Fight. Damn, Tesla's already up 5 again. Tesla, Elon news, very, very big. Very, very big. Oh, bank plays are already up 133%. Oh, little scammers. Little scammers. I'm a little scammer, short and stout. Here is my market maker. Here is my puts. When it gets all IV'd, they'll tap out. Buy the dip and flush it out. I don't know. It's a good song. I don't know. TLT, again, we're coming in negative. Yeah, they're already open. I'm looking at Bank of America. I'm going to check JP Morgan real quick. JP Morgan's a little bit... Actually, JP Morgan has way more premium than Bank of America. So Bank of America is the cheaper bank calls. Did they film me? No, they don't film me. I don't want to pay that much. Okay, I paid that much. Yeah, I paid that much. All right, I made a play. I went with Bank of America already. I kept it small, though. Again, I think with the fact that some things can change, it might be good to keep it small, but there's premium. Bank stocks already have 100%. Let's see. So SPY's actually coming down again. We have not broken past 420. NASDAQ's up 2.2, SPY 1.6, and Dow 1.3. So don't trade it. Not a recommendation. There is a lot of premium. Fleet Corp to appeal ruling in case with FTC. That's news right now. FLT, Fleet Corp, some news. I don't know if they're halted, but I grabbed the next week Bank of America. I kept them small. I spent less than 20 cents a contract. I spent about $45 total for 3 of them. So be careful. Not a recommendation. You will lose money. Again, I'm keeping that one small for now. Okay, where's JP Morgan? Check Tesla again. Chip makers next, but we are selling off initially. Like AMD's now only up 2%. Remember, Micron and NVIDIA, if you want to make a play on any of those, they have earnings down the line. And your Unity play is still up. I don't know if you guys noticed that. Unity play is holding up very, very good. Lyft just broke. Uber, yeah, they're up 5%. Airbnb's down. Roblox is only down 5%. Honestly, I'm surprised. Again, Roblox chain's not open. Remember, there was, even though I didn't really like Roblox's report, Morgan Stanley and the other guy, they were very bullish on it. Yeah, Roblox's option chain is not open yet. Honestly, when that opens, there it is. There's gonna be, honestly, it could go crazy from here, bro. A bunch of options just hit on Roblo now. It literally just opened up. I don't know. Maybe that will be bullish. It's hard to say. Kind of expensive. Kind of expensive. Just open BBBY7. Yeah, the volume's coming in on that. Micron off the bottom. Again, I haven't gone with the chip makers just yet. SPY dropping. No, those premiums are high. BA, Caesars up 8. A lot of the travel stocks are doing good. Again, FLT, they had news. Roblo's actually going. Again, if Roblo wakes up, that could be extremely bullish right there. If that turns in from negative to positive on that. Geez, SPY calls are up to 300%. Roblo's doing good. I might even want to go with Roblo instead. Do we buy now for the long term? I mean, not when it's up this much. We could wait a little bit, but again, this could go beyond a one-day reaction, and we have yet to even hear from the Fed speakers. So that's going to be the next level. Google, they're talking to city leaders in 5 U.S. states about fiber. Remember, there was like even a lawsuit news on Google yesterday we heard, but no effect. Again, everything is kind of doing its own thing. AMD selling off a little bit. Chip makers haven't came up. Bank of America is just staying pinned right there. I got Bank of America calls. JP Morgan's trying to climb up there. Again, if Roblox goes positive, red to green, that could turn into one of those BS continuations. SPY's coming down. I'm looking at Roblox debit spreads or go with chip makers. I don't know. Coinbase is green? Are you kidding me? Oh my gosh, that's disgusting. Yeah, Coinbase is green. That's actually wild. DC sees a strengthening labor market. White House is making statements, it looks like, on the inflation. It looks like they're excited. Carvana's on the high. That's ripping it there a couple of times. Yeah, bro, Uber is insane right now. Again, Uber up 5%, even Lyft carrying on. Remember Dash. Look how DoorDash is already up. DoorDash and then PayPal, those were some of the companies that reported those. Yeah, Disney. Remember, Disney has earnings, so you could keep that in mind too. It says they're down, or they're still up, even though it's literally all red candles. Ugh. All the premiums are juiced on that. Netflix up 3.5. Oh, is Netflix above 240? Yang is way up. Netflix 237. That's good. Again, we've slipped a little bit from the high. The highest we were was pre-market, believe it or not. Again, bullish CPI. This is the biggest month-over-month decrease in CPI in the last couple of quarters. So, bullish on that front. Bonds are starting to go up now. So bonds actually have a long way to go that could affect the market. Let's see. Netflix is going up. Let's see how we gonna do this. That's 120. That's still pretty expensive for what? 80 for 200? Honestly, I like the Roblo, but I don't. Russell's red. Airlines running that. Again, airline fares actually dropped too, so that could be positive. Netflix is going up. I think I'll just take a Netflix, call it a day. Can you shout out Trenton? What's up, baby? How you living, Trenton? I hope you're having a wonderful, beautiful, glorious, magnificent day. Amen. Amen. Oh, I won't have any buying power. What the hell? Oh, it's because of SPY put. They clapping me. Let's see, 245. Or did I try to do 10? No, they're clapping me on the other. That fucking 6K on the other one. Uzi Vert. Maybe if we go 1. Open door. Carvana up 14. Banks are moving. I like the Netflix. I wanted to go with the debit spread, but I might go. I mean, honestly, that might benefit me. CPI was good, but not great. Depends how you look at it. DC, economic advisor, he says we need to help bring process down to sustain progress. Again, Brian DC, economic advisor, saying a lot. Fed is in 20. He says we're well on our way. That economy is better for working people, and they see labor market strength continuing. Roblo has flipped. Netflix has flipped. And banks are actually the only thing running right now. So, again, that's kind of the first play we talked about. And we did make the Bank of America, but honestly, they're not really moving right now. They're only up 1%. And then you have some winners in travel and a couple of other things. So let's check our indexes right now. Again, it's only been a sell-off since it came out here. Oh, yeah, JP Morgan at 118. Big money taking profit. So everything's green. Energy is only up 0.10. Utilities 0.35. Healthcare 0.67. So literally all the defensive names are on the low. Consumer discretionaries are leading. Materials, communications, and then financials. Netflix, so much premium. Lapla. How can we have this much bullishness with still inverted yield curve? That happened. I mean, the yield curve, I've seen way more bullish markets with the inverted yield curve, believe it or not. But the thing is, we read so many analyst comments. I hope you were here in the morning. This is bullish for right now, and this is bullish till the next meeting. But a lot of people, I mean, I was actually pretty impressed. A lot of analysts are bringing up, there's nothing to be excited about with 8.5 CPI. All this is, though, is the trend. Again, that quote, 1 month does not make a trend, but know that every trend started with 1 month, right? So this is a good sign. It's great in the short term and what it means, but it doesn't really, it doesn't answer a lot of the other difficult questions that we may have. Airbnb. EWZ. Okay, the Bank of Americas are bro. Banks are actually really killing it. And then the VWAP is just jacked up on the day. We're chilling at 417. So literally, the thing about the upside resistance that we had yesterday, it is literally now becoming it's kind of becoming our support right there. Meta pumping. I'd watch banks because banks are not the leader right now, but even in this drop, they have came up substantially. Yeah, like discretionaries went down. The materials are actually doing good, but materials and financials, those are the ones going nuts. Those are the ones that can really, really move. But watch out, because then if they flip-flop, banks will come down. Everything else will recover. Materials are hitting a new high right now. Real cut at Bank of America. Underperform. CF says the number of fertilizer plants in Europe is substantial. That's related to the fertilizer plays. NVIDIA giving up gains. Uh-oh. Baba on the move up. Check Roblox and Coin. Again, any other earnings one. DE. Deer. Coinbase is coming up. I don't know how. Roblo is slipped. Tesla's still at the bottom, but SPY's starting to bounce. So now the question is, do the banks go with it, or do we see a different effect happen? Well, we're going to make you pay 100% out here, bro. Let's see. That one's decent, but it's still small. All the cybersecurity plays on fire. TTD. Sorry, I'm seeing. I don't know. I like the Netflix play at 240, but they're all just like they're expensive, but still a little cheap at the same time. And then again, we still have our uncertainty, but I would just wait. I'd say wait till the bonds match up with where they were pre-market. That'll say something, and then we have Fed Evans here in a little bit. Fed futures 50 basis point in September, 25 in November. Ay, ay, ay. All right, I took one of the Netflixes. I'm super late on this one. Again, I've been watching Netflix for the longest time, but I said we'll take it. And it's already up a lot, so that's why. This play is a little bit more YOLO-y than not, I would say. But at least these are they're further out the money, and they're a little bit cheaper. AAL travel is killing it again. Like even Uber and everything else is going absolutely nuts as well. So keep that in mind. AMD bounce, but I don't trade this. Not a recommendation. You will lose money. I went August 19th. So next week, one extra week of time. If you were watching me do the debit spreads again, I think my margin from the isn't allowing me some of those Fed future plays and whatnot. But if I was looking at weeklies, I went for August 19th instead. I spent less than $100, kept it pretty small, but we'll find out. Yeah, then exactly. Disney and Netflix, it should give us some. And technically, even though Netflix is jacked up right now, the premiums are cheaper than Disney. So Disney, you're still paying 40% on today and then another 100% from the last week. So, but I do like it. Again, and 240 is a very big level for Netflix. If the market takes this bullishness, we will see. But literally, you're now back up to open. We opened up, sold off for about 10, 15 minutes, hit that 417, that resistance, it became support. And then we bounced off of it, and now we are moving up. And tech is really just leading the way, more so consumer discretionary stocks. Made it all back from Twitter, baby. There you go. GG. GG. I think Baba may run next. Stagflation initiated. Intuit MailChimp CEO Ben Chestnut to step down. That news is coming out right now. Oh, come on, Netflix. Netflix, Sony. And where are the bank stocks? Again, those are really, really... Dude, banks keep going. Bank of America, JP Morgan, like we said, we were saying this from the watch list. These ones have the most to run. Honestly, they might be able to go a little bit more. I would wait for if there's a red candle and the market's still green, I wouldn't be opposed to double dipping on the banks, but we just need to make sure it chills. But the Bank of America plays went up 30% now. We kept those small. UNG back to green. TLT just gassing straight up. The laggers, and like we said on the watch list yesterday, just bank stocks are like a pseudo consumer stock, and that report was very, very good for anything. Again, imagine the jobs report and then now a lower CPI. It's like exactly what the banks needed. We're waiting on Fed Evans and Fed Dolly, I believe, today, or is it Bostic? I don't know. Feels like this is toppy. Well, we'll find out. Let's see if we get above 420. Again, we have not gone higher than where we hit pre-market. It was about 419 and some change. So this is a big key. Again, even on the market, 420. If we go to 420, we're going to 423 to 428, and then 430 is the next stop over there. So we will see. Cheap play on Hellbiz. So how are they holding up? If the meme stocks, just see if they rally, because like I said, they could kind of be part of the hedge. Otherwise, why? I mean, YOLO on tech stocks instead of a meme stock until you see the meme stocks kind of come back to life and kind of go like they have a hedge. You know what I'm saying? Otherwise, I would just YOLO on a tech stock more or less. This is risk on. That's it. As long as the Fed people don't don't demolish this, and even if the bullish spirits could ignore any reality that inflation is still jacked up, this could open up a window at least for the next couple of weeks. So maybe a little less, but what I'm saying is, I would watch the meme stocks, because if they catch the bid like they caught at the beginning of this week, that will be bullish. But if not, I would just YOLO it on on Netflix and anything else like that, more or less, because that's the type of move that we're getting. Like Uber is up 6%, Amazon up 3-4. They're insane. Nvidia calls cheap. I'm a big fan of that. When's their earnings? Low key, I would maybe look at September for Nvidia. Yep, I'm down with it. I took it. Surprisingly, that contract was down a little bit, but I just went with the Nvidia, and I got it cheaper than the day before, which is wild, actually. Pretty much Nvidia already had a premium crush, believe it or not. Google on the high. Watch out. Remember, they just announced fiber news earlier today. See how that plays up. You have to go all the way to earning? Really? Oh, no way. You mean to tell me that earnings release they had? Or I thought they were giving the guidance. I didn't know. They didn't push up their earnings, did they? No, August 24th. Oh, you scared me, bro. I said, what? Oh, you just destroyed my whole thesis. I was like, no. No, it's August 24th for now. Maybe I'm wrong. If it does change, that will be notable information to have. But don't trade it. Not a recommendation. You will lose money. I got a September Nvidia. The ones closer to the money are jacked up. I went a little further out, but I didn't go too crazy. Do you even hear yourself? You hope you people look past myself. You hope people look past inflation. I don't know if I can hear my I forgot what I said that made that comment that you gave to me, but point is, we're just living this moment by moment. And what I mean by that, I think it was a great quote. If you really want to understand today, regardless of what data came out and just how to view it in the market and whatever happens, it's very simple. 1 month does not make a trend, but every trend starts with 1 month. And that is what I really think the attitude the market is taking coming into this. And that's kind of, I think, what's going to explain it until we hear from the Fed and everything else, and then find out what happens from there. I grabbed a Nvidia. I spent about $80 for the Nvidia. Again, a September call. I made sure it had time, earnings, and I made sure pretty much I paid the same price for Nvidia plays as they were going for yesterday. With a 2.5% gain, that's better than not, especially when every other call type play is super jacked right now. Yeah, and we're coming back down to VWAP. It looks like the market's kind of getting its footing from the opening. Bro, even Airbnb dumping, Tesla on the low, Expedia, Amazon as well too. Tesla's giving up about 3% now, and Amazon, they were holding 3.5%, but they're selling off. Yeah, Tesla's getting hit. Everything getting hit. Why not AMD? I could, but that's just at this. I only spent $80, so I'm going little by little until I'd go more. I mean, the simple reason why I wouldn't grab more AMD right now would simply be because it costs more money. So it's like if I could set up and then we let a little of this volatility. I mean, it's only been about 20 minutes. We could keep our cash available, do stuff, but make sure we get exposure. And no matter what happens from here, we'll go from there. Yeah, we were below 420. We didn't even get up to 420. We've been getting up to like 419 and then selling off. So we will see. I'd watch 417 though, because yesterday and the last couple of days, that was a stubborn level. Megal on the low now. Oh, back to 10. 52-week low. How was your 52-week low 200% higher than where you IPO'd? What in the name of of Powell is this? This is fascinating. Airbnb, I don't think they got halted. I think they're just getting clapped. Like Booking and Expedia are up, but Airbnb, not so much, which is kind of odd. Again, I think it's the Wall Street effect on there. But again, like Uber and a lot of travel names are doing good, even DoorDash, anything else related. Abby more down today. That's good, better than not. And then JP Morgan, I think banks are chilling out. Again, watch the banks. Consumer discretionary is fell. Materials are now the leader on the day. Communications up 2.5. And then discretionaries are 2.2 while financials are 2.1. And then energy is negative on the day. Police raid home of Russian TV journalists who protested war. Honestly, I read the first half of this. And then I thought it was us. But you realize that's like a Russian troll, right? That's Russia trolling the United States, if you don't get the joke. That's a pretty fun. That's a very weird news article. I interpret it as a troll. Meme stocks selling off. AMC, BBB. I mean, everything's kind of selling off, but again, watch if they are able to get steam. Phase on the high. That's probably the first meme stock I'm seeing ripping right now today. IBM is popping. They're actually doing good. SPY right below VWAP catching some steam. Will the ghost of 1980 haunt Jerome Powell's Fed? Oh, no. Roblo, are they picking up? If Roblo could just print green, that thing could take off just because they had one or two good analysts backing it. But otherwise, I don't know. But then looking at Coinbase and seeing Coinbase up after that report is pure heresy. I'm not against it, but I'm surprised. So we'll see what happens. Private, thank you, Authen. Thank you, my friend. I appreciate that. It does mean a lot. Stay in the game, baby, and call out anything if you see it. Ghosts are bad for tech. So watch for next leg of financials and see how that plays out here. Again, looks like commodities and communications or materials and communications are leading. I like the Netflix, but that Netflix is a little bit more riskier. I want to push it. Again, I want to play part of Disney, but then I really think Netflix after 240, and if the market wants to smoke on some hopium, I think it'll be there. But unfortunately, you're paying a pretty hefty premium for that stock or for that premium after that last move. So we're right below VWAP. See how it plays out. No other crazy news has came in. Couple people talking social media buzz on Elon selling shares. Where is Elon? So, again, best thing you can see right now for some of our plays and just in general, I mean, bank stocks going up with red candles. That'll say a lot. Tesla just keeps selling off. Let's check oil. Oh, oil's plummeting. Oh, oil just says switch gears. It's funny how you say NVIDIA is NVIDIA. Well, all I know is this is probably your first stream, so welcome. We're glad to have you. Tell me you're new without telling me you're new. You know what I'm saying? I got you, man. We love you. NVIDIA. I love you, man. God bless. I will say NVIDIA. I know. I don't know how we got Abivi past him. You know what I'm saying? He don't even know Abivi, so at least I know both of us don't know how to pronounce Abivi. You know what I'm saying? He know how to say NVIDIA. But we could both say Abivi because that didn't stick out to him. You see what I'm saying? I know. Why are you so mean? I thought that was very friendly. I feel like I've been way more of an asshole. No, I did not even mean to be. Oh, man. What happened? Inflation came down. How are you waking up sensitive? That makes no sense. That makes no sense, bro. Your gas prices came down. Your lodging has came down. Your airfares came down. The price of eggs saw a 2% decline. And you still waking up pessimistic? Are you kidding me? That's amazing. Apple looking toppy. Well, we're coming right back down. I mean, again, a lot of waves today. A lot of waves back and forth. Phase is going up. Again, Phase is probably one of the only meme stocks. Again, we talked about the meme hedge. So I would honestly, I would give them a weight. But it looks like Phase is the only one running right now in this market. The grocery still going up. Let's see. Netflix, bro, it's holding up. I'm honestly checking out yield curve and everything else. Honestly, the yield curve is still kind of worrisome, but most of the other factors we're looking for is chilled out. But watch, because now Fed futures, they are starting to climb up. You know what I'm saying? So if that starts to climb up, depending on how that plays out, it could get a little bit more aggressive there. NVIDIA holding better. The premiums are a little bit. Our Bank of America's actually went up. Again, bank stocks are leading. I think bank stocks might be the green on the day. Like, I think they might be the real leader. Hedge funds face SEC demand to share more on their strategies. SEC set to propose a confidential form PF on Wednesday. Uh-oh. So the SEC is going to now make more disclosures for hedge funds and their strategies to improve quality of foreign private fund disclosures it receives from large private hedge funds. Yeah, we made 3 plays today. We did Bank of America, Netflix, and NVIDIA, all calls on all of them. So new SEC laws regarding hedge funds. I mean, watch if there's a market reaction. I don't know, but maybe we might hear something on that down the line that could move things. Interesting. Yeah, we're at 418.21 right now. Again, phase, that one's holding up. Tesla's now selling off from gains, but they still have nice cushion. Apple's trying to climb up. They're up 2. Microsoft up 2. Amazon 2.5. And then Meta and Google. Meta's up 5. Google is up 2. Geez, why is Meta up 5? And then Snapchat's up 5 too. And then Unity's still holding up. Plug is climbing up here. 12% on the upside. Again, even with energy going down, but I think it's mainly gasoline. You have a couple of the renewables up. Junko Solar, DQ, APDN, they're running 2 up there. And there's another pop. Again, we literally sold off immediately, popped that VWAP, ran right back up to the high, immediately sold off back to VWAP, and then chilled out, and then now you're having another pop going up. Cargill reports $165 billion in revenue for fiscal 2022. Cargill, that's a lot. Bank of America going up. Twilio on the high as well too. I do like Snap for the long term, but I'm not necessarily a buyer at these levels. Right now, what I mean is I would just wait for earnings. Why does my Airbnb look so weird? Every time I put in Airbnb, it looks like it's dead. Back in college. Watch if Uber goes up. I wonder how the long term's looking on this day. Back in college. College is good. Disney signs IP license with DivX. Again, Disney has earnings after hours. So we have a Netflix play, which we could assume accounts for it, but just keep that in mind. ACI on the high. Couple of random runners now, even a VMware, but it looks like a couple of small caps. They are hitting the high ticker right now. Netflix is popping up again. Can't statement. Let's see, young long term. How you looking? I was about to say 14, but a lot of good things up here. We're positive on Netflix and Uber now, actually. So that's great. This is what we were saying. So even though we still have our deposits, today's move is going to it's going to unlock some gains that we should be getting here. I will take it. I will take it. Volume spike, meme stocks lagging today. Plug and Neo. They are lagging, but if they do come up, just keep that hedge play in mind. NVIDIA's moving. Yeah, Unity plays are up. I mean, I'm surprised our Unity plays are still below just 1,000%. So, again, if you were even disappointed by how it looked yesterday, you do have an opportunity to still walk away with a pretty big bag. Long term, same companies this month. I'm just going to wait. I mean, that's it. Like, if you're not, it's just going to be like real estate. If my long term, if they're not going to hand me Airbnb below 100, JP Morgan below 110, 105, or even 100, and then Uber, I'm going positive again on Uber now. Unless they hand me it on a silver platter, I'll just keep stacking up my cash until we have at least some real clarity on it. Because again, although there's some things to be bullish about, this is, today's CPI is going to keep the trend running. It still doesn't really change, what I see with the yield curve and other factors there. So I don't think the real bottom is in just yet. But like I'm saying, we're in a great position. Like, again, if we're going positive on Uber today, that just means we're just going to make gains on Uber so we don't miss out on anything. If the banks start to rip, we already got 2-3 months of drip now, or 3 quarters. We don't miss out on anything. We get the upside, and then we have Airbnb is the biggest in the account. If that has any remotely bounce, we're going to benefit off of it. And then if it comes down, I should be able to get a lot of these plays at steals. And then worst case scenario, I just end up with cash. Right now, we only have about 2 months of cash that we're holding. Clarity, baby. Good morning. So again, SPY trying to make that move. I don't know if you've noticed it or not, but 418, 419, or that 420, it is very, very stubborn. Today is crazy action. It's very weird. Actually, let me see if I could get the ECMI. What time is it? It's been about 30 minutes. Not too bad. Still pretty early. So, are you ready? Remember, last CPI 6 hours in. Remember, last CPI was the only positive one, right? So take a look here. This is the current trajectory. So right now, we are actually a lot bullish than the last CPI we had. So right now, you are up about just under 1/4%. Last CPI at this time, we were probably up, just under 1/4. So give it pretty much by give it another 30, 40 minutes here. That could be an inflection point. But if we rally from here, I mean, this is looking like one of the better days that we are having on the upside following a CPI. Article for SEC hedge fund update. I'm sure if you search it, it's PF rules. But that one, it flew by my wire here. So I'm going to have to look for that. But I think if you just search SEC PF rules, you should be able to get something on there. Or go to sec.gov, and they should have an update. They do it on their news or announcements tab. We acting like core is 2%. I feel you. I totally agree with a lot of you guys saying that. Again, I was very bearish coming into this week. Again, I'm surprised. Even every economist was surprised. But you have to be able to see that the real bullishness is just coming from this was one of the better reports that we've gotten in a couple of quarters. But on top of that, this just keeps the Fed pivot narrative alive. This has nothing to do with killing inflation. This has nothing to do with, oh my gosh, the economy's so good. No. Only thing this has to do with is that this keeps the Fed pivot alive. That's it. Just the narrative. That's it. As long as Fed pivot, that's like a bunch of bombs have dropped in the last quarter, and all of a sudden the Fed pivot is still alive. That is what people are taking out of this. So that's why you have the risk of Fed speakers and anything else. We'll see what happens here from it. Roblox, big drop. Unity on the high. Yeah, Roblox is not getting the same treatment as Coinbase. Coinbase was able to really hunt it. I don't know why Airbnb is down. Airbnb is literally getting clapped here comparatively to any of the travel. Because, again, Booking, Expedia, the other ones are killing it. SPY's only 0.4 from where it was at Monday morning. I guess give or take, right? That's why the stubbornness of this level is very, very interesting. Real rate still 6. Go home market. Airbnb. And technically, the I think the real yield on the Fed futures is negative 0.5 basis point. But just keep watch for the Fed futures. Again, even the yield curve, man. This is a dramatic move. Very, very dramatic. Yeah, I have the EWZ calls. That's why I was looking at them, but I think they're a little too far gone unless we go like crazy, crazy. Which is better, SPY or Lumen? They both have an annual dividend. Well, is Lumen, Lumen's a company, so they're just different. Honestly, I would take SPY just because you got to, like, one is a company, one is an index. So even though you're offering a dividend, just one of them has a high yield, one of them has safety. So one is a company can fail. For the S&P to fail, just imagine what has happened through the last year, and the S&P is not technically not failed, even though it has declined. MGM dropping. Again, remember Caesars was up. They're still up. Even Win is down, actually. They got no love on that. I don't think we've hit the bottom. I mean, I stand by what that little bottom we've had a couple months ago off of this rally. That could be an inflection point, and we'll look back at it. But whenever the real issue with the yield curve comes to life, once inflation like really sets in and we get into 2023, I don't think we've seen all of the damage, more or less. I think this is just a temporary relief, and it's somewhat justified just in the sense that we were really, really, expecting a lot more downside a couple months ago, and that didn't materialize. But I don't think we are off of the one-way road to recession yet, unfortunately. This all today did was just buy time till next month. Like, I don't know. Like, that's all I see. Like, I don't know. Have you ever been in a situation? I don't know, man. I've been behind on bills before in my life. And this is just like, this just allowed, you just got a lucky payment from a family friend that just allows you to make one more month of payments on the stock market till next month. That's it. That's all it is. That's all. You just got time bought until August or till September, until we get the next data report, the next jobs report, and the next Powell. So it's just like, it just bought time until then. It's an extension. That's really all this is. It just gave you this like rally holding up now at higher levels. It just gave you an extension and just said, hey, here you go. That's it. But nothing has changed. You're still in debt. You still got a problem. It's not like if nothing changes coming in the next month, then what? There's nothing to be bullish about. You see what I'm saying? And then depending on how it plays out, and we already did that assessment. Like, you could model out right now on CPI, if you took the current CPI, if gas price stayed the same as today into next September, or the September CPI, or August, excuse me, then that will literally bring down CPI another 1%. So it really just depends on where things go from there. But then if rent goes up and some of the other stuff, then that will have a different effect on everything else. But really, this is just going to buy the market a little bit of time to argue about bullish or bearishness till August without dying and going down below 360. That's all. Just don't forget that 380, 360 level I've talked to you about since January 2021. I even told you I reaffirmed it at the beginning of this year, even when we went towards that level. But it's like we're holding that level for a reason. So it's just, let's see what the data does by then. And then, at least we're not at that point. And that's the key. You're at 418 right now. Black Swan with Russia? Not currently, no. Unless they blow up that nuclear plant, then we have a problem. And then I just think they're trolling the United States. Again, if you didn't see that headline, Russia just raided the home of a news reporter today. Very random piece of news, but I take that as them trolling us, but I don't think they're going to do anything crazy. Again, only risk right now in Russia and Ukraine that could affect the market, in my opinion, would be a nuclear disaster due to conflict. Backs against the rope, but we kept on bouncing back. Sup, Frizzles? They didn't smash it, but people like the upside. But like they missed on some areas, which kind of made it a little subdued. Yo, Apple's slipping. Hold up. Damn. Apple, Microsoft. Yeah, they're all slipping now. Hold up. Netflix is kind of holding. Watch out for anything with earnings. Are kind of already dropping. NVIDIA, every single one of the plays is coming down now. Banks are holding up, which I take as a positive sign, but that may cost tech a little bit of the gains here. So we'll see. Pretty big cheek lay, 3 in a row, 418.40, all the way down to 417.50 now. That's almost 1 point in 3 minutes. So now we are back to the lows of the day. Let's see what happens here. But watch the banks. Again, that'll say something, but it looks like kind of tech is giving up industry by industry. Materials are still leading. Financials has climbed to number 2. So if you remember what I was saying, I think financials might be the big one on the day today. But watch out. Consumer discretionary is still fighting, but communications have given up 0.5% in the last 10 or so minutes. Energy is dumping heavy, so that's weighing on it. And then utilities are only up 0.43. HHS, Apple, little bit of a bounce there. Again, watch financials. Solar coming up. Yeah, solar is holding up great. Great call out. That's as far as energy, the renewables are doing a little bit. Again, oil just got dumped on. Thanks for the chat. We love you, my friend. God bless you. Lots of money on the sidelines. Still the most hated rally. I agree. And I mean, again, just imagine how I'm viewing my long term. A lot of people are going to view it like that. That's it. Because if you made a couple early purchases and then you save money and then you're looking at this rally, whether you hate it or love it, and again, especially if you don't love it, it's just like, why not wait? That's it. If you understand that this bought time for the next month, that's it. You're just going to have to deal with fuckery for the next for the next 30 days and trying to explain this and all that. But I do agree. I think there is a lot of money on the sidelines, and this is a very easy market to just say, hey, I'm already positioned. I've already taken losses. I'm at a point where you're borderline break even or not for a lot of things right now, especially if you bought any semblance of the dip. So now it's like, why not just wait? And I think a lot of people are like that. So that's why I'm just saying, if you're either going to understand the window or not. Don't think the window is a golden door and a golden gate to a bounce, a bottom, economic recovery or economic failure. It's just a window. That's all it is. It's a window that we could argue about bullish or bearishness for another month till a data set could come in to prove somebody right or wrong. And that is where the responses are going to come from. Again, you see it alone here today. The damn yield curve. Our Fed futures going up. Just take note of it. But again, that little bounce there on Apple kind of are holding up. It's not helping. We are selling off now. I think bank stocks are paying for it here now too. Happy to be here. It's weird, Netflix. So just a weird day, man. Just a weird day because, again, most CPIs, we don't really open where we gapped up to. Do you guys, can you agree with me on that? So, that's why today is so much more, again, not only because of what the data is saying, but, think about it. Most CPIs, we pop, sell off, and then you edge out around here, and then opening, it'll run up or run down. But, we rarely gap up, hold the CPI, and then open at, the high of it. You see what I'm saying? That's why we're, this is very, very odd, and it seems like we're doing a lot, but we're really just holding some strong gains now for just about an hour or two, almost 2 hours, if you think about it since the release. Struggle season. Yeah, the spirit is there, baby. The spirit is there. The spirit is there, point blank. The spirit is there. You know what I'm saying? Oh, you know what I'm saying? We focused. We focused. That's all I'm saying. Just watch your back, bro. Just watch your back. Amen. Amen. Defense. Defense. I don't like how they walk down the bid on the T-Pape. Well, I want to see what the Fed is going to say. You got to realize the next level of where we're going from here right now is very, very simple. Let's see if the Fed walks this back. That's it. Because now, bro, if you don't think Powell is oh, shit. Now they're really going to, if we thought the Fed was going to pivot just off of the last 4 weeks, what do you think this data set is going to do? So that's why, I really want to see what the Fed does and how they kind of communicate this. I think that could go a long way. You did find the article. Much appreciated. I'm glad, man. You could post it if you found it there, too. Again, usually, like some stuff, if it just comes by fast, I usually will have the source on deck, but that one just ran through, so I'm glad that you were able to find it. Up 100% on Citi. Damn. Citi was a winner, too. The Bank of Americas are up a decent amount, but not anything too crazy. We should get a couple of Fed speakers here shortly. We're going to get 2 today, and then throughout the week, you're just going to get a bigger candle on the SPY now. Charles Evans comes on in about 30 minutes or 20 minutes. So, again, you're dropping a little bit now. We are breaking the range to the downside. Some of the bigger tech is selling, and your bank is holding up. The bank stocks are holding up. So, honestly, I wouldn't freak out too much as long as you could get certain things holding. That's it. Like XLP, that's all it is. This is just movement happening right now, more so than dumping. Because, again, everything's green except for energy, but doesn't mean we can't sell off today. Just watch out little by little. If utilities and healthcare go red, those are going to be your weaker industries, and then we're going to see what happens. Micron's on the low. Like, look, utilities are weak and they're coming up. But SPY is dropping. I think some of the earlier gains are selling off. You guys said Meta is holding. Whoa, whoa. Whoa, whoa. See, CPI lower, so big gas pre-workout. Tesla went red. Damn, they were up 6. So 2 big candles now. SPY is selling off a little bit more. This is starting to hit a little bit broader. Finally green on Ethereum. That's good. Musk sold. He sold about $6.9 billion, I think. And then over the last 10 months, Musk has collected over $32 billion from selling Tesla shares. So, I mean, he might have enough cash to just buy Twitter, so I think that's kind of bullish. I think that's what people liked. But now, I mean, I'm surprised they even sold off those gains. That was big, bro. Tesla, to sell off 5% gains, that's wild. That's kind of a lot. Bro, that's like winning the last lottery 32 times. Just give or take. Pre-taxes, and then assuming Elon has a bunch of tax credits he could utilize to not get taxed as heavily. Microsoft on the low. Peloton outage. Yeah, Microsoft, Apple, they're all coming down now. At least JPM and some of the others are holding, but still. Where does he keep the cash? Probably in a bank account. Or maybe in a bond. I don't know, actually. Because you could put $32 billion on like a half a month bond, bro. I'd take it. Bro, you could yield like 2% on a 3-month right now. If you have access to it, if he could go get, if Elon could get access to be a broker dealer, he might, dude, he could just collect 2% on, that's it. That's all I would do. How much would that be? 2% on 30 billion every 3 months? $60 million. So you make what? You make like 240 mil a year, probably, depending on how you do it. Or is it 6 mil? JP Morgan. All right, little bit of a valence. Dude, VWAP is nutty all day today. That's the key. Twilio on the high. Didn't they already have earnings? Who was the other one? It was Upstart. Oh, TTD. That's the one. They killed it on earnings. They're up 22. Damn, we would have been mad in the money on that contract we sold. That one was one. That's a contract we sold too early on TTD. Netflix, key level. Oh, yeah. No, dude, it's popping. Netflix is, dude, 240 for Netflix is huge. Again, the thing I think with Netflix is going to come down to Disney today. That's it. That's why if it could hold up strong in there, it'll be great. But the underlying thing will be Disney, and then we'll go from there. But 240 is huge. Yeah, 10-year note auction. I think it's on like $10 billion. 2% of 30 billion is 600 million. Simple math. Amen. I feel like you wouldn't let me cheat off of you in math class. I don't know. I just feel like that would happen. If you'd be like, it's simple, Josh. You don't need to look at my answers. I'd be like, come on, bro. Oh, I cheated off everyone. Damn, look at you. Amen. Amen. I feel you. You know what I'm saying, though? But, like, you know, when, like, I wanted the answer, and then you, like, you know there's the smart kid in class, and then you, like, look over and you're like, come on, bro, hook it up, and then he gets all weird with you. And I'm like, come on, man. I'll play Pokemon cards with you at lunch. Just tell me. He put his elbow up. Oh, man. The good old days. I know it took me 2 years. Yesterday, I finally learned the ghetto spread. Amen, baby. Amen. I remember I used to change my answers when I knew someone cheating was looking at mine. Dude, you're a menace. He said, yeah, I could sense when they were looking at me, so I made sure they missed everything. I ghetto spreaded the Unity. Unity's still up, though, so that has a lot. BLFS on the high. Yo, look at this, bro. Whoa. Look at this on the high-low ticker. A lot of these, like, 7-letter tickers. All of these random ADRs just printed. I feel like in a world of meme stocks right now, that could have meant something. That's really odd. You rarely, like, you see what I'm saying? Look at all of these new prints on all of these random 6-letter ADRs. 5-letter ticker ADRs. That one's odd. So watch out. We're bouncing a little bit. Some of the tech stocks leading. It looks to be Netflix going up there. Apple even had a decent bounce, but not too much. Who is it? Could be XLV. It's somebody. Somebody's leading that rally. I don't know who it is. Or that little bounce. So Netflix 240. I don't know if our plays went up. A little bit, but not enough. Verlander, ADR, China. IBM was holding up pretty good. Netflix getting pretty active. I want to know who this is right now. It's weird because, again, most things like Netflix is bouncing, but this would usually mean something bounce. Maybe it was energy. Yeah, probably energy. That's the only thing I'm seeing because some of the tech stocks are still subdued. Netflix call. Yeah, I did a Netflix call for next week. We do not have any Hallelujah today, unfortunately. There's not any Hallelujah today. Maybe if we'll see any press conference. Again, when's the White House going to come on and brag about this shit? I'm waiting for that. Bro, their hard work paid off, man. Oh, Biden's live right now.
It's an absolute tragedy. It demands not only
I agree, Biden.
but a whole country.
I agree. It is a
together.
tragedy.
So let me close with this.
I'll just go pee real quick.
I've always have your back, I promise you. That includes finally delivering justice to Zawahiri, al-Qaeda's leader and bin Laden's deputy during 9/11, and it includes always fighting for the care and benefits you've more than earned and more than deserved. This law is long overdue, but we finally got it done together. And I don't want to hear the press tell me Democrats, Republicans can't work together. We got it done, and we got it done together. So God bless you all. You are the backbone, the very spine of this country. And may God protect our troops. Now I'm going to walk over and sign that legislation. That's okay. All right.
Hey, sweetie, can you tell me how to spell Bill? You know how to spell it? B-I-L. All right, you write it for me. All right, thank you. Yeah, well, I'm going to look you deep in the eyes. Yeah, strong eye contact, good skill to learn. Fuck yeah, we did it, America. We did this shit. So excited. Yeah, you see that shit? Boom, baby. Let's go. All right, that wasn't, and nothing to do with CPI. That was the veterans bill. All right, think of the something, the burn pit bill. So, but that is not the thing. I had to go to the bathroom real quick. Crude inventories rose 5.46 million barrels. So watch out, because if we got to bounce on oil, if oil comes down after that EIA numbers right there, it'll be bad. Again, we increased 5 million barrels. Estimate was a draw of 1 million barrels. So U.S. crude output reaches 12 million barrels a day, highest since March 2020. Wow. So there you go. Oil, that's very bullish, honestly. I think oil should get clapped off of it, but oil's already down. But that's big. Again, I know we have a couple of guys in here. You guys are good at picking apart the oil reports. Again, I don't know if they include the production as part of the SPRs, but that's it. Yeah, we're at 12.1. We're at 12.2 now, 100,000 barrels. But again, estimate was for 1 million barrels negative. We came in at 5.5 million barrels positive. Gasoline negative 4.9 million barrels. Estimate negative 1.1. Distillates positive 2.1 million barrels. Estimate was negative 1 million barrels. So that's pretty bullish for oil. Well, bearish for oil, bullish for the markets. But let's see. Oxy's ripping off of that. It's actually quite interesting. Core GDP did not go, or core CPI did not go up. And that was very, very important. Again, it just stayed the same, which was very wild. Again, out of all of the 60 economists, only one person expected core to move like that, actually. What was the economist's name? I don't know, actually. Let me check. It's a good question. We could see. So where's core CPI? David P. Kelly, JP Morgan Asset Manager. David P. Kelly, and honestly, let me see. I want to see his track record. But David P. Kelly of JP Morgan. So he forecasted CPI to come in at, what's it called? 8.8 5.9. He said 8.6. I want to see if I can see his last ones. SPY, Tesla pop, Oxy, oil's going crazy off that. Nvidia went a little lower from where we got it. Yeah, you're actually moving up. Again, oil data was pretty good because I think oil's moving up on it, which is odd. I thought oil was going to come down, but oil's taking that as bullish. Yeah, this guy, so the one guy, yeah, so the David guy, bro, that's the thing. He was the guy who got it right. But, like, literally, man, this guy has been lowballing every CPI. So, like, even last month, he expected it to come in at 8.1, and then he thought core was going to come in at 5.7 when it rocketed up to, like, 6. So, he's, like, a lowball. So the only guy who got it right is like, yeah, he's been wrong this whole year. He's been literally lower every single time. So the one economist who got, again, no other economist predicted core to not move. Literally, not one person. But I mean, I guess we could give him credit, but he's been more bullish. It looks like on inflation throughout the year. He's probably excited. Yeah, bro. I mean, that's a nice print to be the only economist on this print to actually forecast what a lot of people didn't really, again, we didn't really expect it. I didn't expect it. I thought headline was going to come down, but I thought core was going to rocket. I was like, there's no way none of the other prices didn't go up. But he was the only one. He was the only one. So SPY is now a little bit below where we open. Oil is rocketing, and that is bringing up the market here after the EIA numbers. XOM. All the oil names are going crazy. Where's our banks too? They're kind of chilling out. We don't want to see that. We want to watch the banks kind of go nuts just because it'll heighten the strength of this report more or less. So with core going up, the market won't go back down. I think not until something changes that, and that's why I think we have a window up until the next data set. So right now, I mean, PPI could help out, but really it's going to be PCE, jobless claims, and non-farms, and then the next CPI, and then the next jobs report, and then Powell. But it definitely helps. Again, core going down. The problem of today, or the bullishness, depending on how you want to look at it, is it keeps the narrative alive that the Fed might pivot. That's all. All today shows, even with core not moving, all it is showing is that this possibility that a Fed pivot is on the table is there, because now you are finally watching evidence and data show some sort of decline in inflation, which the Fed has not been able to produce all year. Again, last time you saw inflation chill out was in 2021, and that was in June and July for a little bit, and then ever since then it just kept rocketing higher. So now the inflation, the narrative is alive and well that the Fed might want to slow down or reduce the pace again, that's why the Fed futures have dropped substantially to now about 50 basis points priced in. EIA gasoline stockpiles fell 5 million last week, biggest drop in months. So I think that's why oil could be going up. Although a lot of barrel production and everything, the gasoline stockpiles have fell the most in 10 months. I did make the Bank of America play. It is up a little bit. That's like up 30% now. It was up a little bit more. Again, 14 cents to 17. It was up at like just under 20. On Unity, I kind of want to execute and hold. I don't know about holding if you want. I mean, usually I'll turn to exercise if I'm like deep in the money. Like if I have like if I'm 20% in the money, then yeah. But otherwise, it's up to you. That's totally going to be your decision. But you could ghetto spread in the money. You could take profits, do as you please with it. But hopefully, I would make a decision. And remember, act as if you can't change your mind for 10 years. So you could walk away with a nice profit on an option, or if you want to hold it, just make sure you cannot change your mind in 10 years and don't let that Don't let that one backfire. A TLT play may pivot if they happen. I mean, it's in the cards, and that will, I mean, TLT will have an effect, but there's many ways to talk about pivot. So it's like, are they going to cut rates, or are they going to stop just raising rates and just in general and pause? Or are they going to go from raising 75 to 50? That's it. MODD, JP Morgan, Netflix, do it for the people. Come on. Accidentally got Bank of America puts for next week. Should I hold or close them? I mean, it kind of depends. It's hard to say. I mean, how much have they moved already? I mean, I would just keep an eye on them, and if there's a good exit on the upside, you could take them. But it's hard to say because, and why I say that, even though I'm bullish on banks right now after this report, is simply that anything can happen. And it's just like, we've seen it many, many times. CPI is more than a one-day event, or CPI. It's more than just 1 day. So depending on how we play, we'll see. But it also does very well, leave the opportunities for this bull rally to really, really keep going. I think if Roblox could show some strength, I'd be down with the calls just because Coinbase is up after that earnings, but I wouldn't bet too much on it. Boeing is ripping now, new high. Good call out on that. Elon Musk sells more Tesla stock before solving self-driving. You think we hit 420 today? I don't know, but I think if we do hit 420, that will be the ultimate test until we get up to the higher levels. Again, if we break out of 420, it really just opens up the door for like 423 to all the way up to like 426 and 430. We're going to go in like 3-point blocks, really. So it's big. I mean, it's stubborn. And again, we're at least holding 417 pretty well. I think there's no coincidence we're not dropping below that because remember, that was hard to get back above. NVIDIA plays coming back. I'm actually up on that play, believe it or not. The same bid, higher ask. Watching for 420 any minute. So I think if banks rally and continue that, and then they could lead with energy chilling out a little bit, you're going to have a more of a evidence or more strength or momentum coming into that. If you said Fed pivot is in play, wouldn't TLT calls make sense here? Yes and no. It just depends on where it goes and the type of pivot. So you got to realize a pivot could be holding the ball, right? So like imagine like a pivot in basketball. You dribble in and then you pick up your dribble. What can you do? You pick up the ball. You could either pass it, shoot it, or you could kind of just move around, get in the triple threat. You could swipe through, you could do stuff. And that's the thing. We don't know. It keeps the narrative alive, but we don't know what type of pivot Powell is going to do. So TLT gets affected only if he cuts it. Pretty much if he passes the ball away and says, no, we got to get out of here. We got to do something. That's the problem. But then is the question going to be, is he going to just stop hiking rates because they front loaded it, or is he going to really, do his thing there and kind of, hey, say maybe we should lower the amount and then go from there, or is he going to just flat out cut it? So that's what you got to watch out. He could get trapped. Yeah, exactly. That's why he does it. That's why they're moving. You see what I'm saying? That's why Powell and everybody at the Fed, they don't want to pick up their dribble. They don't want to stop or give any indication because as a lot of you guys are accurately assuming, you're saying, well, if you stop, then what's the next step? The minute Powell picks up his dribble and stops doing anything with the rate path, then we know that's it. He's pivoting around on his foot. And then how he pivots is going to be the answer to the next move. But yeah, never pick up your dribble. Let's see if Powell, and again, Powell is pretty good at not picking up his dribble if you think about it. He really is not. So SPY's coming right back up. We literally open, drop, bounce, drop, hold, drop, new low, bounce up back to the high. So get ready. Do you think Powell has any post moves? No. Once he picks up the dribble, and then let's say we, post pivot, post whatever he does after that, he sucks. After he does no moves in the post, but he can rebound. That's it. Powell can pick up the rebound. Again, I'm assuming post means that's it. After the recession, he'll be able to get the rebound, but he's not going to be able to. Once he picks up the dribble, that is the next step of everything. That's all. But he can't rebound. He could get you off the rebound right when they cut rates and everything else. I said, no step back. If he steps back, all of you are going to block the shit out of him. Because if Powell pivots or picks up dribble and tries to turn it into stepping back, that's a problem. That's a travel. We're going to say, nah, sir. You either going to get blocked or travel at that point. It's nah. He needs to move around. Well, that's the thing. I think he might just, I think he's just going to keep his dribble. Because I think after a day like today and after the jobs report and all of the data that we got, it's very, very simple. I think the defense is playing off of Powell now, and they're going to let him keep dribbling. That's it. I think the last thing you want to do after that CPI is try to get up front on Powell. I think they're just going to take a step back. Are we getting screens for easy layups? Only screen would be if the next CPI goes even lower. We have Fed speakers. Fed Evans is going to come on here in 4 minutes, actually. So we have Charlie Evans on economic outlook and monetary policy, and he will be giving he will be the first Fed to speak after this. U.S. accuses Iranian national of attempting to assassinate John Bolton. Okay. In other news. 418.74. We're coming up towards the highs. Again, I like the bank stocks moving. NVIDIA is honestly a little subdued. It's just holding up the gains. Watch Apple, Microsoft, and the rest of the gang there. Honestly, they could be doing a lot more. Microsoft's now leading the way. Microsoft and Netflix. And I think Meta is still up like 6%. IQ or IGMS. Is this a high play? IGM Biosciences. Are the high plays coming up right now? It looks like you had a couple bounce off the bottom. Where are they? Yeah, even FaZe ended up coming down. That's unfortunate. NVIDIA. The premiums are climbing on NVIDIA. So now NVIDIA is at the same price I bought it, but the premiums are up almost 10%. Yeah, 8.5 is still high. Again, it was a quote this morning, and I love it. The thing that's bullish about today, even though inflation is just jacked up and it's still nothing really, I don't think we should be excited about it, but this is at least the start of a decent trend. This is at least the start of something. Again, the quote is very simple. 1 month does not make a trend, but every trend starts with 1 month. So this is literally your best inflation report in the last 10 months. That's it. Just flat out. There's no other way to put it. It's this was your best inflation report, CPI, in 10 months. And that's why now, if it leads into another one, even better, and people will get really excited. But it could quickly change still, too. But that's why people are positive on this today. And then the narrative of the Fed pivot is alive and well. ACAM price target cut to 125 from 135 at Truist. Next Fed meeting is September 21st, I believe. Fed speakers should be coming on any second now. We'll have comments here in the chat, and I will play it live for you guys. Again, I'd watch the Fed futures from there. He has the ability to move a lot. Excuse me. I hope. Well, one person won't mess it up. Really, what I'm looking for is one, I want to see what the Fed speaker Evans is going to say. Two, I want to watch what the Fed futures are going to do. And then three, I want to see if the market ignores the shit out of him or not. That's all I need from this. And that's how we should be watching every Fed speaker, right? You want to see what they say and what they bring up. You want to watch the Fed futures, but then you want to see, does the market respond to it or not? And again, I'm doubting the market will respond, but it depends on the level of or it depends on the language that they use, really, which could say a lot. Abivai, I mean, I could really, really consider it at this price, but I just know it's a way better deal around the low 130s. Pretty much either low 130s, even lower. I would really like it, and even then, that's still like a gain. That'll be like one of the highest prices I've ever purchased Abivai at, believe it or not. So that's why I said I'm like kind of waiting. It's like I still like it, just how it's performed and what it is, but that's it. No. I'm talking about Fed futures. So there is futures on the interest rates of the federal funds. So that's what this is right here when we bring it up. It's actually very important. The Fed uses this in their analysis. This is it's a deep way to observe what is happening with pricing and future expectations for rate hikes. So it's the federal funds rate, their Fed rate monitor, but it's called the federal funds, the CME Fed. What is it? The CME Fed Fund Futures. It's kind of a tongue twister, but that's what we're referring to. I bet the money market listens to dovish Fed, but that's the thing. Are they going to be dovish? Remember, leading into this week, every Fed speaker was probably as hawkish as ever. So you are in a different type of situation, more or less. There's no other way to explain it. AMC about to go green. TSM. Abivai just got a candle. And then Netflix still climbing. Netflix plays are up a little bit. Or no. Yeah, I guess they're up a decent amount. And then the NVIDIAs are moving decent now. You got a decent gain. Again, nothing more than 10, 15%. NVIDIA. Red box. Where's Roblox? Yeah, NVIDIA is now getting higher than when we got it. ASON on the high. Where's Snowflake? Snowflake is moving too. They're up 7. Software could do good. It'd be great. I like Snapchat, but I mean, I still own it. I own a lot of it, but I'm not buying it here until I get earnings. I need that earnings trend to shift. Yeah, Meta's up 6% now, like straight up 6. Google's 2.7. Google is now hitting a new high on the day. So that's one of your first tech stocks kind of leading up there. Netflix and Google, and then Facebook following right behind are leading things up. Bitcoin back above 24,000. PayPal, spot moving. Everything's still holding. So 418.73. Again, we just really haven't even got above 419. I don't know. What is the technical high on the day? 419 flat. That's it. Literally, we have not gone even pre-market. 419 flat is the high. PPI is coming out tomorrow. That's a data set. Again, there's like different tiers of data. So that's going to be like probably like tier 2, tier 3. But again, after this, but PPI, then you got import pricing and then consumer sentiment and consumer inflation expectations Friday. Then next week, you're going to get building permits and then retail sales. And then you get minutes. So by next Wednesday, you're going to get Fed minutes. So keep that in mind. That could also be another big event there. And then after that, I think we're going to get the PCE and then some of the bigger data sets to provide for us more or less. There has to be weed news, Intel. MSOS cannabis ETF. It's rising 1%. I don't know if there's weed news. Maybe it's just up with everything. It's very hard to say. Verve on the high, VERV. NVIDIA wants to climb. Data calendar, you could go to tradingeconomics.com. Probably one of the best free resources for macro data. I'm not sponsored by them. I don't get paid to tell you this. Just what I genuinely use. If you go to calendar, everything all across the world, all the Fed speakers, anything else you want is right there. Okay, so like the video. Okay, just like the video. Okay, just like the video. That's all. That's all I ask. That's all I ask. No sponsored posts, just a like on the video. You know, maybe a sub. Maybe a sub. I don't know. You know, maybe a subscription. You know what I'm saying? Maybe, who knows? Maybe you get a membership badge one day. I don't know. Maybe you get a long term. You know what I'm saying? Maybe. I don't know. Anything could happen. It depends on the CPI. You know what I'm saying? UNG. UNG is popping up 2.6 now. LNG Freeport has retracted its force majeure. Oh, wow. That's actually really bullish for them. Disney Pucci. Welcome, my friend. Orn. That website is called tradingeconomics.com. Disney has way more premium in puts than the calls, pricing 10% of downside, 8% upside of earnings. Interesting. Because usually on any of the run-ups, those puts have been getting dirt cheap. Netflix just dropped a little bit. Again, bonds are at the low of the day. Honestly, this is actually getting very interesting. How come the bonds are not... Where's the damn yield curve? I know the short end is probably stacked right now. Yeah, the short end is not... That shit's not coming down, but... Very interesting. So in a weird way, the flattening is still like this should have steepened the curve today. That's why the yield curve uninverted not uninverted, but you know, less in the inversion. But very, very weird though. The long end is still being a little bit stubborn. Any new play though? UNG news is related to, if you remember when that explosion happened and that Texas Freeport thing, force majeure, they pretty much said there's a situation outside of our control, an explosion. We cannot meet our contractual obligations. So they shut down the port, and then they shut down a lot of their exporting port with that. And then natural gas really plummeted since then because it meant that we're, increasing domestic supply. So now that it's back on, that's going to be good for supply and demand of natural gas. And it's actually really bullish because the explosion was very bearish initially, and it weighed on natural gas for a little bit. So that news is just bullish. It means they're able to start exporting again and faster than expected, and then that's it. I feel good. Long-term up, inflation down, yield curve down. Love these days. Amen. That's why if this is the start to a trend, I think you'll have a lot more happiness in your future. If not, just remember these days, just when volatility hits, so you understand what's possible, and then that's it. And it's going to be beautiful. It's going to be beautiful. Ford is Ford's kind of waking up here now. Good call. No news on it, but I've been liking them. Even GM's at the high, so maybe watch the automakers. Maybe that's where some of Tesla's steam came today. But they are looking actually pretty good. Need to invert. The yield curve's already inverted, but after the CPI today, it just inverted a little bit less. So it recovered a little bit, but not as much. Again, today, if this was bad, we could have been at negative half a basis point. But now we're at negative 0.38. So it's still inverted, but it's done it a little bit less because pretty much long-term bonds, they are slightly higher, the yield. Or the yield is slightly higher. But then short-term interest rates, those drop dramatically. That's why Shy had that big pop. 418.70. Oh, yeah, let me get Fed Evans. I think he is speaking. He's actually not on stage yet. So the meeting is supposed to start, but he is not there. Can you summarize TLT? Pretty much after today, short end bond yields have dropped a little bit. That's rate, like think about it, rate hike odds too. And then long-term bond yields pretty much stayed the same. So all that happened is that the short end of the curve came down, the 2-year came down, and that helped ease up the yield curve. But theoretically, we are still in the same exact position that we were coming into this, except for there's just been a little movement on the 2-year, and we'll see if that actually sticks. Mostly working. God bless you, Aaron. I hope you've been living good, man. Thank you for checking in. 418.82. So, again, 419 is the high of pre-market. We have not gotten above 419 at all. Oh, Euro close? Honestly, man, I have not even thought about it. Euro was a little mixed today, so I want to say it'd be more bullish than not, but we'll find out. Honestly, that's a tough one. We're going to find out. Bank of America, new high today. There you go. XLF. JP Morgan lagging a little bit, but that's good. Bank of America is going now. Now the Bank of America plays are up almost 100% now. And then your Unity is just chilling right below 1,000% also. And then the Netflixes are up 50%. And then NVIDIA is up only about 10%. Yeah, Wells Fargo banks are killing it. It's exactly what we wanted to see. Shout out the Watchlist, baby. Shout out the Watchlist. So SPY 419, new high. Watch for 420 now. So that's it. Watch 423, 427, 430. Those are the price points I'm putting out right now to see. Why banks go up? Well, it's different. I mean, right now, banks have only one thing that matters. That's what we brought up yesterday. They are a pseudo-consumer stock. So especially after that jobs report, remember, banks killed it. They were leading the way after that, but after it's just all consumer-related. The only reason banks are down right now is not because capitalization. It's not because of loans. It's not because of trading losses. Maybe it could be because of some growth going down because of IPOs and funding some of those, SPACs and shit like that. But right now, all the banks is consumers. So as long as the consumer, anything like an inflation report coming down, indicating better consumer health, it has definitely benefited them. That was my thesis coming into this. That's why we were saying, it's probably going to go crazy right off the bat. Fed is talking. Do you see? Maybe it's written. I have the live feed up, but I don't see him. Yeah, Bank of America's went 100%. Charlie Evans. Yeah, no, he hasn't spoke yet. I have the stage live, but he's just not up there. So SPY is ripping. Oh, wait. I don't know if this is it. Chicle, JP Morgan raises price target on plug. So this is where Charlie Evans is going to be speaking. Again, this is your first Fed speaker of the day. Watch Fed futures, but we are ripping right now. Literally, you are entering a new high on the day, higher than anything. Again, 420. We have to break 420, but if we break 420, 423, 420, 427, and then 430 will be the next levels. Just waiting for 4232. Stopped out. I'm done. Don't worry. Stay in the game. This is just one move. One move leading into the next move. Apple's staying kind of pinned there. Everything's running, bro. Look at the high ticker versus the low ticker. It's like absolutely disgusting. Even the oil plays are catching it now. Oil plays, UNG, everything is going up with it. I think the hype plays, I don't know if they are up yet. Kind of. They want to run, but they're not quite there just yet. NVIDIA is now towards the top of the day. That one's good. The NVIDIA contracts are climbing a little bit now. Or what? TSM on the high, overbought. I have not checked any of those metrics. We've broken out all throughout May now, and we're just starting to enter some of those early May levels. But this 420 to 426, 27 is going to be very interesting. You're ripping up now even more. You are taking it away. Let's see. Bro, I don't know why my Airbnb looks like that all day today. Premiums jacking on the call side, more upside to come. They are getting up there. I know NVIDIA premiums jacked up. Even I was up on it even when I was down from where I purchased it. But we will see. RY, where is that now? Uber, JP, just JP to make a movement. Uber again, that's a new high. Where's the other one? There's another one, I think DoorDash and DoorDash, PayPal, bro, everything just launched. Bro, ever since that bottom, this little rat, you see it on every name. Don't forget to make them free. Don't be greedy, my friends. Yeah, a lot of plays you can make. I mean, at least the Bank of America's. I think if those go up to 45 cents, I could sell one and keep the other two for free. NVIDIA and Netflix, though, I only bought one, so we'll probably be utilizing the ghetto spread depending on how this plays out. 419.99. Let's see, bro. Let's find out. Again, we battled all day with 419. It wasn't 420. But now this is 420. Yeah, 420. 419. 419.95. Let's see. This is going to be big. This is going to be big. $2,400 a Snapcare rally. A debit spread, 1150, sell to 12. Maybe, actually. But that's still like a 20% move, but maybe. It's not bad. Did it hit 420? I think it might. No, I'm seeing 419. 420.04 is your high. You've hit it. How come the audio is not up? Trump the truth for pleading the fifth. Well, I'll just teach you like political criminals 101. What you could always do is either you plead the fifth or you have plausible deniability. That's it. So Republican or Democrat, that's the game plan. Just for future references. My brother, Yabesha Isaiah Kabibi. I hope you're doing good. You still out there? You surviving the mortgage craziness? Fifth, implausible deniability. Goes a long way. Long way in the United States of America. Cash calls going puts. We're still kind of chilling here, though. It's like we're going through bursts, but that little run up from the bottom was crazy. No more bear market. We're just going to debate bear market rally for another probably like 2 weeks, 2 to 3 weeks until the data comes in. Bro, how come it's not playing audio? Bro, what the hell? Bro, someone check if there's statements coming in. It is a big stage. I have the sound on. It's just not, they're talking, but they're not, nothing's happening. Check. Speeches. Today's 8/6. Make it work. I think it'll cut in. If I'm looking, I'm just checking. I'm trying to see if the Fed has it. Conferences, nope. So we'll see. I'm waiting. I'm trying to get This is Charlie Evans. I'll see if any headlines come in. So, Chad, be on the lookout for that. Market responding to no sound. No, not yet. VA plays finally going. It was like the last 5-10 minutes. They're up over 100, so be smart with it. Yeah, so Charlie Evans speaking at Drake University. So now he's talking, but we don't have it. Let's see. Yeah, I'm trying to get this thing to get up here. No, they don't want you to have sound. Come on, Charlie. Michelle Bowman had one. That's 8/6. Yeah, NVIDIA September was the play. They're already up, though, a little bit. Wednesday, it's today. So we'll see. Maybe we'll get lucky and get to hear it. If not, I might have a little problem on that. Fed Evans, the U.S. jobs market is vibrant. So again, just anything he says about rates, that's going to be the key. He says inflation is unacceptably high. Put on closed captions. I don't even think, there's just no audio coming in through this. Yeah, bro. No, they just fucked up at the school. That's it. I mean, I have the live feed straight from Drake University. It's literally the same exact thing. They ain't got no updates. Hey, that's it. Whatever college student, you messed it up, man. It's okay. We still love you. But try to get the audio in on time. Yeah, thank you for those. And that's it. I think, are they trying to change it? Oh, you said turn on your mic? No, that's still not working, dude. Evan said Fed to increase rates for the rest of the year into 2023. Yo, so keep that in mind. He said today's inflation report is first good report, but he literally said the Fed is going to be increasing rates until 2023. So that is your first hawkish statement. He said optimistically forecast CPI around 2.5 in 2023. So he's saying that he pretty much is saying that he thinks inflation is going to come down and that this is a good report, but he's saying we do not plan to slow this down yet. So let's find out. Again, this is Evan's statements kind of coming in right now, but market could still brush it off. I will find out. He says, I expect rates to rise this year and next. Optimistically forecast 2023. I hear audio now. I don't. Do you? I don't have audio. It makes sense not to slow down. But again, the question is, how does the market take that? And then watch the Fed futures to see if these are going to update a little slower. But any sort of comments on that end, we want to see the impact. Again, 420.04 is the high for today. There it is.
Cooling household spending, retail sales have been slowing down in a significant fashion.
I'm going to go with the other audio.
And markets have been expecting further increases in interest rates. So mortgage rates, which had been very attractive only a year.
All right, so this is Evans. These are the statements we've been reading. So
buying a house is
let's see what happens.
More costly proposition. If you can find a house that hasn't already just
wait, how come the audio is not coming in?
Very difficult time in most communities. Part of this must have been a response to COVID. People figuring, well, I'm going to be spending a lot more time in my house, and maybe I need a bigger.
No, it's not coming through my audio. Dude, why is this such a mess?
There's a lot of uncertainty that businesses are navigating, and you know, when that's the case, they're usually cautious in terms of expanding their operations. And so I think that's some of the reasons why the first half of the year growth was flat.
No, yeah, it's not even picking up the audio.
That's indicative of a recession. Recessions are usually things that are a surprise. Something happens and then.
It's super. Yeah, you're just hearing it from my mic.
A recession. Recessions are usually things that are a surprise. Something happens. And
This is so low. All right, hold on.
Unemployment rates too. I think Michigan and Illinois.
Do you guys hear it?
It's a marvel that
I can't tell.
well and businesses are able to find workers under normal conditions. I think under the current situation where, I mean, it's hard to find lifeguards in my local. Many businesses.
Yeah, this is weird. Yeah, it's I'm up on like I turned it up to max 20 decibels.
Where do you see the economy? I know it's an imperfect science, but where do you see the economy heading beyond 2022?
Well, I think we're almost surely looking at growth, which a good outcome would be sort of trend growth, and trend growth isn't nearly as strong as what a lot of people probably think. When you look at the state of trend growth.
No, you can't even hear it.
Something much closer to 1.75%.
Dude, this is.
Average rate of growth.
Yeah, man, this is weird.
Could be expected to repeat year after year after year.
Okay. I don't know why the other one's not coming in.
The order of 1.5%, 2% next year. That type of thing. Yeah. And those are good rates. I mean, the way you get 3% is if you had prior years that were below that to sort of catch up. Unless all of a sudden we had a huge explosion in labor force and productivity.
Well, looking forward into the future, it would be an understatement to say that there's a lot going on in the world with the continuing effects of COVID-19 on global supply chains, the situation in Ukraine, the emerging situation in China. Many central banks around the world, including the Fed, are moving to a more restrictive policy stance. What do you see the biggest risk to growth over the next year or two being?
Well, I think supply chain issues continue to challenge everybody, businesses, whether or not you're.
I'm literally, bro, I have this guy blaring through my house right now. You guys are listening through my mic.
I would like. I think there's been some improvement.
I got this guy bumped on like a 15-inch subwoofer, Charlie Evans.
Where, it's not semiconductor chip shortages per se that are the problem, but it's another component. Or there's always just, it seems like the just-in-time production inventory model just doesn't seem to be working as well under current conditions as it did for a long period of time. And for businesses to have to move towards having more of a buffer stock of inventories, I think is more challenging, more costly, and you got to set that up. So I think that could be, a challenge for the future. I mean, in terms of risks that I'm concerned about, obviously the Russian aggression in invading Ukraine, outright war, and the horrible, atrocities there, that affects food prices. Ukraine is the breadbasket of Europe historically, and the lack of their ability to do the harvest and to ship out the wheat, that's challenging global food stocks. There's been some improvement there. There are also supply side chains in Ukraine to Germany also. So I think that affects Europe negatively as well. I think the attitude of geopolitical risks just around the world is something of a concern. And closer to home in the U.S., I think labor force issues are going to be a continuing concern. Are folks going to want to come back to work in the numbers that businesses need? Where are they going to choose to work? Are they going to work here on site? Are they going to work more remotely? How are businesses going to navigate that? I think that's going to be a challenge for a lot of folks. I know that every business person I talk to, that's a subject that comes up. Are people coming back to the office? What are hybrid meetings like? Anybody had a good hybrid meeting lately?
Probably some of the same technology concerns.
That's I mean, you can have the best tech. We get a lot of work done. It's just the experience is different, and it sort of depends on the nature of the meeting. Where it's information exchange and we know what we're doing, it's easy. Where you're really trying to grapple with issues that you're trying to get your arms around, it's probably harder to do that in a hybrid situation. Some people are going to be a lot better at it than others.
Yeah, we also hear a lot of comments about corporate culture and then cohesion of workforce, and especially when people are trying to attract and retain, what impacts those have on being able to attract and retain.
Yeah, we had a nice meeting this morning, business folks, and hearing concerns, challenges that they're facing, and we talked a lot about workforce labor issues, and it does seem like, I just had a lot of thoughts that we didn't have time to talk about. Remote work can be very positive, and it can be great for large numbers of people. And I think that business enterprises can find a way to make some of that work in their organization. Maybe quite a lot, but I haven't quite figured out myself how leadership development, employee development takes place in that model. I know that we have been successful at the Chicago Fed in maintaining our business responsibilities when we were 100% remote except for essential staff on site. And that's because we had an effective culture. We knew what we were doing. We were drawing down every month from that good culture as we brought 200 people into our organization over 18 to 24 months who had never been in the building. And it's like just getting them integrated in a way that we can continue to move forward is a challenge. And now if you roll that forward 5 years or something, I think leadership development and culture are big issues. And I think we're all going to have to solve that one way or another.
Yeah. Let's dig a little bit deeper into labor. We know that there are many more open positions than we have individuals or unemployed workers who can fill them. Workers are also, at least we hear, quitting in high numbers, but nominal wage growth is strong. So with this activity showing signs of slowing, how do you expect the labor market to evolve over the rest of 2022 and beyond?
So there's a tremendous number of vacancies that have been posted. I mean, once businesses found out that there are labor shortages, I think job ads exploded, and maybe people put up multiple job ads for the same job. I always wonder how that number gets controlled for, multiple advertising and whatnot, but, there's like millions and millions more vacancies out there than available unemployed workers, people who can come back and take that. And the question that comes to mind to economists is, how do you reduce that number of vacancies without the unemployment rate going up a lot? Because it's usually the case that what transpires after this is the fundamentals for the economy go down, you go towards a recession, and in a recession, vacancies go down, separations go up, and unemployment goes up, employment numbers go down. We are in a very unusual situation. COVID hit, we had a sharp downturn, we had a sharp recovery. That's not normal monetary policy, business cycle analysis, and so we have to figure out how normal statistical relationships, combinations continue to work, and others which are just, no, this is just very, very different. So I think it's quite possible that we'll be able to tighten monetary policy enough so it will put pressure on the economy so that inflation will be more manageable. It will come back down to our 2% objective, and unemployment will almost surely go up, but it will only go up towards what we think of as a more sustainable number, which nationally is probably close to 4.25. I tend to be agnostic about that. I mean, it could be lower. And most of the time throughout the last 15 years that I've been on the Federal Open Market Committee, it hasn't been a question. It's like unemployment was too high and inflation was too low. But when you get to the point where you kind of say, gee, unemployment's kind of low, shouldn't we knock it back up? And it's kind of like, well, what's inflation doing? If inflation's low, no, because the economy's doing well. Why would anybody want to get in the way of the economy when, American households are doing well? But when inflation is high, then that's a problem. And then all of a sudden inflation leaped up over the course of 12 months from 1.7% to 7.9%. So other things are at work, and vacancies are just part of this, and I think that adjustment process it could likely be just very different than anything else we've experienced. It could be that people just wipe away those vacancies. It's like, no, I don't need, to post. I'm already getting people to show up and hiring, and then I'm losing some people. So it could work out okay.
Yeah, so that's part of the question, is it whether or not, and you've mentioned workers leading the work field during the pandemic and for other changes. Do you see there being room to increase the labor market, or is that something that much of the readjustment will need to occur on the demand side?
Well, I think there are probably people sitting on the sidelines who haven't come back from, the period of the COVID shutdown. That it could be that there are child care, adult care issues, the availability of, staff to help, households, so that, both parts of the household, everybody can be working. I think that can be still a challenge. I hear more about adult care, and it's kind of like the aging of the population. We're kind of living through, I'm getting older, so of course I know more people who it's kind of like their parents are getting older, and, they're kind of going back and forth to help out or whatnot. But I think that because the baby boomers are such a large part of the population, I think this is just more experiences, and I think this is part of what colors the job market today. Ultimately, the aging of the population and demographics are going to put, constraints on how many workers are going to be coming back or growing business enterprises and things like that, and especially in communities outside of extremely large metropolitan areas. I mean, a city like Chicago has its own challenges with people leaving the metropolitan area and some coming in, but net, outflows and things like that. But, Iowa, various communities here, obviously with the aging of the population, and children who go to, Big Ten universities or wherever, Iowa, do they come back, or do they go somewhere else? So there's a natural ebb and flow. I think the aging of the population, though, kind of makes that more challenging throughout. So I think every community that I've visited over the last many years, the question of how do we think about workforce development? How do we think about bringing people to our communities so that we can, I've got businesses that have great ideas, and they need workers, and it's like, are they going to locate here, or are they going to go somewhere else? And everybody knows that their community needs that pool of labor with the skills that are necessary for that to continue to thrive and expand.
Yeah, that's it. You described them as evergreen issues, and that's certainly one we've had here in the state of Iowa, which is the brain drain and the youth drain, both of those leaving the state. Yep. So as we look at kind of some of these high-level words, workforce is one I'm sure you hear many, many times per day. Right. Recession is one, but I want to turn to inflation if we can now. Yeah. In June of this year, inflation measured by the CPI came in at what can be described as a jaw-dropping 9.1%. Certainly higher than I think.
Watch if he says anything on this. I'm trying to whisper.
Just this morning, we received another CPI report for July. And I know that may have had some improvement, but certainly didn't show the best news. How do you interpret this morning's inflation report? And I know you've had limited time to digest it, but what can you tell us? And should we be paying attention to the headline number or the core measure?
Yeah, so, so inflation is very high. That's the first thing, everybody's going to say. And it's been higher for longer than certainly I thought it would be. There were a lot of reasons initially to kind of think, oh, gosh, the car companies can't get semiconductor chips and the plants are shut down in Malaysia and Indonesia. Well, when they fix that in a few weeks, then they're going to start making chips. They'll come back and then they can make cars and they don't have to be, really expensive. The way this really shows up is in used car prices, right? Because you can't buy a new car. They're not on the dealer's lots. So you buy a used car.
There's news on Oracle and AT&T.
They want 40%
I don't think it's too big though.
40% in 1 year. And it's a small component in the CPI, but 40% is a big number, contributing to that. So yeah, inflation just leaped up and it stayed there. And the supply chain continued to be a problem. Labor force issues, people continued to stay back, be shy. Businesses were struggling with that. Workers were quitting. And God, just some eye-opening, eye-popping charts where it's like if you chart quits against the employment compensation index wages, they're very highly correlated. People quit to get more money. And when quits are really high, they're finding other jobs and finding better incomes, and so then that's a challenge for businesses, obviously. It's a great thing for the workers. My son actually got a little raise because, more than a little raise, when he switched jobs. His former boss called him and said, hey, you can do the same thing over here, and that's good. So those are big challenges. In the early days of the high inflation numbers last fall, I was optimistic that they would come down more quickly, and then we realized, no, that was naive. And so the Fed was a bit behind the curve, so to speak, in terms of raising rates. Probably, in hindsight, we probably should have raised, interest rates somewhat, changed our plans, maybe 6 months ahead of time. That's with hindsight. At the moment, at that time, I didn't see it quite that way. We have very quickly adjusted our stance of monetary policy. We started using the phrase, we are going to make policy rate changes expeditiously, and then we started moving. Within 4 meetings, we had increased our policy rate by 2.25 percentage points. That's extraordinary, as extraordinary as the high inflation numbers. We do not expect that we are finished. We report in our quarterly summary of economic projections where we think our policy rate will be at the end of the year, and it's north of where it is today. I expect at the end of this year, the federal funds range will be 3.25 to 3.5%. At that point, it's restrictive. I think we'll raise rates a few more times next year so that we, at the end of next year, I don't see a reason to change this estimate. I think it'll be 3.75 to 4%. So sort of a 4% top funds rate at the end of next year.
Okay, Chad. Hey, adjust your volume. I'm coming back to normal, okay? We got enough. Are you ready? 5, 4, 3, 2, 1. Okay, good. We're back now. There it is. You see that now? Everyone's volume is adjusted. Okay, good. I'm glad we're there, baby. That's good. Nobody's ears got blown out. I'm proud of you. But pretty much with that, literally, that last thing he just said, he just pretty much gave his guidance. He's pretty much saying 3.5%, 4%. That would be about 150 basis points higher, like 1.25 points from where we're at right now. which I thought was pretty interesting. Or I guess you could factor in, just another 1%. But he said what he said was pretty hawkish. He did not really. He tried to take out the light from the pivot, but what you notice, market reacted a little bit. We're still holding up. There's nothing with it. And then what I noticed, it moved the odds about 6 to 10%. So I think maybe just keep note. Maybe every Fed speaker, if they can move the odds 6%, I think it would take like. It'll take like 10 Fed speakers to get it back up to where it was here earlier. So we're going to find out. But yeah, he's making it clear. I think the tone is very clear. Evans is, he's trying to say, we're not raising, we're not going to stop raising and all of that. But market had a little reaction. I think they are going to ignore it for now. Again, I think people are a little too bullish right here. So again, that first thing, like we said, what did he say? He thinks rates should be higher. He brought up the jobs market and a couple of things about recession, but not anything too crazy. Fed futures moved up about 6%, and then the market cared a little bit, but for the most part, we're like, you're down 1/4 of a point, not like percentage, like 0.25 on the SPY since that happened, so not too bad. Not too bad at all, but that's a big one. We're going to have one more person, so we'll find out. Alert, hit the like button, baby. And good morning. And maybe you guys didn't know, but we're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hi chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, we've been here for 2.5 hours. We got four. Actually, we've been here for 3.5 hours. We were early today. We got 4.5 hours left to go. Sitting is the new smoking. I need you to get beside your desk and do 10 push-ups. Can't do 10, you do 5. Can't do 5, do 4. Can't do 4, do 2. Can't do 2, do 1. Can't do 1, get on your knees, do a push-up, plank, the worm, anything. But get the body moving. Then optometrist recommendation. Stare at the object 10, 20, 30 feet away. Blink a few times. Relax those pretty little eyeballs. Blink, 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 blink. Blink, 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 blink. Oh, try it. Trust me, it's good for you. Oh, man. Wow, that's beautiful. That's beautiful. I love it. Oh, my eyes felt good. Now, ladies and gentlemen, chest to the sun. Flex the core. Tuck the hips in. I need you to relax your shoulders. Fix that nerd neck. Nobody is attacking you. We love you here, okay? We love you. It's beautiful. It's a beautiful day. I tell you, I love them. We got love for you. It's okay. Come on, chest to the sun. Like you're standing up straight. I taught them how to stand up straight. Nobody was standing up straight till I showed them. I'm telling you, it's what I've been about. I plead the fifth, but still. Okay, come on. Legs in front of you. Not right behind your computer chair. Relax the shoulders. Chest to the sun. Now finally, relax the jaw. Go. Breathe in really deep. Breathe out with your tongue out. Do the dragon breath. Go. Oh, that felt good. Oh, there it is. All right, just like that, man. You guys have been here for a while. Get the body moving. Some good old push-ups. It is European closed, so take note. Last 7 minutes, we have Europe closed now. It's all eyes on the United States now and where we go from here. But no other news. The latest update, besides the CPI report, which came in below every expectation, it was oil inventories, and that caused some volatility. And that was it. Biden signed a bill, and that's pretty much it. And then now those NVIDIA's going crazy. Yeah, TSM's benefiting off it too. But chip makers and banks, man, shout out to the watch list. Shout out to the watch list, bro. Amen. I'm doing my resistances now. Disney new high. Remember, they have earnings today after the bell. Zombie market. Feasting off news no matter how bad. Well, as far as bad news goes, today was the best bad news we've ever gotten in the last 10 months. Maybe that's how we should explain it. I think that's the best way to put it, is quite simply, this is the best bad news you've gotten. Because obviously 8.5 CPI you would freak out on it, but legitimately, this is the best bad news we've had in 10 months as far as inflation is concerned. This is stupid AF. It is, but like, I mean, let me ask you this. Let's say September, that inflation number comes in. Like, let's say September, the one a month from now. Let's say that comes in, and then the market drops to 370 because it goes higher. Would you now? What would you feel about that? Essentially, would that be stupid? Like, that's, think about it. It's just whatever you thought was going to happen. This is kind of the opposite. You'll say, please, please. But no, but think about that, though. You mean to tell me you rally up 18, 19, 20%, and then, like, that's just the rally we had on the upside, and then bad news comes down, and then it goes down. Like, you wouldn't be surprised. It's just literally, this is data dependent in the volatility that comes from the market. Again, I'm not a fan of 8.5 CPI, but this is the lowest inflation report or biggest decline in CPI that we have seen since what, last November, last October, which is pretty wild to think about. Too early to buy UUP Octobers, trading at 70% discount. No, they could be good. Maybe give it like a couple days, see kind of where it bases out, because then as you get closer to the next CPI, that will be the next move, or any of the jobs reports or PCE. Allegro shares resume trading up 42%. I don't know what that is. S&P rises the most since March on accelerated buyback packs. I still have the Bank of America. I believe they are up 100% right now, or a little bit higher. No, they've chilled out. They're right below, 3 cents below 100%. And then the Nvidia and the Netflix are doing pretty decent. The Nvidia we bought at 80 cents. It's at like 120 now. And then the Netflix, that one was up 50%, but it came back up, or came back down to like just barely up on the bid. Inflation Act passed. No, but I don't know if you guys were listening to the press briefing yesterday, even though we were looking for inflation comments. What they brought up on the press briefing yesterday, that one dude asked the question. He was like, well, when is any of this going to like take place? So it's one thing when that bill goes like fully through, but some of that money might not even hit the market till next year, or even 2024, believe it or not. Yeah, Nvidia's going. Banks chilled out, but I don't know if they're like just switching off. No, I think they're all pretty subdued. XLV's holding. Utilities were strong in the morning. They gave up. Materials are still holding. Tech is holding up good. Discretionary. Everything for the most part's chill. Is it too late to play banks? I mean, yes and no. I think it really depends on the continuation of this and where things go. But the one thing I can tell you is that most bank premiums are up 100% since the morning, or give or take. So it depends on how much time and how far out the money you want to play on it. But, the bank premiums are a little bit juiced here. I think they're number 3 on the day. So you have, no, actually financials has slipped a little bit just because everything went up. Industrials, tech, discretionaries, communications, and materials all beating it, but it's still up 2.2. And then all the defensive categories are all up less than 1%, but nothing in the market is red right now. They slapped inflation because they knew it was going to print. But I thought about it, though. I was like, dude, that's like the most genius, like, thing you could have done was put Inflation Reduction Act, because like we're Americans, man. Honestly, we're not really the brightest all the time, but like think about it. If I was like, yo, Inflation Reduction Act, and you're like, I don't support that. It's like, what about reducing inflation don't you support? Genius. They did it. They did it. They figured it out. That's all you had to do. That's it's a good name. It's hard to oppose. It's hard to. That's like if I said like save the manatees and all the children bill, and you were like, no, I don't stand for. I'm like, what against manatees and children do you have? And then that's it. You know what I'm saying? Yeah, it was like the Patriot Act. Yeah, exactly. They're like, you a patriot. Now let me see your iPhone. Okay, you a patriot, but I need all of your phone records, sir. And now we are going to monitor you like we never have on the internet. Because you a patriot. What, you don't like patriots? Exactly. Mm-hmm. Yeah, like climate change, IRS bill don't hit the same. Like, it's just like, stop the world from a global catastrophe bill. It's like, why are you against that? It's scary how effective. I know, because I thought about it. I was like, how could I even oppose something called Inflation Reduction Act in this moment? I'm just saying, I just know it won't. It doesn't poll well. If you were like, I here stand before you opposing Inflation Reduction Act. That's it. You just lost 30, 40% of the people right off the bat. Mm-hmm. Good marketing. Shop guessing. Shop is $40. Damn, I'm 9 today. MRK fallen finally, but it's slow from after yesterday. Mm-hmm. The same people who came up with the name Happy Meal. I feel you. Mm-hmm. Trick. Are the weed stocks still up? And then hype plays pretty subdued. Phase, yeah. Nvidia's good, doing great. I don't have AT&T plays. I have stock. That's it. Just, collect the dividend. Very, very down. I think I'm down like 38% on that though, over the last like 3 years. AT&T, not so much. Not so much good. ALLG. They're like, Frank, we need a name for this bill. T was my first stock and my first tell. That's good. ALLG, yeah, that was Allegro. That's the one that got halted. It's up 50%. I mean, again, FaZe was the leader there, kind of leading up there earlier today as the hype plays, and then it kind of chilled out, so see. But surprisingly, over the last couple of days, yesterday and today, there's not been a real like big hype move, more or less. Calls till September sell-off. Next FOMC 921. Yeah, I think the CPI comes out a little bit before that, but I think your timing will be decent. Again, other external data could affect it, but those will be the bigger moves more or less, and that's where we'll see things do their things. Evan says, I don't think equity markets tell us anything about inflation. CLSK up 27. Apple's getting a candle. SPY trying to make a move up. Honestly, we've chilled out for a little bit. It's either going to do a sell-off and rip up, or now that I think it's spent enough time here where it might have enough momentum built up. Yeah, CLSK, that one's actually running. Tesla Bulls back up to 2.7. Run. ENDP says bankruptcy on Wharton. Sunrun up 6.3, hitting a new high right now. Nvidia's going up in the highs too. So is Google. Meta, not so much. Not so much Snap. Roku's even on the high. So is Intel. Tesla Bulls. Hallelujah. 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 Man, banger. Bangers. Some of you have already messaged me. You guys got that song showing up on your YouTube recommendations. I think that's hilarious. You're now on a watch list. Solar in general. TLT dropping. Oh, wow. I thought the dollar was TLT. That's the weird part about today. It's just that bonds, again, they had an initial positive reaction. In a weird way, this just did not lead to steepening of the curve, though. It did, but not as much as you would have thought. Yeah, because we're back to negative 40 here. It's still a big movement, but still. Tunak. Oh, I forgot about that one. Tunaka. Roblo earnings, they sucked. I didn't like them, but they had a bright spot with July. So their earnings were bad. They missed on everything, and guidance was already low. But then they said that their July numbers are up 26% year over year. In July, they had a pretty bad slowdown last time, or that July was a pretty big comp to beat. So that's about it. It's pretty much everything was bad except for that July comment. And the question is that July comment enough to warrant it not slipping 20%? And it looks like it was, again, with a very, very positive market. I'm going to hold Bank of America for a little bit. I mean, I don't plan on selling it necessarily today. But, I mean, if I could get one contract to make it free, I'd be down. But I'm just waiting. I could sell 2 to make it free, or I could just wait till it goes up to 40, and then that's it. I like the banks. I mean, again, we have a good first step on the thesis with banks, and if they drive it home, if the market drives it home, it'll be good. Snow, they were up 7 when we saw them. Snow and ASON were running. Yeah, they're back up to 8.6. Bro, why does my Airbnb chart look like this all day? Is that just me? It's the only stock, when I look it up, it just looked like I have a giant red candle. Yeah, it's actually up. I didn't even know it was up. Merck falling. I think those plays are still dead, though. Yeah, after yesterday, they lost a lot of that premium. Upstart is running. That was a post-earnings. They're heading near the high. Some are just like, if anything at the high, like Snowflake's at the high. A couple of others, I think NVIDIA, they came down, but that's interesting. It's foretelling. That's dark. That's dark. I'll take it, though. I'll take it. No, extend. They don't play with me. No darkness, my bad. Okay, it's good. It's good. You might have to sell out for not for a house to pay court costs to get custody of my daughter. I mean, make sure. I mean, if you could settle anything with any court cases, if you could do any sort of arbitrage or settling to save you money, that would be good. But I mean, in a weird way, I wouldn't be too disappointed about that. Just remember, this is why we have the long term. You know, a house is important, but I'm sure your daughter and whatever you're going through is probably more important. And simply put, this is why we keep that money in there. I mean, it's good to have it grow and all that, but honestly, like, I wouldn't trip about it. Yeah, you know, sorry to hear. And it's just make sure whatever happens that you still focus on the long term to at least some degree, and, you know, find a way to build up from it. But it's bittersweet is the best way to put it, you know. Like, it sucks that you have to put it towards something like that, and if it takes up a majority of your money. But the good part is like, hey, at least you had it there, and we had it in the long term more or less. So that's what the expenses do. They'll come back, and then, you know, the long term will build back. You'll see. You will build back better. Inflation Reduction Act. I don't get it. Baba going up. I don't own. Actually, do I own Snow? I think I have like a free share. I don't know if I have like a real position on it though. Yeah, I have a Snowflake. I have 3 shares of Snowflake. We made them free on IPO. It's always the best day trade stack. I remember IPO on that thing was fun. So long term to pay off wife's car, most of our combined debt. Hurts to see, but it's gonna be fun building it back up. I mean, like I've always said, man, the long term, it's there for your life, no matter what. And that's why I'm like, yeah, you could always start it up again. You could always build it, but the whole idea is to have, it's better to have money saved up somewhere than not, especially tied to stuff. Even though it can come down, it's just better to have it tied up to stuff that could do a lot. But yeah, it's kind of your life term. But life expenses come about, and this is what we prepared for with it. So hopefully y'all don't, hopefully you see the bittersweet moment of it all, whatever the situation may be. Robo looks like it wants it. Mara run in. Do NVIDIA again. That was fire. I'll take it. The NVIDIAs are almost 100%. They still got a little bit more, but they're at least moving nice. Fed Evans says, if at possible, we must act cautiously in order to avoid triggering a recession. No, what was I going to look up? Not NVIDIA, Netflix. That Hallelujah song had very green consequences. It's good, man. It's good. Imagine being embarrassed today. I mean, I don't think you need that big of an imagination. In the sense that, I was bearish coming into it, like literally right when the report came out. I stopped being bearish, but it is very, inflation is still high. That's it. Inflation is just extremely high still. But this was the best set of worst data that we've gotten in a long time. I said inflation. We might hit 100. Yeah, you could turn it to a ghetto spread, but again, that NVIDIA play should cover earnings too. So that's the best part. It's like if this turns into a rally, like let's say we get a very, very big rally after today, but then this opens up the window and things really go crazy. Hopefully we could get the pre-earnings run up on that. You have to be versatile in this market. It's literally a casino. I think that's what Warren Buffett and a couple of other people said. But yeah, I mean, that or you got to just slow the game down. And that's kind of what we've been trying to do here. Thinking more defense, but then also just like everything is just pushed by the data. So that's it. As long as you wait till the data comes in, you watch the same factors, but it's like how to predict the next move is becoming a lot tighter simply because it's coming through data or literally an official, and that, you can't really foresee the consequences of that as easily. Like this move was unpredictable. That's the thing. It's like, I think it was all week I was telling you guys, hey, if that report, even though I'm bearish, if that report comes in negative, this shit is going to rip. Like, it wasn't like you could have predicted this, but you couldn't have predicted the data. You could have predicted the reaction, but you could not. Nobody knew what was going to happen. And again, even same thing when inflation went above. It's like what will happen if a certain data set hits, but you don't know when that data or what that data will actually be. And that's why it's so weird. And honestly, it just requires a lot of patience more than not. Self-driving smear campaign releases test fails to realize FSD never engaged. Oh, is there a video? I guess there's like a video. Tell Congress to shut it down. And then it says in nice wide letters, paid for by the Dawn Project. What the hell is the Dawn Project? Bro, it's a political ad. That's crazy. Did you know that for like campaigns? So like do you know there's no there's no limit on like funding for political ads as long as you don't tell people who to vote for? So like I forgot, I'm loosely explaining this, but like you can pretty much you could shit on any political candidate and there's no limit to how much money you could put towards that as long as you don't say who to vote for. So like you could raise billions of dollars of political ads just to say this person sucks as long as you never give an alternative candidate to vote for. Yeah, as long as you're just hating, there's no limits to that. As long as you don't say, oh, this person sucks, vote for him. As long as you just say, yeah, that person sucks. That's it. I just hope you know that. Paid for by wehatethem.com. What? Ally Bank interest 1.6 going up. They're raising it. Ally, we're SoFi too. Yeah, anything bank related is doing good. Honestly, I think if we just get broader financial trends, I think all the banks will do good. You could even pay for it using an organization called For Blank, being the person you're endorsing, and that's not technically telling you who to vote for. Gotta love it. Gotta love it. Oh, Co is killing it. Netflix. Everything's moving slightly. The real question now, do we get past 420 again? We were barely above there earlier. Why I was not saying anything was a giveaway. No one leaked. Honestly, I'm glad because now we know. That's it. If it's gonna come in 0.1 or 2 below or above, the White House is going to say something. If not, they're going to just say, we did a lot of hard work this month. Like, that's it. Bro, I'm telling you, it's actually wild because, like, that was, like, obvious, but I didn't want to believe it yesterday, where I was like, maybe that's confirmation for the most part. But it's just like literally that is exactly what's happened. It's not like there's no exaggeration. The last 3 meetings, anytime inflation has been near expectation or higher, they have warned on it, even if it came in like 0.1 below or at there. But then, bro, they were fully stayed. You didn't hear nothing coming into this one. And then even then, if you know, we haven't even had the victory lap speech yet, which I'm surprised by. Gina Raimondo, is she on Bloomberg? She will be later. Up 45. God bless, man. Keep it alive. Keep it going. Remember, we still got 6 more months. It feels like 3 more months, but really it's like 2 more months on our schedule.
Are working, and we're seeing some signs that inflation may be beginning to moderate.
This is just a clip.
That's what happens when you build an economy from the bottom up and the middle out. The wealthy do very well, and everyone has a chance. It gives everyone a chance to make progress.
And now let's get the perspective of the Secretary of Commerce, Gina Raimondo.
Oh, hell yeah.
So, Madam Secretary, thank you for joining us. These
right,
clearly are encouraging numbers. Certainly it looks like inflation was not going as fast as people thought it was. From your perspective, have you had an opportunity to take a look at this and see why it may be encouraging, and specifically how much of it might be less demand as opposed to more supply? Because I know you've been focused on more supply.
Yeah, good morning. Good to be with you. So, it is good news. It is good news, although I do think we have to be cautious. A big reason for the good news, gas prices are leveling off. And that's certainly helpful to consumers. But as you point out, there are other issues like in housing that we have to still keep our eye on the ball. As we've said all along, there's no silver bullet here. We have to increase supply. Yesterday with the CHIPS Act, that's a huge step forward. We need to increase supply of chips. We need to increase supply of gas, like what the president has been doing with the petroleum reserves. But we cannot, as I said, take our eye off the ball, because we're not out of the woods on this, and we're going to continue to try to alleviate the high prices for consumers.
So I want to come back to the CHIPS Act in just a moment, because you and I have talked about that quite a bit. But just before that, on supply chain, because that's something you spent a lot of time on also. Where are we, do you think, on fixing the supply chain? And specifically, let me give you an example. There was a piece on the Bloomberg actually showing the record profits, above record profits for container lines. Actually, a lot of the shipping companies are making a lot of money. How are we doing on things like shipping costs?
We've made an awful lot of progress, but we're not there yet. So a year ago, 6 months ago, our ports were clogged. They were congested. They weren't moving. We had a shortage of truck drivers.
This is Gina Raimondo,
that has been largely
U.S. Commerce Secretary.
We went after that problem, and
this
we're
might be
feeling
the
good
only
about
thing
that.
we'll hear.
The price gouging that you just identified by the freight companies, we are still working on that. Better than it was, still, more to do. One of the areas you saw coming down with inflation this month is appliances. Appliances prices are coming down. That is a direct link to supply chains, unsticking supply chains. So I think we have made a great deal of progress on unsticking supply chains in many of the areas that I just said. Having said that, we're not there yet. You see it all over the world. You know as well as I do, all over the world, COVID wreaked havoc with our supply chains. And I feel great about what we've done, but still there's more to do.
Madam Secretary, let's go to that CHIPS and Science Act. As I say, you and I have talked about it. You've been very explicit. We need it. We need it fast. Congratulations, it got done. Now let's talk about the fast part. $52 billion in essentially industrial policy. The United States of America hasn't done that much of it. What is the process by which you actually get that money out and working?
Yeah, so as you say, it's a huge day. With the stroke of a pen yesterday, President Biden ensured that we'll be able to secure our national security by making the chips in America that we need for cars, airplanes, military equipment, et cetera. And by the way, we'll create hundreds of thousands of high-paying jobs in the process. So that's huge. We are already at work here at the Commerce Department. It's my department that will administer that money. And we are in the process now of building a team. And we're going to get the money out as fast as we can, which is to say within months, not years, working with the private sector to make sure that this is transparent. We hold these companies accountable. It's not a blank check, but I know we need to move swiftly, and we will do that. The last thing I'll say is this. The fact that we got that bill across the finish line has been a huge signal to industry that they ought to invest in America and not in Asia or Europe. And you're already seeing that. Yesterday, Micron announced $40 billion investment in the United States. A couple of days ago, Global Foundries announced a partnership with Qualcomm expanding in the United States. So I think you're going to see effects immediately because this is a signal to industry, invest in the U.S.
So, Madam Secretary, let me ask you specifically about that, about the private sector, because the theory of this bill, as I understand it, is there'll be a multiplier effect. It's $52 billion, but there'll be many times that. Do you have an estimate of how big that multiplier effect is in terms of private investment piggybanking on the public?
I'd say at least 4 or 5 times the amount, if not more. Our goal is to maximize it. But as big as $52 billion is, it is a drop in the bucket, a very big drop in the bucket towards what this economy needs. It is an amount that we hope is enough to unlock $200, $300, $400 billion on behalf of private industry. And that's the way that we are going to administer the program.
Madam Secretary, the origins of this bill, as I recall, it was pending for quite some time, were in part at least to make sure we could be competitive with China. Let's talk about China and trade with China for a moment. We have heard from President Biden he's considering modifying those tariffs that were imposed under the Trump administration. I guess my simple question that a lot of people are asking is, why is it taking so long to decide what to do with those tariffs?
Yeah, he is still considering it. It's a big decision. Obviously, the geopolitical situation with China is complicated. Candidly, right now, after Speaker Pelosi's visit to Taiwan, it's particularly complicated. So the president is weighing his options. He is very cautious. He wants to make sure that we don't do anything which would hurt American labor and American workers. But I expect that, I know he's looking at it. We've talked about it again recently, and I expect he'll be making a decision before too long.
So behind the scenes, are there discussions going on, and is the Commerce Department involved in with your Chinese counterparts, not only on those tariffs, but more broadly on trade? Are there some back channel discussions going on that could lead to something down the road?
I would say yes, but they are limited at this point in time. Mainly because China has not been that interested to engage. So we are trying. We certainly think that there is a benefit to having communication, back channel communication, but it takes two. It takes two. And so hopefully China will be increasingly interested in having those discussions with us.
You mentioned, actually, the Speaker of the House, Nancy Pelosi's visit to Taiwan. To what extent has that slowed down or derailed those back channel discussions?
Certainly has made it a little more challenging. As I said, at this moment, it's harder, but I am hopeful that we will get beyond that and get back to a place where we can have more of those discussions.
Madam Secretary, this is obviously an attempt for the United States to have a lot more investment, be much more efficient, productive in producing chips. China has its own challenges. It has its own programs in trying to develop its own chips. I know the United States has really curtailed shipment of chip-making equipment.
Yeah, listen, this
to China.
is very
Could you give
important.
Us a sense of where you...
And we love you, Gina Raimundo, but the peaches arrived, baby. Bradley Frizzle and the peach on CPI day. Oh, inflation came in lower, but the peach came in higher, baby. Or not. Holy crap. Amen. God bless you, Bradley. I'm sorry. I saw it. I saw it. I'm listening, though. I'm listening. I'm still scanning. I even got reached out. A reporter is asking me about some EPS stuff, too. So I'll even have stuff to talk about after. But I'm listening to this, though. Keep eyes. Keep eyes.
Property that can't get into the hands of China. And so we're using our export controls effectively to do that. Having said that, we have to work with our allies, right? What good is it if we block the sale of our technology, but the Chinese can buy that from Germany or the Netherlands or Japan? So the way I think about this is be as strict as possible, have very, very high walls around our most sophisticated technology, but do it with our allies so it's effective and not denying U.S. companies revenue. And that's an ongoing process, but we are doing it very effectively, I would say. I mean, you look at Huawei. The export controls that the Commerce Department imposed on Huawei has significantly hurt Huawei's ability to compete and get ahead of U.S. tech companies. So we have to be vigilant is the bottom line.
Okay, Madam Secretary, we always really appreciate you spending time with us. That's Commerce Secretary Gina Raimondo. Coming up, we go through the CPI numbers with Laura Tyson, former director of the National Economic Council and former chair of the Council of Economic Advisors. This is Balance of Power on Bloomberg Television and Radio.
Bow. God bless you, Chad. Good morning. Oh, Moo. Oh, and Bradley Frizzle. Oh, wow. Dang, you said, who do you know here? How you going to play him like that, bro? How you going to play him like that? TTD. I know, bro. That was 1,000%, or we sold too early. I took 100%. That thing would have been, I think it would have been up 2,000-3,000% if you're still holding the TTD. That was a big one. I mean, with the fraternity barrier to entry. Hey, who do you know here, man? Who you know? It's an inside joke. Okay, Moo. Okay. Honestly, Moo, I'm trying to figure out your attendance behavior. I don't understand it. Like, Moo, like, he don't even, like, show up consistently, like, bullish or bearish. He just, like, show up randomly on, like, random-ass days. And then he always got, like, I don't know what it is that, like, you know what I'm saying? It's just hard to explain. I'm trying to figure it out. It's just weird. Up 60. I show up on consolidation traps. Watch out, man. You're going to piss somebody off. You're going to piss somebody. It's not a consolidation trap, bull trap. Bear. Bull. NVIDIA. AMD. Unity. I'm always in here. That's good, man. We love you. God bless you. That's at least consistent. Mumu's like inconsistently consistent. Or consistently inconsistent. I don't even know. Shopify still on the high again. Again, even as a checkup right now, NASDAQ's up 2.6, SPY 1.96, and then Dow 1.5. Oh, Jay Quelix. Oh, did you drop the peach too? I don't know. There's a lot of peaches going around. I went crazy. Yeah, you did too, man. God bless you. God bless you, my friend. And shout out to the call, baby. Oh, yeah, I forgot. NVIDIA. NVIDIA. TTD was 3,000. Yeah. That one was crazy. I sold out at 100% and I was happy, but that was could have been amazing. Apple, we're kind of chilling out again, even though we had that little chill moment after Fed Evans and Euro close. We came up a little bit, but I mean, if we start to break towards VWAP, that's not going to be pretty. It'll probably delay the final rally towards the end of the day, but let's find out what happens here. Baba on the highs, China. Oh, yeah. Even TSM. JD still red, actually. Actually, there's some that are still red, interestingly enough. They're all not going crazy. Any prospects? Same ones. I mean, we talked about it now. Like, I'm cool with the rally. But I'm not going to chase anything into a 18% rally with the yield curve as inverted as it is, and with everybody kind of worried about other things. And again, inflation is still 8.5, so I'm gonna wait. But it's still the same ones: Uber, Airbnb, J.P. Morgan, and even Abivi. We just want to, I want a deal. That's it. I'm in a position now where literally like today, Uber went positive, Netflix. I don't know if you guys realize we're positive on Netflix now. Even one of the accounts has a 12% gain on Netflix. So it's like, I have stuff coming to life. JP Morgan, we're only down 4% now from the beginning. So what I'm looking at is just like, hey, if it rallies from here, I could make a lot of gains back, and then we could even be in good positions on new plays without adding any more capital. So I'm just going to hold my 2 deposits that I have now until I get a deal. Like you go, if Uber gets slashed, Airbnb, JP Morgan, Abivi, we're going to have enough money to sizably take advantage of it. But right now, it's like we were depositing, waiting, we got earnings, we waited a little bit, things are already moving up. It's like we don't need to chase it into the high when now some of our positioning is good. Pretty much, I think every single average down we've made so far should have been up, or at least I know the Ubers are up on the positive on the year. Again, the last JP Morgans we bought, we should be up on those. Again, Netflix, we now have gains on it. So it's just like I'm waiting, but kind of just building out the strength position that we have. The LMT, I think it's dead. Again, I made that one free right before, so that was good timing. But otherwise, we just need global conflict or something to pop it up before then. Otherwise, it's going to be clapped. One share of Ross and Starbucks. Going against the herd just in case they're headed towards a cliff. Well, it's kind of just riding with it. That's what I'm saying is like our long term is in a position where we could just ride it out. If everybody wants to be bullish, hell yeah. But I'm not going to throw any new strong dollars at it, more or less. Right. And even then, if you think about it, dollar's been strong. But if you buy in a lot of things right here, your dollar is about 10-15% weaker than where it was a month or two ago. So that's what I'm saying. Yeah, I know Jay hitting the high dono taker. Thank you for being you, Jay Quelix. What did I do to deserve this, man? God bless you, man. Thank you. Or not. He has been hitting the high ticker. That's it. Just one night he said, I'm going to be the peach. He said, no, I'm going to be the banana. Nah, screw it. I'm going to just say thank you for being you. He just came in there, man. He coming for my neck. Respect, though. Honestly, man, you've had a lot of people come for your neck with the peach, man. There's been a whole 50 accounts of separate peaches. I just said, it's just Bradley is just, no one could catch up to your streak at this point, bro. You are like 190 games in the lead, bro. Or no, like 390 games in the lead, man. Like, I don't even know how to describe it. Peachonomics. I just want to look in your eyes and watch the sunrise. I honestly think I'd make you uncomfortable. Like, if we're being honest about it. Because I got a killer, like, death stare. Like, you know what I'm saying? Like, I genuinely, like, I don't know. I don't know if you would like it. Another escrow. Run it up, baby. Bro. Oh, my gosh. Are you ready? That's why I made that TikTok video yesterday. I made a video with what's his name? With Uncle? Where is it? Oh, bro. It was crazy. It was great. Dang, none of you watched it. TikTok don't even love me anymore. Everywhere just claps me low key. Bro, I made a video on the old house flip, the one I did at the beginning of the year, and the house is sold. The neighbors sold their houses. So remember I told you there was like a really beautiful house that didn't sell right across the street? They sold that one for 4.5, which was low, but then there was a shit box flip that was awful, and it sold for 4.1. And then I saw another one sell for even $1 million. So literally pretty much in the last month, I've seen a lot of random real estate activity just kind of slowly pick up as the market bounced a little bit, more or less. That's 920. Hold on. I get to, if this comment gets picked up, someone's asking me about the negative EPS surprises and why the market, someone's asking me the question that I told you was contradicting everything. So I'm actually kind of excited. But they're saying why, any comments towards why the market is not punishing negative EPS surprises. VIX my bottom. We did dump here, though. We did just come back down to VWAP here. Looks like buying Nvidia was a good move. It was, pretty much like the watch list yesterday was like on point. except for core didn't go up. That's it. So, like, I was expecting headline to come down. I was expecting core to rocket, and that didn't happen. However, again, I mean, if you saw what we said on the plays yesterday, we were just saying if there's anything positive, go for banks and chip stocks, and that it did prove to be just some of the other ones. I mean, other tech did still do really good, but there was some nice moves on that, especially even that we got to react with, to catch any gain. Like we have 200 percenters today, or just one NVIDIA is below that, but off of the market already gapping up like that is pretty good. Let's see Pelosi moved by China, which is a spectacular show of military force. Yeah, the Ukraine war right now, I mean, there is one risk for Ukraine. Right now, it's the Zaporizhzhia plant. That's the only way that we watch a Ukraine thing start to hit the market again. Because I don't know if you guys have seen it. The news on that has been like ramped up. Like if you remember a week and a half ago, 2 weeks ago, they put out a report and they said, Putin is going to try to use that to like scare people. And then like 3 days later, there was another like attack there. And then a bunch of other things have been coming out. And then I think the nuclear heads, I forgot what the organization is called. And then another place, they warned about it. But that's the only thing right now that I personally believe will move markets based out of Ukraine. Otherwise, then that's it. So it's borderline a black swan. It's literally you have to get a nuclear problem. Like, then I don't mean that as adjective. I literally mean like a nuclear plant, having a big issue. I would consider that a black swan. Okay, we're at VWAP. Watch how it plays around here. Let's see, MIRM on the high. Had lunch, checking in with the call. It was a good day. Good CPI day. MIRM, Miriam Pharmaceuticals. They're down 8%, but they're popping here near the top. They had an 80 million stock offering. Oh, really? Oh, that's disgusting. No. Get away from me. Get off of my screen, scammer. They tried to scam you. The email, was that the one in, was it like Redlands, I think? Or not Redlands. I did get it. I'm going to get you a response on that one. I got that one, and then somebody, I don't know if you sent me a house in Texas. I was going to comment on that one, or I was going to get you back an email. SPY needs to hurry up and fly. I mean, you might not get it today. Again, if anything, this is starting to look like one of the CPI days where we don't really sell off. Again, even then, the crate. I don't know if you guys realize how nuts this is. When have you seen a CPR chart look this straight? Like, literally, look at this. Like, you didn't have one sell-off, one bounce, no, not like this is just, you are literally at the price of the first 3 or 4 candles after the release. That's absolutely insane. I do recommend FHA loans, great, just because the 3.5% down. There's some restrictions, but it is great. Historic ramp up today, baby. Oh, yeah. So, even for Colt Real Estate today, Chad, we are going to do it live on the Colt Real Estate channel. So you guys can still join the Zoom call if you want to participate and like actually talk and ask questions and be a part of it. But I know a lot of you guys have been trying to get in or figure out how to get in. Maybe you don't got the commitment level and you just want to lurk in there and you were like, what can I find out? I don't want them to talk. Well, you could listen in on stream today. So that should be a lot of fun. That's going to be 6 p.m. Pacific time. They don't like when you're not on camera. Yeah, bro, they're a big team, man. It's a very personal team, man. They didn't get to 100 million a year in sales off of not, you know what I'm saying? Like they work together. Like they really, DV is getting clapped. Who is that? Double Verify Holdings. DV is getting clapped right now. I'm not seeing anything. Activation leads again. They had strong beat the other day with earnings. They had earnings a couple of days ago that were good. Interesting. That just went green to negative. It's not like it's just a move, but I don't think it's developed anything too nutty yet. 6 p.m. Pacific time for the real estate. It's going to be on Colt Real Estate YouTube channel. Sorry, I'm just typing an essay right now until I see anything go crazy. It's like type, look at news, type, look at news. It's your fault the 2020 election is in my workout playlist. Nope, it's not. That's it. You got to start taking responsibility, man. You got to start taking responsibility. Okay? You know that? Like, you know how many of us call for Powell to take responsibility and we haven't taken responsibility yet? You know what I'm saying? Like, maybe that's the problem. Seems like Netflix turning resistance into support. We will find out. Again, I just like Netflix in general, just where it's at. And don't forget about Disney today, because that's going to be the thing. So, like, Disney will be able to move it. Honestly, Netflix will be more insulated from it. Like, Netflix could probably benefit if Disney doesn't do good in some areas. However, Netflix will also respond a lot to whatever happens there. So, it's holding a very big level. It's pretty much right below the earnings level. It's actually, like, now at the top candle after that gigantor earnings that really, really killed it. What do you think the main things look out for Disney earnings for Netflix? Streaming subscribers in demand. So like that's the thing I don't know how it's going to play out, but thankfully Netflix is still going up. Like I think Disney is expecting 10 million subscribers or like a big addition. So we want to see if the streaming demand, like customer acquisition, whether is this industry wide or did Netflix just drop the ball, right? That's the one thing that can affect it. But I think the better Disney does, the worse it goes for Netflix. But if Disney reports kind of in line with the same performance as Netflix, that'll be good. And then obviously the guidance. If Disney could guide for a strong streaming market, some people may use that to extrapolate, positive guidance for the industry and then what Netflix will do. I'm not going to buy Disney. We have like one share in the long term, but then I have Netflix. So we got a Netflix today. Those went up a little bit. I think they're around 50% now, but it's good. What is the logic behind buying an apartment building if it wouldn't cash flow? What? Did we talk about this the other day? That's so weird. Are you listening to me? I had this conversation with my girlfriend. We didn't talk about that. I don't think we did. Are you my stalker? Did I find you? SNY? Oh, yeah. Sony's, they're being clobbered. Oh, my gosh. That's a big gap down. Sanofi? Dude, that one's big. They're already clapped. I like Netflix more than Disney. Girlfriend alt account. I don't know. Well, yeah, but yeah, appreciation, tax incentives, borrowing it against it. But literally, I had this talk with my girlfriend the other day. I learned this back in the day. My dad taught me this one because I remember I was going to buy a property back in the day, and it was like a beautiful property, but it was rented out. We had a 1.5 year renter in it, and pretty much my mortgage on the property would have been $200 higher than what it was rented out for. So I was like, nah, I don't want this house. And I remember I showed my dad, and in his Arab ass, in full Arab, he was like, no, you crazy, Habibi. Why? What do you mean, $200 loss? You give up the appreciation? I was like, what are you talking about? And he explained to me very simply. He said, you're going to lose $200 a month on that house, right? I said, yeah. And he said, okay, how much money is that? I said, $2,400 a year. He said, okay. And then he said, now how much do you think that house is going to go up in value next year? And I was like, oh, like 150, 200,000 easy. And then he said, okay, what are you tripping about? And then that's when I realized, cash flow is one part of the deal, but you got to be careful because, like, I was actually doing this math on a couple of properties now. That's why I came up with that theory I told you the other day where I was telling you, hey, people are like, oh, big bad recession, but it's like there could be a lot of economic pain if prices simply go back to 2019. That's it. Like, we don't even need to go back down to 2015, 2010. It's like if people buy a bunch of stuff at 2020's prices and then they come down to 2019 prices, you're going to have a lot of people in difficult scenarios. That's like I said, I try to run this calculation on a lot of properties, and normal properties back in the day where like you would have lost like $200 a month, $300 a month on the cash flow, where it's like you still would have had the property, but it wouldn't have cash flow. Now those same properties, it's like $2,000. So I had one property I was looking at, and I could have bought it, and I liked the property a lot. Like, I really, really liked it. It was just more expensive. But then I looked up the rental rates, and I'm like, holy shit! Like, you got to really, really think about it. If I buy this house, I could rent it out. Who cares if I lose a little bit? But then I looked at the math. I would be losing $2,000 a month. Now, instead of a $2,400, we're talking $24,000. And I was just like, that's insane. So, like, and that just shows, that's just if you bought at 2022 and went back to 2019 pricing or even a little higher, it would still be very, very difficult in that environment. But pretty much there is reasons why you can buy a negative yielding property and it could actually be good. I've always thought this was interesting. Equity comes, equity goes, but cash always flows. Amen. I mean, cash flow is very important, and I agree with that. That's where, like, I think a lot of people make the error, like, as of lately in the market. Like, I'm talking stocks now. We've seen biotechs trade below cash value. You've seen companies like even Coinbase, where they've literally, or Robinhood, have had more cash on hand than they are worth. And now a lot of people will make a beginner mistake, more or less, and they'll say, oh, well, if it has more cash on hand, just buy the stock, you're going to win no matter what. And that's actually not the case. Even though it's a good sign if you have more cash than your market value, that's great. But then that means you have to factor in debt, future valuations, and then obviously now future cash flow. So even when we value companies, it's one thing to have equity, it's one thing to have assets, it's one thing to have cash. However, just like Richest Man in Babylon and even like high level, fundamental analysis on companies, cash flow is really, really king when it's all said and done. Because if you're not bringing in money, you could have money today, but you could burn through all of it in the future, and then that's it. Pelosi says will not allow China to isolate. All right, let's listen to some of this, man, so I could just finish up my typing here.
Taiwan was to say,
bro,
that
she looks so good in purple.
Relationship built on
I'm just saying, I'm just being nice. Don't get mad at me. My girlfriend is not that weird.
Really important.
My girlfriend don't care if I say anything about older women, though.
Taiwan Relations
She's kind of
Act
down
of 1979,
in a weird way.
At the same time as our change of recognition, established the terms of our relationship, the 3 U.S.-China joint communiques, and the 6 assurances. So there's no departure from that. But in keeping with that, we will not allow China to isolate Taiwan. They have kept Taiwan from participating in the World Health Organization, other things where Taiwan can make a very valued contribution. And they may keep them from going there, but they're not keeping us from going to Taiwan. We will not allow them to. So we think their reaction, that was our purpose, to salute this thriving democracy. Don't take it from me. Freedom House said one of the freest democracies in the world. Show our respect for that, for the success of their economy, for the enthusiasm of their young people to embrace democracy, and others as well, but the young knowing nothing else except a free Taiwan. So that was our purpose. Their pretext was our visit. for them to do what they normally do, intensified. They didn't do it when the Senate went under Chairman Menendez of the Foreign Relations Committee. They just decided to do it this time. So in any event, we're very proud of our delegation. We're very proud of our men and women in uniform. When I talk about security, whether it was at Travis Air Force Base, whether it was in Hawaii, where we visit with them and went to the Arizona, and then to Guam on our way to get their appraisal of the situation in the region, the Asian Pacific, and also to pay our respects to our men and women in uniform, which we did there and we did in the countries that we visited, especially in Korea and in Japan. And in Korea, we had the privilege, led by the General Lakamura, to go to the DMZ to get an up-to-date current report of the North-South dynamic in Korea. It was interesting to me because I've been to Pyongyang, I've been to North Korea. It's a horrible place, but again, we were seeing where at the border how things were going. So for these and other reasons, we were very honored to be received. We thanked our host of the host countries. We spent a good deal of time in an interparliamentary way in every country with their speakers and that. And again, we thank our embassies and our diplomats who represent us so well and who made our visit such a success. Just close by saying two things. When we were in Japan, we were beautifully welcomed at the Diet. We went there to pay our respects to Prime Minister Abe, who was a friend of America, and they had their tribute. They'll have more, but this one they invited us to. It was very sad, but again, a connection between our two countries. And in closing, I just want to thank our president. He has been a president for peace, for security, for economic growth, for good governance, and we're very proud of his initiative, which was the main purpose of our visit and our timing. With that, I want to yield to our distinguished chair of the Foreign Relations Committee, that's the Senate, the Foreign Affairs Committee, and the place where so much of all of this begins, to praise him for his commitment to our security, our economic success, and good governance in all of the countries that we are engaged with. Mr. Chairman. Gregory Meeks of New York.
I want to thank you, Madam Speaker, for the opportunity to participate in this very important, very substantial, and very successful CODEL. It was important for us to be there in the region. The people of the region wanted to see us there. They understand that part of what is taking place in the world is, as we see from place after place, it's a question of democracy versus an autocratic government. And they want to know that we are partners. And that's why they welcomed us at every stop that we went to, saying thank you for being here, whether it was Taiwan, South Korea, Japan, Singapore, or Malaysia. In Taiwan, we saw people lined up down the streets, over 250,000 people watching our flight land. And then the crowds on the streets saying, thank you for coming. We had the opportunity to talk and to have conversation with various of our legislators, which was really important. And we had to then chat it back and forth on what we're doing. And I had the opportunity as chair of the Foreign Affairs Committee to let them know that we're doing many things, particularly in regards to Taiwan. We've got some bills that were coming out or that have passed already, like the Taiwan Peace and Stability Act. They were interested to know that, like the Taiwan Fellowship Act and the Taiwan Reassurance Act, and provisions supporting the name change of TACRO to the Taiwan Representative Office in the United States. Again, it is not us who want to change the status quo. We see that coming from Beijing. And they were so appreciative that we stood to show that we're going to partner with our friends and allies throughout the region. They all have issues, whether it's the South China Sea or the Taiwan Strait. But they want to know that we are there, and they want to see even our soft power. And that's why the conversation that you see with my fellow members, and they'll talk about whether it's working with our veterans or dealing with climate or dealing with what was historic with reference to chips and exchanges and dealing with manufacturing goods in the United States. I conclude just by saying that, and I thank President Biden also for being in the region. He's visited the region and done another thing. So we're in lockstep with our focus and our message to the people in Southeast Asia that you have a friend, an ally, and a partner in the United States of America. And when you call to ask us to come to visit you, as we did on this trip, we'll be there with you. So with that, I just turn it over to the chair of the Veterans Affairs Committee, Chairman Mark Takano.
Yeah, thank you. Thank you, Mr. Chairman. We kind of call each other Mr. Chairman all the time. When we first became chairman, we were just so thrilled in 2018. Yeah. Mr. Chairman. So good afternoon. I am Mark Takano. I chair the Veterans Affairs Committee, and I was honored to attend this congressional delegation, be a part of the congressional delegation with Speaker Pelosi and our colleagues here today. And while we were abroad, there was interest with our defense security allies and partners. Some are allies and some are partners. Interesting enough, we visited all very, very robust, inspiring democracies. Some of those democracies have a quote-unquote balanced approach with China. They don't really want the United States to force them to choose sides. But interesting enough, even those that don't want to be forced to choose sides are very, very, very interested in the United States being their security partner. They want to, we help them with military armaments and training and training together. And of course, they were interested in what we do with our veterans. I had a long, extensive talk with the defense minister of Malaysia on that topic. I had a chance to speak with, for a second time, with the minister for...
All right, we're good. We are good. Check key. We'd feel... I don't know why it feels like it's a little delayed, but I guess it's the first time Nancy is like saying, yo, this is why I went out here. You know what's up. We affirm our commitment. He did sound like Obama. He did. But yeah, we're chilling now. It is almost 10, so we've actually gone through most of the day. Let me show you this. How we feeling? Chad is still bullish. I mean, I think today was the highest I've ever seen the Chad votes go on bullish. Bro, it was like 3,000 of you guys in the morning. You were 77% green. So, are you ready for this? I have something to show you. It's quite interesting, especially as we compare it to last CPI. But believe it or not, this is a less of a bullish reaction right here than at the same point on the CPI last month, excuse me. But the difference is last month we were down pre-market, but then we rocketed up, whereas today you gapped up 1% pre-market, and then this is just all when the bell moved. So pretty much last CPI, it was about the same size as this. However, you did that move intraday, whereas now most of today's move, literally, you're like 10 points off of the high from where it was. So yeah, there's more upside, but also we are moving. This is a very unique CPI. One, the data is actually good, or again, better. It's awful, but it's better than where any of the other inflation reports have been in the last year almost. But you notice, like, again, most CPIs, it's not a straight shot up and then we hold. So it's a lot more wilder. There's no way Chad was more bullish. No, this was more bullish. Bro, I've never seen that poll get up to 77% on one direction with that many votes. I've never, literally 3,000 of you guys, 70% of the chat. That's 7 out of every 10 chads were like, oh, it's green. Mm-hmm. Last 4 weeks up was anticipating. Well, it was. I mean, it to a degree, it really was. That is the whole debate we've been talking about, where people have been saying, yeah, we think the Fed is going to pivot now that they've raised, think about how much they raised in those two instances. It actually says a lot. Again, they've went up like, 150% or so. So they're able to say that now. And it was. Some people are saying now that we're going to end up here just in the middle because a lot of last 4 weeks was getting ready for this. So some people are arguing that's the case. Yeah, Perigo's getting murdered. Perigo on the low. No one is talking about this. Quad long, hedge eye. Perigo shares up most in 4 weeks. That was 4 minutes ago. No, there's like a Perigo pump piece. That's all I see. Do you see news on Perigo? Literally the latest thing. Only 3 last pieces of news I saw were all bullish. Yeah, no one's even talking about it on Twitter. Perigo is, dude, look for any sympathies. See who's related, but they are getting murdered right now. I don't have Disney. I grabbed a Netflix instead. Honestly, there's not even any like big earnings. There's not even like surprising like moves on the option chain either. So I don't know. Be careful with it. It's moving, but there's no news. They had earnings that were positive, and there's no like crazy 10,000 options coming in at the last second. So we will see. Future expectation. I just think this opens up a window up until September or any of the other data sets. I think in like 2 weeks, pretty much next week, actually, I do have one more event for you, minutes. So CPI minutes or Fed minutes come out next Wednesday. So that could be one, and then PCE will be another, then back to the jobs report, and then back to another CPI, and then back to Powell. Those are like your 5 events here in the next pretty much month. And I think for the most part, we will be bullish. If we could get above 420, that's more bullish, and that's where we need to go up next on the upside. However, if we break below 417, it might put us in a weird purgatory mode, more or less. So now Perigo is getting volume. Our jersey accepted by LinkedIn. We're connected. Let's go, baby. Amen. It's a good guy. Good guy. Phil, Disney, I think, is going to be kind of a little bit of a mix of everything. In the sense it's kind of hard to say, because remember, Netflix did bad. Netflix did better than expected, but they still did bad. But the biggest difference was everybody was already panicked coming into Netflix, right? Netflix got to benefit off of the BS where they were like, oh, we're going to do so bad. We're going to do so bad. We only did half as bad, so now you got to buy us. And that's kind of the difference between Disney and Netflix. I think Disney did have a guide down, but I don't think it was as big. So at least Disney has a little bit more support, more or less. So NVIDIA did the same thing with their guide down, I hope, but that's actually results. But for the most part, yeah. And that's what I was saying. I was like, if the market turns green and anything is good about today, I would go buy NVIDIA because you just got a 12% haircut, and then you're going to have earnings in 2 weeks to catch a run up. And if the market goes, at the very least, at least for NVIDIA's earnings, people are going to look at different things now that it already kind of had to pay the price. And we were just coming off of, like, literally the last 2 days was just back-to-back awful chip news on every single end. So Perigo's bouncing up there. Again, Disney doing its thing. Netflix is killing it. We're up 50% on those plays. That's about it. Netflix, TTD still going down. They're holding up pretty good, though. So that should chill some things out. GC, CHRS, 10%. Had a PDUFA last week. Oh, Roblox. Price target increase to 58 by BTIG. That's literally coming out right now. Like literally at 1 o'clock exactly. I didn't know they got a price target increase by Morgan Stanley too. I know Morgan Stanley was bullish on them. But Roblo, price target increase right now. I don't know if it's going to have an effect, but they just raised it. I can't believe Coinbase was able to hold up. That one was the wild one. Airbnb, I like it. I'm just letting it do its price action and just kind of let it trade out there where I have a safety net ready to catch all of it, but I'm not going to buy it at a price I have the leaps at and at a price that I thought was safer, but it didn't, especially with a bulletproof balance sheet. I don't know, there's market correlation, so I'm just waiting on Airbnb, but I'm bullish as ever on that stock. So Disney, we just talked about it. I think it's going to be harder to put your finger on it than Netflix, but I think whatever they do will affect Netflix, but I'm not too concerned. There could be a surprise. Really, the question is, do people focus on theme parks or do they focus on streaming? And unfortunately, I think they're going to focus on streaming, but if there is any standouts with the parks, that could actually end up being very well, and we'll see how that even factors in to any other travel plays too. Streamer, the bigger business in the future, but that's also where they spend a lot too. But we're going to find out. But really, I'm just trying to see what it does to Netflix. Otherwise, I think it'll kind of do its thing. Roblox September calls. I like Roblox debit spreads. After the ones yesterday, I thought we were going to get clapped on those, but we didn't. I mean, we got clapped after the earnings, but I just, like, on the run-ups, you could take advantage of the debit spreads very, very good. Ten-year note draws 2.75, allotted at high 63. So a bond auction coming in. Chewy, I haven't looked at it in a while, honestly. It's kind of hard to say. Yeah, Unity doing its thing. TTD, TTD is still killing it. Ason, Snow. Where's the bank stocks? Good for you. Good for you. And then NVIDIA still to the moon? Almost. Ten-year ACAM 1.3. I think they got a price target decrease, though, this morning. Have we had any updates on their buyout? That's the key. I got September NVIDIA calls in the morning. Stagflation, rise, fall, angel risk, Fitch ratings. They said stagflation will increase fall in angel risk for Latin American corporates. Honestly, that's something I haven't heard a lot of today. I'm surprised a lot more people haven't brought up stagflation because now we have slowing data and inflation's coming down. But if it doesn't come down enough and then the economy keeps slowing and then the wages keep going up, it is going to play out a little differently. Grove resumed. Devin strong. Intel was on fire most of the day. Microchip companies will benefit from the act in the long term. I think there's going to be some winners and losers. I mean, any money and funding they could get will be good, but my whole problem with the chip bill is that we've talked about it for 2 years, 18 months. So it's very hard to put your finger on it, but definitely going to be some winners and losers off of it. I think the odds of a couple of chip makers disproportionately gaining more than the rest, I think that's more likely than not. Where I think Nvidia Micron or Intel, I think they might benefit from it like tremendously, and then everybody else, it's just like maybe it opens up a little bit of the funding doors for them, but that's about it. Who are the smallest chip makers? I don't know, actually. Who would be the smallest, like, publicly traded chip maker? That's a good question. Who's, like, actually, like, the smallest, like, biggest one, if that makes sense? Roblo just got a price target that came in a little bit ago. I like it. I wonder what the plays are at. I was saying with the September's, like, I think if you sold, what would that be? Like $60 a contract with $5 max gain. Is Magna Chip? I feel like that sounds familiar. Keebler? Or maybe Global Foundries. Amara's going parabolic right now. So coin's chilling out. 15%. And that's day 2 off of the earnings, right? That's actually interesting because I'm surprised even Coinbase went up. And then Michael Burry says he said show up and vote and make the midterms a bloodbath for Democrats. Damn, Michael Burry. If I retweet it, do I get put on a watch list? Or no, how does that work? What happens to my social credit score? I'm down. Goldman Sachs Future Planet Equity ETF. Like, we think the future cash flow of the moon, tremendous value in the long run. Peri. P-E-R-I. What's this? Perio Networks up 6. X, again, all the materials killing it. ALB on the high. I have a 120 leap and then a 135 or a 140 and a 145 and a 185. PRGO coming down again. Google calls. Rivian thoughts. Or Rivian I don't care about. I don't think I'd be care. It could pop. It could pop really big, but I'm not really interested in Rivian. I'm still, again, the market is a very weird place right now. And I mean, I hope my comment gets picked up for this, like, it's like a Business Insider thing, but I really hope it does, because it's the thing I've hated the most this earnings season is just all the contradictions. So it's like, with forward, like, long duration stocks and high PE, it's very hard to see what is going to make them go up or not. Again, even if you have a good report or not, it really just depends on how low they guided, if they had a really low guide or not. So what I'm saying is, like, I don't really care for Rivian, and I don't think it's like, I don't see opportunity there, but I do think that any sort of earnings move with it could cause it to massively move, just because if the guidance is low and they miss, it'll die. And if it doesn't, it could cause a squeeze simply because even if it does bad, just like net, they could find a way to go up, which is hilarious. So I think it could move, but I don't have any real outlook on it, if that makes sense. So hopefully that answers your question. Size from Tesla, Ford the best EV play. I'm with you. I really like the Roblox out there, but again, it needs to get a little bit more green. Josh is mad is Tesla didn't come with the grill inside. Honestly, that grill is super cool. That's like one of those features that I'm like, yo, that's so cool. This car has a grill, but it's like I would never use it. I would use it once. And then now, bro, I just can't help, bro. I drive around and I see Rivians in California, and I'm not going to lie to you. I judge them. I judge the people driving the cars. Honestly, I pray to the Lord. I say, Lord, forgive me. I hope my judgment on people does not fall back on me. But I said, Lord, how in the hell did these people pay the same amount of money for that truck as a G-Wagon? I said, Lord, just forgive them for they know not what they do. But I still don't get it. That's what I'm saying. At least the Tesla is still expensive but affordable to a degree. But I'll never get that, man. Yeah, man, look for it. God bless you. G-Wop, G-Wop, Guap. Rivian headlight. I think the car looked cool. I think the car looks really cool and honestly, I said that in front of my girlfriend and my girlfriend was like, what? If they like the car and they want to spend their money and have fun, why are you I was like, damn, you're right. I feel you. I was like, if the car really, if you enjoy it and go outdoors and I don't know, whatever. I don't know what the hell you're supposed to do with the Rivian, but maybe it brings joy and excitement. Then you could do it. But otherwise, the car itself, I think it looks cool, but that price point, I don't get it. Rivian is cheaper than a G-Wagon, not on the real market. So if you want to order it and wait 17 years, you could get it at that price. But most of the Rivians are 150 to 200 on the secondary market, which is wicked to think about. We'll see. I'll check it in a little bit, but let's first, before we do anything, let's get to our Lambo index. It's at 392. I think yesterday, wasn't it at 398? So it came down, shot up, and then came down again. Okay. Look at that posture. Hey, man, thank you. We got to do our posture. Let me just check these Rivians out. Yeah. So the cheapest one for a used Rivian, 118. That's cheaper than a G-Wagon, 120. But for reference, I will tell you, Roblox go green, SPY's coming up. Yeah, Roblox, it might want to. I think the premiums are cheaper than earlier. Again, that debit spread already went up 10-20% actually. Cost starting to fade. Yeah, Roblox, again, I like it. I don't know, maybe a short term could be good. Do 30. It's really, really small. Roblox news of raised target. Fake or verified? No, that's real. That's straight from I think it was BTIG, and then Morgan Stanley also gave a price target increase to Roblox as well too. So that's why we had it there early. But yeah, literally Roblo price target increase to 58 by BTIG, and then Morgan Stanley 32. Oh wait, Upstart's on the high again. ANET. But yeah, I guess they're at 120. They were cheap. I mean, last time I checked for Rivians, the cheapest one was $140,000 for a used one. So honestly, the prices have came down a little bit, but I'm still like kind of shocked by it. But I mean, for reference, the G-Wagon was like 160 or 170. But that's why I'm like, bro, this is crazy. Yeah, I guess the highest here is like 130. They did come down a little bit. That's good. Good work, Rivian. Good work. That's still mind-blowing. I guess they're not as expensive as I thought. The car looked clean, though. I like how it looks, but just, you give it to me 60,000, 50,000, 20,000. I take it. I take it. Hummer EV like 250. Yeah, but that shit could crab walk. You see what I'm saying? We're not like, come on. Just like, come on. No, Hummer looks cool, but yeah, it is. It's actually extreme. I would never pay that for the Hummer EV. Tell them I just want that Camry. Amen. Amen. Wait, Ted. Well, NVIDIA's up a lot. I mean, we're up at least 50, 60% on the place from earlier this morning. Good day, my friend. Not checked any scanner plays, no. On auto auction, they have a Rivian that sold 120. Yeah, it's a lot. I mean, but it was crazy at the beginning of the year. At the beginning of the year, those Rivians were going for 150 and 180. That's why I was like, how is anybody? They have came down, kind of like the Lambo index. That's a lot more cheaper Rivians than I've seen in the last 6 months. Come on, Tessie. Is it popping back up here? It wants to break out. It's back up to 3. Remember, they were up 5 or 6 in the morning, and then sold out. Deflation, well, probably sooner than not. That's what I was saying with that one theory where it's like if prices go down to 2019, that deflation would make it even that much more interesting. Lander up 27. See about prices coming down. That's why I say, like, even if you bought it at a high price and it just came back down to the normal price of 2020, 2019, there will be an economic effect. That will be the deflation thing that makes things very, very problematic. So someone just sent me this. Here's all the Rivians sold. I think these are auctions. So these are like car auctions sold. So I guess they don't sell for that crazy, but these are all, I think, July. Damn, bro, this is all just in July. They're selling for like 110, the highest 121, and then the lowest 101, or 95,000 for the lowest. And then this is the most expensive with a launch edition. I'll sell you my Rivian. I'm good, man. I don't know if you heard the conversation. I'm not really too interested in that vehicle. But I feel you. I feel you. UNG again. Let's do Section 179. Oh, no. Be careful. Even though you are the IRS account, be very careful with Section 179 next year. Even this year. There's a new trick, but I'm not putting it out because once we put it out, everyone's going to copy it on TikTok, and then it's going to get exposed. But Section 179, if you don't use it the right, like, they're going to be very, very strict on it. Yeah, the new UPS trucks, kind of dope, kind of awkward. Honestly, it kind of looks like me in a weird way. It kind of looks like I'm looking in a mirror. What's the lowest you'd seek your Lambo? I sold my Lambo like 8 months ago. At the beginning of the year, I top ticked that shit. Kind of dope, kind of awkward. Reminds me of myself, right? Am I right? You know what I'm saying? Hey, man. IG the best, or my email. I have all of the breakdowns. So like we have a lot. I don't know. Do you guys want to go through them all? I have all of the pictures from this morning. So here's every single like important one, more or less. So this is just showing you the impact of gas and all of the other stuff. That was another one. Then we talked about the diffusion index, where this time around only 73% of items went up, or 72 as opposed to 74. And then rent versus shelter, at least core services excluding rent and shelter chilled out, but rent didn't go too crazy. And then again, eggs or fuel oil, we went over all the big ones that have declined. Again, here's the breakdown for the items. And then, now I messed it up. And then here's what increased the most. Again, it was eggs. Eggs went up the most in the last month, believe it or not. And then which one was this one? This was shelter versus average hourly earnings. So that's what people were talking about with this is going to be the interesting part because wages are still outpacing it. Bro, Stifle, Roblox, another price target increase. I don't know if it'll break it out, but Roblo got another one. And then here's just the final distribution of the entire CPI. Again, you see energy went down a lot. And then services, it still went up, but it's like barely. You see what I'm saying? So that's at least good compared to the stair stepper we were watching earlier. FIR Airbnb right now, what does that mean? Ford or Airbnb? I would just wait. I don't know what your positioning is at, but it's like, you please do not be FOMO. If it's long-term, if you're trying to trade it, fucking go after whatever you want. But if you're asking me for the long-term and you already have exposure to some of these plays, there's no point of chasing anything right now when you're not getting a deal. Just like, especially with just considering the uncertainty. It's like, I would take these prices if there wasn't a lot of uncertainty in the future. But with uncertainty still extremely elevated, it doesn't really make sense. Airbnb's not clapped. That's just my thing. I don't know. Volander's up 50. I remember we still have that from a while ago. Maybe Elon was like, okay, we'll come back. No news, but it is up 50. You're not buying LT. What about? I would contribute and save it. I'm just holding the cash because literally after saving up 2 months of deposits, I wanted to buy stuff, but the market kept moving. And then the earnings, I wasn't going to chase anything because now I finally have plays we bought this year that went up. So like JP Morgan is more expensive than the last time we bought it. Netflix is more expensive than the last time we bought it. Uber is more expensive than the last time we bought it. And Airbnb is roughly around the same price or a little bit lower. A little bit lower than where we bought it, but not by much considering how much lower it was at the peak. So that's why it's like I'm just holding, but even in 2 months of waiting on those deposits, I'm literally only 5% of my portfolio in cash. So it's not as if, again, that's like the whole point I'm saying is that If you have like 10% or less of cash, I would keep waiting, and there's no problem with that because it's not as if, and if you have big exposure, it's not like the other stuff is going to clap you. So it's like we're kind of in a good position, best of both worlds, and that's how I'm viewing it. 3 price target upgrades after terrible earnings. Bro, Wall Street is psycho. It's just a giant, it's like, dude, it's just stupid. Like, there's no other way I could explain it to you. It's whatever they want. Like, that's it. After the Airbnb fiasco, there's no question about it. Like, that's it. Like, Roblo is awful. I love Roblox. I have $50,000 of this stock, and I love it. And even I'm offended after that. Like, literally, like, it's that's it. It just, it means nothing. But unfortunately, if enough people get behind it and run it up, I mean, that seems to be the case until reality sets in. But it's just like that was a bad earnings, and then you have 3 price target increases. Airbnb does 4 quarters of a row in beating and guiding up, and then they get 5-10 price target decreases in a row. So I don't know what to tell you, except for it's whatever they feel and whatever kind of meets the agenda from it. But that's it. Like, that's it. That's it. Airbnb didn't play the Wall Street Club. Seems like it, man. But it's funny because you're watching. I hope you see my reaction on 2 stocks that I like, because that's what this should highlight to you. Yo, bro, this is actually kind of BS. Because, again, I love Airbnb, I love Roblox, but the same reaction, I'm just like, wow, it's mind-blowing how people are treating these companies, because people are skimming over the earnings, and then they're just going for whatever consensus is aligning with. Everybody overlooked all of the bad with Roblox just to say, yeah, 1 quarter's good, and then they overlooked all of the good with Airbnb just to say, well, maybe demand drops, maybe we should lower it, and then that's it. And then everybody goes to work on Twitter and says, oh, this stock sucks. This one's good. This is there. And then people position with that. Still sounds like you're upset. Let's not call it upset. I think it was very eye-opening, and it has motivated me. If that makes sense. It made me, like, I got to learn some things already about it. It made me research more. It made me dive deeper into it. Literally, I just wrote a whole couple paragraphs there for even Business Insider talking about this. I hope they publish it. We'll find out. But literally, like, it is a fascinating concept. Again, there's even a FactSet article, like, going over data. Like, people are going over data now. Like, it's just like, well, this doesn't make sense. That's why I wouldn't say I'm not heated about it as much as I am like, whoa, like, yo, there's a gap here, and we need to look into it. And it's really motivated me to kind of figure out now how they're positioning the chess pieces more or less. Damn, ad clap. Do you address people as Chad on the article? I didn't have a chance to, but I talked a bunch of shit about analysts. That's what I said. I even brought it up. I brought up Airbnb. I brought up Net because they sent me an article talking about Amazon and Netflix and EPS misses, but the stock going up. Again, like, they're trying to figure this out. Like, I'm not the only one who's noticed it, and I'm very glad that some people are seeing it, but it's just, I just said it's tomfoolery. It's not, I forgot what I said. I said something a little more scathing, but that's it. They talk it down so they could buy it. It doesn't matter. I mean, like I'm saying, at this point, just pay attention to it. But, that's why I'm saving some of this cash. You know what I'm saying? I'm not going like too crazy about it, because I just know the correlation of the market is high. And if something could fall out of favor for a really obscure reason, and that being said, now I want to make sure I'm good, because otherwise I would have been buying the shit out of Airbnb. That was a solid report, but how they're playing it was just weird. A podcast, send it to me. Send me the info. I never got that. Let me know like what it is. If they have anything they want to talk about, or like questions too. That's usually like, again, most of the people like any of the reporters, they'll usually either send me an article and then they'll send me like 1 question or 10 questions and ask for an answer. But give me details. I'm down. I just got to look into it. From the first interview, we'll take a look. We'll take a look. Disney, I don't know what it's pricing in. Let's find out. Again, Valander going crazy. Disney. Disney, $6.40, $6.80. So about 5 or 6%. Good show. God bless you, my friend. God bless you. Thank you. Come on, market, do something. Bro, this is a wild Look at this. Straight line CPI. Honestly, if this was like a chart for a hospital, you'd be low-key dead. But it's still like, we're flatlining at the high. I don't know. This definitely a unique reaction. So I hope you all notice that this is one of your most just very, very different CPIs that we've gotten in the last like 10 months, which is, again, not only the number, but even the market reaction. It's like chop, but it's not it could be more choppy. It's just like, it's weird. You're like right below the key support level or the resistance at 420, and then you're right above 417. Yo, for real though, man. Wow, this meme is actually so accurate. This is so accurate. Mario inflation is 8.5. It's 8.5. For real though. That's a good one. Again, like I've been trying to find a way to describe it today. It's just today was the least worst data you've gotten in 10 months. That's it. It's like, dude, imagine like the first month number 1, they're like, hey, man, you're going to go broke. Sorry. Month number 2, they're like, yeah, you're going to lose your job. My bad. They're like, oh, you about to lose your house next. I hate to tell you this, but you got COVID and monkeypox at the same time. You know what I'm saying? And then, like, 8 months late, after all of this bad news, they're like, hey, man, you just crashed your car, but everything else was worse. So maybe that's a positive. You might be like, things are looking up. Things are looking up. You know what I'm saying? It was the best, worst data we've gotten in the last 10 months. Like, literally, like, in 10 months. That's the crazy part about it. SPY's selling off a little bit. Hurley, I can't stay all day. God bless you. You have a good day, Jorge. God bless you, my friend. I'm busy making plays and just waiting to get the push. Amen. From now on, all stocks will just pump to the moon except Airbnb. Maybe. Where did cult comedy go? I've been trying to tell you this for the longest time. Y'all don't realize how volatile the stock market is, man. Y'all fucking, like, that's what I'm just saying. Y'all will love this shit when it's all going good. And then this is why I've literally been around for so long. Because that's it. There's like an influx. Everybody's like, I love this shit, bro. I'm going to make an account. I'm going to make this. I'm going to do this. I'm going to do, I love it. And then that's it. Just give me 3 months of volatility, bro. And then you're going to be like, nah, I'm going to just like, life changes, bro. Life changes. But they still doing good, I think. I think cult comedy is still in the game. But they've that's it. The volatility fade, bro. reversal, it's possible, but it depends. Again, you have data tomorrow. You have PPI, but I think Friday you're going to get the final move above. If we can't get above 420, I think the real big one happens after consumer expectations drop. If those drop, then that'll be good. Long-term ad or holding, I'm still holding cash. We've talked about it a lot. I'm like excited to hold cash right now. Again, our latest purchases are going up right now. We're up on some things. We're fully invested. Again, even after 2 deposits, I only have I only have 6% or 5% of cash. So I'm actually really excited, believe it or not. And I really encourage you, if you have a low cash balance, but you got to stack up a little bit, I would not really give too much into the FOMO. And what I mean by that is that if you're in a good position, give yourself a good position. That's it. Don't fuck it up by wasting the cash if there's not a good deal. And that's kind of how I'm looking at it pretty much, where it's like unless I'm going to get Airbnb at the low hundreds or below that, unless I'm going to get Uber back below the price I bought it at. You know, I need Uber at like $25, $26, JP Morgan at like 115, 113-ish. It's like, and if I'm not getting these deals, then I might as well ride it out, let them go positive, do our thing. We're fully invested. And then I got all of this cash sitting. So no matter what happens, we will be able to be positioned for it. PCE, I believe, is going to be in 2 weeks. And then next week, even next Wednesday, you are going to have the Fed minutes, which will be another catalyst. Commodities are still heading back up a little bit, and they can go a little crazy. Okay, I need to go to the bathroom, my friends. I love you. Follow me on Instagram.
I think you're going to hear a lot
Fraternity.
of them say, as Charlie Evans did today, that they are not done. They are going to keep going. And then the question becomes, well, where do they stop? And Evans told you that he's willing to look at 3.5% as a point where they might stop. So that's a full percentage point higher than we are now. And it means that they're going to have a couple of meetings, at least, where they're raising rates ahead in September, maybe November and December. And depending on how they break that up, we could be seeing rising rates into the end of the year. But we'll see what happens with the data between now and then.
Mike McKee, a very important day for CPI and the markets, a more important day for us and you, because it's your birthday.
Thank you very much. Unfortunately, my age keeps inflating.
Well, disinflation on that part all round, certainly from a mental perspective. Mike McKee, what a legend he is. We thank him for staying a little bit later for us on his birthday. Meanwhile, let's take a look now at the market impact. The Bloomberg's macro man is Cameron Kreis. Cameron, you've got some great notes out today, really trying to put this into context. You, in many ways, Cameron, say that the market reaction was pretty obvious, and so too was, well, the reading overall. But what now of the Federal Reserve? We're hearing from Mike saying, look, Jay Powell can't get too enthusiastic yet. Is this compelling evidence from your perspective of a moderation in inflation?
Well, no, because it's only one data point. And as Mike said, we don't know what the future holds. Just from a statistical perspective, you certainly need more than one observation to render some sort of definitive, or shall we say, compelling judgment. I mean, if you want to look on the sour side of things, the Cleveland Fed's median CPI, which basically lines up every single piece of stuff in the CPI index and ranks them
this guy,
from the top
Cameron
to the bottom,
Kreis, is pretty crazy.
That reached a new high.
I like him.
6.2% year on year.
I've never heard him. I've only read him. It sounds so weird listening to him.
From 0.7 to 0.5, but even on an annualized run rate, 0.5 is still sort of 6%. So that is way above what anyone would consider to be price stability, or where the Fed needs inflation to go.
So as we continue to chew on all these data points, Cameron, I saw you write today that you're interested in looking ahead to the next retail sales reading. How come?
Yeah, well, I mean, one of the issues, along with the unit labor cost issue that Caroline alluded to earlier, is consumption. Yes, we have these supply constraints from COVID, but there's also a demand component, which is nominal spending from the consumer. So That was one of the big drivers of inflation really over the last year. But there's obviously last month, there was this windfall from lower gasoline prices, which represents a positive income shock for consumers. And the question is, do they save it or do they spend it on other stuff?
I'm just running debit spreads to see if there's anything cheap.
The sort of inflationary impetus or impulse. But if they spend it on other stuff, then that would suggest that some of the underlying causes of this inflation
Roblox again, bro. We were having all of those
intact.
price target
so
upgrades.
We kind of need to see whether it's pocketed or whether it's deployed in other stuff, goods and services other than gasoline.
And Cameron, I mean, I just think back to the abrupt market move that we had on Friday to what was good news means bad news on the Labour front, and then today the reversal, swift to good news is good news. Are we going to have more volatile markets in this respect? Are we seeing some sort of short
the debit
squeeze
spreads
at the
suck
moment,
on
and
it,
will
honestly.
it be sustained?
The answer to both of those in sort of the medium term.
No, we have not had a PHILO yet. Upstart, Tesla, hallelujah, hallelujah, hallelujah. It sucks. I kind of want a Roblox play. I've been looking at it for a while here ever since that first update, but it's just like, it's kind of a shitty chain. Like 52 to sell to maybe 55, 56. That one's a little better. To 55. That one's not bad, but it's still further out the money. Okay, scammers. All right. I did it. I grabbed next week 52, sell the 55s. But they were like 38 cents a pop. 37, 36. I'm going to send you the link to your email full of positivity. Appreciate when you talk spirituality. Help me escape many demons. Amen, bro. And don't underestimate the impact yourself has had on that, my friend. That one, I don't like the Roblo as much. I just like it's cheap with a little bit of upside, but if it goes crazy. So buy the 52, sell the 55. Market is waiting for something. Amen. Amen. I think it's just waiting to get till tomorrow, and then, I haven't even checked Fed futures. Let's check. 22, it dropped. It was up a little higher. The yield curve did not move as much as yesterday, too. Yesterday's PHILO's already affected my today. Amen. Different world now. Amen. Amen, my friends. Well, I guess we should have some fun. I mean, every day the bigger moves happen overnight. This, data Friday, but I think it's already set. It's already, what has happened has already happened. This fun is brought to you by Tesla. Indeed. Oh, ladies and gentlemen, boys and girls, y'all kept talking about it. Y'all were like, Josh, I love PHILO. Thank you for PHILO. I'm so positive today. Y'all know it's all about the positivity, so we had to come with it. So I hope you're ready for this one. This one is going to be short and sweet. Again, I don't care what you believe, and I mean that in the sense that I do not think it will get in the way of you finding a benefit off of this if you have an open mind to listen. But today is very simple, man. I'm just going to share with you something I heard from TD Jakes the other day. And honestly, I haven't even been getting to listen to that much TD Jakes. And like, this one really stuck out to me. But I'm just going to give you the simple punchline that really, really stuck out to me. And I hope it hits you the same way. Yeah, the Oracle one, that was this morning. We called that one out, but it didn't move much. But I really, really like what he said, and really the base concept here is where you're supposed to be building right now and what you should be working on. And why I liked it is because it really did stick out with a lot of what we've been talking about, and it really falls in line with defense. Defense. Oh, amen. So here it is, chat. I'm going to give it to you very, very simple. This is the quote that really, really stuck out to me. Don't give up what you have trying to get to what you want. That's it. Very, very simple. This is the message. This is the basic one. It is saying, where should you be focusing right now? I know you're thinking about the next move, and you should be, honestly. And that there's nothing wrong with that. And aiming high, again, whether we're talking positivity, down to business, down to trading, whatever it may be. But that's why, again, we've talked so much about defense. I'm glad this one, I think you guys, you hit the same way, where it's like, wow, it's just a great reminder, man. Do not give up what you have to get where you are going. That's it. Again, the bird in the hand and being smart about it. But this is what he said. This was the title of his whole sermon. It was about building what remains and strengthening what remains. And that is the main point of all of this right now. Every single one of you should be planning your financial futures. You should be seeing where you want to go. Some people, they're like, oh, I don't know. This business isn't working out. I want to get into this, or I want to get into full-time trading. Again, don't give up your current income until you get the other thing there. Do not give it up. But what the whole thing is right now is focusing on what you have remaining and what is doing good and where you have strength in your life right now. Why? Because that is the basic theme of a lot of stories in the Bible. I don't know if y'all feel me. Do you know that, right? Yeah, the remnants, baby. Amen. But that's it, for real. Like, do you guys realize that like a common theme in the Bible is very, very simple? Like, honestly, it's a bunch of people. They have some spiritual interaction, whatever it is, but it's all about using whatever was left to go and do something bigger. That's why they say the word is very humbling. That's why they say the stone that the builders rejected will be the cornerstone. This is why. It's not saying, yo, yeah, they rejected you, but you got to go now and pivot in the 4 directions, and then you got to build up there, and then they won't reject you. No, it's saying they will reject you, but you will still become the cornerstone. So I like what he said a lot, man. And I think in the lessons and elements of what we got here, I think it's very, very important to really just say, hey, focus on what you got going on right now and make sure you strengthen whatever is remaining. Yeah, that's a quote from the sermon. Lucky Jay, he said it. And I hope this hits you guys the same way. Don't give up 80% trying to get that 20%. Oh, come on. Don't give up the 80% trying to get that 20%. So you see what I'm saying, Chad? You see what Mr. Jakes is saying? I love it. I really, really love it. Because the plan right now, the game plan, moving forward, playing defense, making sure that you are going to be good at this, it is strengthening the 80% that you have. Because a lot of people, it's easy to look at what you don't have. Simple as that. Somebody posted on the watch list yesterday. Shout out to Billy. He said, it was a Josh quote apparently. He said, Josh once said that instead of focusing on what you don't have, focus on all the things that you have that you didn't deserve. And now, it kind of relates, but what we're talking about here now is just literally you got something left. There is still something you may not realize. You're like, oh, I don't have this. I don't have that. I don't have this. Oh, it's like this could be like that. That's fine. You only see what you don't have because that small 20%, I mean, it stands out. It's a big number when you're not looking at everything else. Honestly, 20% could feel like the whole world if you are constantly ignoring what you have. Trust me. So that 80%, Chad, whatever you have remaining, whatever is doing good, whatever skill, whatever talent you have, bro, the relationships, the connections, whatever you have left, you should be strengthening right now. Do not give up the 80% to go for the thing that you don't have. You see what I'm saying? Imagine people panicking and you're like, oh, wow, I got 80% of my boat left. But you're like, oh, there's a storm. So let me abandon the boat to go find the 20% of the parts that I need, when it's like, no, bro. I would just batten down the hatches and strengthen that boat that's missing 20%. Because if you could get that strengthened and you utilize that, I bet you that's where a miracle is going to come from more often than not. So, Chad, very, very simple. Strengthen what you got. Don't give up what you have trying to get where you're going. And it's very, very simple. This is defense, but this is also looking ahead. This is implying we're going somewhere. This is implying you still have a future. This is implying a lot of things moving forward, but it's saying use a little wisdom and discretion now to really take account of what you got and what really has been working and what hasn't, but don't give up the thing that is actually there and what is still remaining, and be cautious to take for granted what you still have stable when a lot of things aren't being stable. So, Chad, I hope this hits you the same way it hit me. It got me very excited. And it's another one, man. It's, I don't know, it could kind of flip this switch in you for real. Because it's like, wow, I do have a lot more. I have a lot more than I realized. And, actually, strengthening now instead of trying to find something new and trying to go out and do this. I actually think there's a lot in there, man. And it really just tells you, man, keep going. I know some people, I feel like every month everybody was already willing, ready to quit. Everybody was already dealing with a lot of stuff. It don't matter if it was here or around the world, man. It's just like every month after month after month. But hopefully this could be a reminder, instead of focusing on the other things, there's something still left. And if you could strengthen what you got, oh, man. God is good, baby. So I hope you're ready, and I hope you take that to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on that video. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the Nightly Watch and main channel. First link for the Scream Alerts boot camp and real estate costs. Follow me on Instagram at The Trading Fraternity. God bless you. We love you. Shout out to Chad. Let's go. Let's get a nice back-to-back here. You know what I'm saying? Let's get a nice back-to-back here. Amen. Amen. Yeah.
Go music. Benny, yo, Benny, you bullish. But baby, I'm not from Chicago. Heard me talking about Ivy and dripping in bad. They thought that I came from the hospital. No, I just came back from trading. Just to the sun, no vacations. I'm really not trying to be flagrant when I tell you that most of my calls will be naked. Funny when I make a bad play, I get a standing ovation. It's like I'm addicted to antibiotics to try to get rid of this clap. But fuck it, I always come back in the AM. To the GG, what's that stand for? I am not a drug dealer, I'm a landlord. All my tenants see the roof, that Mercedes-Benz don't need one. I went from Bailey to Bel Air, from the slums to the Ville to the top of the hill to a street where you can't park a car without parking pass. I'm just trying to chill with my boys in the island off the coast, bar hopping like it's Alcatraz. Watching me moves like a salsa class. Plus I got so many bars like the women in church, I already know you can't handle it. You ain't making moves, you a mannequin. You ain't got that flame, that candlestick.
They ain't got that flame. Tell them it's a code, not a game. Walk through the mud and the rain, just bring a little hope to the people in pain. I don't want lies, I want honesty. Negative vibes bother me. Stay up on your grind until you make it out of poverty. You ready? I'm ready. Let's get it, my bag on heavy. I'm zoom to Fetty. My pockets look full, not empty. You loaded, I'm loaded. We never gon' fold, you know it. That's fast right there, go quote it. It's coke, we goated. Different level, it's level, untold. They watching, we popping like options. You know, it's real, it's really real. Like PHILO time. Cause you can't help but make a meal if your people blind. Restless, cause I've been up grinding, I just want the Lexus. Cooking up like I'm making breakfast. Oh, I'm eating good, but you know I had to bless it. Looked inside the mirror, told my demons hit the exit.
That was Benny, that was level. Fuck the demons, fuck the devil. Throw the pebble, be successful. You can't tell me code ain't special. I got rich, I made a stencil like a chair. It's really simple, the framework is intellectual. Ay, like Curry on the chain, my brother, you know wait. I know you know the name, you ain't never seen my face. Probably watch us in the game, did it with a couple plays. Let me kick a little lesson, you ain't never get a chase. What's yours, you always get what I'm really trying to say. Longer that you in the stock, more that it's getting safe. You like to shit I say, I ain't trying to make it stay. Hey, I'm hitting plays, I'm hitting weights. Your portfolio all day, smiles filled with mostly grace. Apple, Amazon, and Facebook. You probably know the names, you probably thought that you should wait, then went and bought a course to trade. Benny, get some clothes and buy to close this shit. Clap them if they talking on some hopeless shit. Cause I've been there and going back. I told y'all that I'm focusing. I know they getting mad. The news is fair as well as motivated. Let's go, and a shout out to the vets. Hit the players, then we sending in the jets. Don't be shy, you could send a pray request. And the list got everything you missed. Love y'all, baby. It's a cup. 2020. Talk to me in 2030.
You know what it is, baby. Cold music, 2020. We coming, watch out. On the radar. Tell them I just want the Lexus. We out here making moves, baby. Let's go.
Yo, you like this one? Yeah. Chain core supply, you could call that thing crypto. Strategy, EDM, buy when it dips slow. Hands made the diamonds for I got it on my wrist, bro. Did it for my family and what matters like a Winslow. Why you down my guy? Because my buddy hit my pistol. Stop it, why you lying? Why you talking all that shit, bro? Only way I'm not dope if you looking for some crystal. I got condos. Uncle, baby, we are back. Ladies and gentlemen, on your first time in 10 months where CPI has gone down, the market is gone up and is extremely bullish, and we are pinned from the CPI release. But we are now back. We have had PHILO. We've got to listen to Fed Evans. We still got Kashkari on the way. You got to hear from Gina Raimondo, head secretary or United States, trade secretary? One of those things, or economic, I don't know, Raimondo. But we got a lot there today, but it seems like we haven't moved much, but it has been a very, very big move, and we are right below all those levels. And now you are hyped, and you know to keep building and strengthen what you got, baby. So welcome back. Welcome back. We're glad you're here, my friend. Jacobs Engineering Pop. It's Jay. Jacob Engineer. Damn, 2%. Fed may want more evidence of inflation slowdown. Is that our Wall Street Journal leak? You know that. You know they have, like, the guy, like, so anytime you see anything from the Wall Street Journal regarding the Fed, if it's from their, like, Fed editor guy, pay attention, because that, like, there's, like, a joke that pretty much they always get it first, and that they always kind of, like, have the leak more or less. So that's why literally I'm going to check Fed futures after any Wall Street Journal Fed statement. Always. Yeah, it's like a direct link to the Fed more or less. So that one's interesting. Fed futures, they went up after Evans came down, but we're kind of in the middle. The yield curve is just getting weird. Again, it's starting to come back. Someone asked if TLT is snitching. It's not snitching, but it's definitely odd. Again, the fact that all the other yields have came down today, and there was a nice one, but to watch the long end kind of increase, it's good. I mean, technically this is curve steepening more or less, but now it's starting to fade, so it's going to leave things a little weird. But pretty much as with SHI moving as much as it is, TLT is going to be very hard to read. But pay attention to see if we unwind any of this, and really, you want to just watch to see if the yield curve reinverts, back to what it was in the morning. Ukraine Finance Ministry says debt freeze deal is a testament to investors' willingness to support Ukraine. That's very weird for the financial world, man, honestly. You're living in a world where two countries, honestly, I don't think we've ever seen this before, where you have one country had the money in an account to pay the bonds, and the world refused to accept it and forced them into default. And then the other country couldn't pay, and all of the investors were willing to push it back and not consider it a default. That's if that doesn't show, like, that's perception in finance right there, and that's actually wild. But that did happen here today. It's just weird. It's just a new world, bro. You live in a whole new world filled with inflation and the rates. Powell will tell us no, the market goes. Now I'm in a bull market pivot. Thank you. That's like Aladdin if he grew up in a weird financial modern monetary theory framework, possibly. You know what I'm saying? And like Princess Jasmine ain't even Princess Jasmine. It's Princess Yellen. You know what I'm saying? That's it. I'd be so disappointed. I became Aladdin. You know what I'm saying? I get up to the castle. I'm like, yo, this got a tiger, bro. Bro. And then it pops down. It's like Yellen. I'd be like, no. Why did I agree to this arranged marriage? Damn Middle Eastern culture. And then I'm like, I pivot. Where's Powell? I need a pivot. Come on, man. Yeah. I feel that's like a long, extended Aladdin joke mixed with finances. Jerome, you say Jerome's a poo? Come on, man. He's like, Chads are the monkey. Man, there was not 3,000 Apu's, man. What are you saying? Apu was one of a kind. That's a good song. Aspen Institute is the U.S. headed for stagflation with Fed Kishkari, baby. Finally, someone, honestly, I feel like I've heard less about like a day like today, which I feel like would warrant a conversation about stagflation because the number's still high, even though it's came down. It's like I feel like I've heard way less about stagflation today than anything. Dude, why is it popping in there? Yeah, Michael Burry, baby. Amen. I got you. He'll block you. I mean, I don't care. What am I gonna like? Oh no. I hope he doesn't block me. Bro, he blocked me on Bloomberg, I think Instant Messenger, but I haven't sent him an email in like 6 months, bro. Don't worry, we good. And then you can't see. I'm sure we won't miss it. Oh, Moses gifted 5, baby. Spread the love. Amen. Amen. Who's this? Dan Porterfield? Horna. God bless you. There you go. I tweeted him again, so he doesn't block me. Now I'm in a whole new... Yeah, you can give. So we're waiting for Fed Kashkari. That's not him. But someone tell me when Kashkari goes live or when he's on there. I'll keep that in the background. You could gift memberships. Yeah, so if you want, make sure you turn gifts on in the YouTube chat. It's like a setting. You have to say, like, receive gifts. Oh, whoa. Neil Kashkari, Larry Fink, and Larry Summers? Whoa. Bro, this speech is stacked. You're about to get Larry Summers, former treasurer, Larry Fink, BlackRock, and then you're about to get Kashkari of the Fed. This is stacked. This is like an actually stacked lineup, low-key. If this was like Rolling Loud, I'd be like, whoa, I'm actually going to go outside. But that's it, man. So let's see. That's Kashkari. He looked like the one guy, the SPAC dude. What was his name?
At the University of Maryland. And last but not least, our moderator, Greg Ip, is the Deputy Economics Editor and Chief Economics Commentator at the Wall Street Journal. Over to you, Greg, and thank you.
All right, let's see what we got. This could actually be good. Again, I'd watch Fed futures like we said. You want to see what they say, watch if the Fed futures react, how they react, and then you want to see if the market ignores it or not. That is very, very important.
Than just over the last few years. It's been like one thing after another. But I want to get right into the topic of the panel, which is the U.S. headed for stagflation? I'm going to start with you, Larry, because stagflation is one of those terms that's often warned of but never actually happens. But this time does kind of feel different. We have basically negative or flat growth for the last 6 months, and we have very high inflation. Is this stagflation? How is this like the 70s? How is it different? How does it end?
We talked a lot about stagflation in the 70s. We haven't talked about it much. Can you hear me? Yeah. We haven't talked about it much since we brought inflation under control with determined policy with Paul Volcker in very late 70s and early 1980s. And we basically had inflation under control for 40 years, despite the fact that the price of oil fluctuated, despite the fact that there were all kinds of supply shocks. We lost the thread, along with many other countries, about a year and a half ago with massively expansionary policies relative to the size of the GDP gap. The fiscal stimulus was 5 times as large as it had been during the financial crisis. And at the same time, massively accommodative monetary policies with the Fed growing its balance sheet rapidly and maintaining very low real interest rates, even as the inflation rate accelerated. The consequence is that we now have a very substantial inflation rate. Some of it is almost certainly transitory, but relative to our target of 2, I don't see how you could argue that we have an underlying inflation rate below 4.5%, and I think 5 or 5.5 would be a better guess. History teaches something quite clearly, and that is that soft landings represent what George Bernard Shaw said of second marriage, the triumph of hope over experience. We just don't have them historically. Every time we have had unemployment below 4 and inflation above 4, we have had a recession within the next 2 years. Every time the unemployment rate has gone up by 0.5%, it has gone up by more than 2 percentage points. So the odds that the exit from this will involve a completely soft landing are, I think, quite low. The odds that we will
Summers, I think.
get
And
a
he's
mixture,
very,
because
he's
what
been,
policymakers
he
have
talked
to
shit
do
about the CPI this
when they
morning.
have to balance uncomfortable things is accept pain on both dimensions. And so we're likely to have inflation not get all the way back to the stated absolute goal of 2%. And at the same time, in the effort to reduce it, we're likely to have some slowing of the economy and a recession. So I think that a best guess, not a certainty, but a best guess would be that there will be a stagflationary tendency in our economy for the next several years.
Oh, well, it's encouraging. Larry, I have to say that notwithstanding the deeply pessimistic outlook we just heard from Larry Summers, the markets seem to be in a pretty good mood. I mean, so today we had some news. The inflation rate in July dropped to 8.5% from 9.1% in June. The core inflation rate, which excludes food and energy, was lower than markets expect. And as a result, last I checked, the Dow was up around 500 points. Bond yields have eased down a little bit, and they're down a lot in the last month or two. So, I mean, to me, it looks like the stock market doesn't believe we're in a recession or going into a recession. And the bond market doesn't seem to think we have an inflation problem. Are they right?
Well, I think they're saying two different things. Let's start off with the fundamentals. There's still a lot of money in the system. And we're seeing large inflows by insurance companies buying the long end in the 10-year area. So, you know, I think we have to look at the fundamentals, not just what's going on economically. But the markets are acting, you know, pretty calmly. I mean, we're still down, what, 14% on the year? And there's still possibilities that we could fall another 10 or 15%, depending on geopolitical issues. But I wanted to add what Larry said, because we're in a position where we're going to have the Federal Reserve, who's going to have policies in raising rates, whether it's another 125 or another 225, to bring down inflation, which would cause a recession. But the problem is, from my vantage point, the recession is not just because of aggressive monetary policy. The inflation that we're facing is so much policy-oriented. Our policies of movement away from consumerism to populism is inflationary, and policies have been built around those, you know, the domestic issues that we have today. But more importantly, we've eliminated a large component of legal immigration. This country is based on legal immigration. So if you look at the legal immigration rates from 2000 to 2017, and the legal immigration from 17 to 22, we're down 2.5 million legal immigrants.
This is the BlackRock guy. Again, every time he's came up, he said this. If you remember, we listened to him a couple weeks ago.
Job openings right
every
now,
single time, he's like, yo.
So we have this mismatch. We're seeing rising wages across the board. The whole issue on the energy transition, we were, as a country, mitigating supply without mitigating demand and changing demand. And so all these issues are confronting us. And these issues are not going to go away when the Federal Reserve tightens, because these are policy-oriented issues. And if we just put all the pressure on our central bank and every other central bank, we may put the economy into a recession. We may bring down some inflation, but some of this inflation that we have can only change if we change policies.
Those are a lot of really big thoughts. There's a lot to take in, and I'm going to try and come back to each of these items. But I think one of the things I do want to touch on is, like, you know, we just heard you run a company that runs more money than anybody else in the world. And one thing we know from the 70s and stagflation, it was a terrible period for investment returns, stocks and bonds. Can we expect something similar, several years of really difficult times in the markets for investors?
I mean, it's certainly one of the outcomes, one of the probabilities. If we do not change some of these policies, if we don't manage the energy transition in an effective way, we'll create elevated inflation, and it will create more issues and more displacement of jobs. There is a real possibility. I mean, I wouldn't call it 50%, but could we have a 3 or 4 year period where we're going to have really uneasy markets, but I look beyond that, and we're the largest retirement manager in the world. It really doesn't matter that much what's going to happen in the next 2-3 years. You have to have a belief that in the next 20 or 30 years, we're going to be better off. And now, if you don't believe in that, then obviously, keep your money in cash or buy Bitcoin or whatever. Yeah, there's a real possibility markets could be down another 20-30%. I don't see that as an outcome, but I certainly see that as a probability. Just as much as I see a probability that we can resolve these issues, we are going to create new technologies that are going to stimulate new economies, new parts of the economy that'll create jobs. So I don't believe we're as dire as some people are predicting.
But it's very much conditional on us getting a lot of things right, including our policy.
Okay, and I don't think we've gotten a lot of things right. I mean, the polarization of politics in America, it's the short-termism of America. We're not focusing on some major substantive long-term issues.
So let's talk about one institution which has a lot on its hands when it comes to inflation. That's the Federal Reserve, Neil. I was a Fed reporter for many years, so I can't resist asking you about the latest data point. Today's inflation numbers. What's your reaction to them? So we had, the market thinks the core numbers were a bit better than expected. Fed Chair Powell has said the Fed won't stop tightening until it's seen evidence that actual monthly inflation readings have begun to moderate. Does today's number qualify? What does this mean for your view on, the size of the rate increase, if any should be appropriate on September 21, your next meeting? And what do you think where the markets are pricing now? They think you're going to stop tightening when we get to 3.5% and then start to ease. That's a lot to take in, but give me your take on all those things.
I mean, I was certainly happier to see an inflation surprise to the downside than what we've been experiencing for the past year. For the past year, almost every inflation reading has surprised us to the upside, which is really problematic if you are the Federal Reserve. And so I'll take it, but far, far, far away from declaring victory. I mean, this is just the first hint that maybe inflation is starting to move in the right direction, but it doesn't change my path. So in June, in the summary of economic projections, where all the FOMC participants put in their own projections of interest rates for the next few years, I said I recommended being at 3.9% by the end of this year and 4.4% by the end of the following year. I haven't seen anything that changes that. And so that, there's more data to come in between now and September, but at least speaking for myself, we are a long way away from saying we're anywhere close to declaring victory. We have to get back to 2%. We said we have a duty to get to 2%. My colleagues in the Federal Reserve and I are serious about it. We're united in that commitment, and we're going to do what we need to do to get inflation back down to 2%.
Deal, can I ask you a question, though? Why not 3? What's so magical about 2?
It's magical because you're right. If we had picked 3 10 years ago, that would have been a reasonable thing. But our credibility is now on the line because we committed to 2. We set the expectation for 2. And if now we say, well, you know what, 3 is okay, then what that means is you can't really trust us. And because we set this commitment, we have to deliver 2. At that point, if the public and the Congress wants to have a debate, maybe it should be 3 going forward, let's have that debate. But I, for one, am not willing to say, well, let's just get to 3 and declare victory. I think that'll do long-term damage to the credibility of the institution.
But when you see how market rates have come down,
this whole thing is very hawkish, but it's not moving anything. One thing with the markets is barely increasing Fed futures.
At a point lower than what you just.
But what he said was just important right there.
Is there a disconnect between
good
the
answer,
Fed and the
but
markets
very important. But
exactly
let's see how it moves
has
things.
To be done to solve this inflation problem?
Well, there's a disconnect between me and the markets. I don't want to speak for all of my colleagues at the Federal Reserve. I think a much more likely scenario, because if you look at the projections that we put out in June, the median projection is that inflation is going to be above our target for all of this year, all of next year, all of 2024, and sometime into the future. The idea that we are going to start cutting rates early next year when inflation is very likely going to be well in excess of our target, I just think it's not realistic. I think a much more likely scenario is we will raise rates to some point, and then we will sit there until we get convinced that inflation is well on its way back down to 2% before I would think about easing back on interest rates.
Melissa, I want to come to you now because some of the issues that Larry touched on sort of like speak to structural issues in the nature of the economy, especially labor supply. He touched on immigration, for example. And I'd say that one of the things that people are puzzling over is we have this extremely tight labor market, unemployment rate equals 3.5%, the lowest in equals to the lowest in 50 years. But labor force participation, the number of people working who want to work, is actually, it has not recovered to where it was before the pandemic. Why is that? I mean, we've heard various explanations. It's, people are afraid of COVID. People have to look after their small children or whatever. What's going on? And if you could, there's a Fed angle to this too, because Fed Chair Powell has, one of the reasons he's hoped for a soft landing is he thinks people are going to come back in the labor market, take some of the pressure off wages. So what's your take? Is that happening?
So right, so we have a very tight labor market, which is in part driven by the fact that people left. They didn't just leave their jobs when COVID hit, but they left the workforce. And sometime during the pandemic, they left the workforce, they stopped looking for work. So now we have more openings than jobs, or than workers who want to take them. I do think people will start coming back to the workforce more quickly now. I think that mostly because we threw a ton of money at households long after the initial spike in unemployment and closures in spring of 2020. Households were in a very good position. There was deferred spending, so people accumulated a lot of savings, and that allowed people to stay out of the workforce longer than I think most of us would have liked them to. But that increases worker bargaining power, so there is a good element to that. I think the idea that a lot of people were going to return to the workforce last September when schools finally reopened, that was overblown. People were hoping for that. But the truth is, parents kept working during the pandemic. So there was this idea that the pandemic kicked all these mothers out of the workforce. Really, it just meant mothers were working around the clock, taking care of their kids and kept their job, which is why we didn't see the bump up in work in September that some people were hoping for. But as household balance sheets decrease, people will come back to the workforce. There's two caveats. A lot of the return and the jobs have sort of returned in different industries and sectors than where we lost them. So if it feels like, why am I seeing job numbers return, but I still feel like I can't get a server at a restaurant, or there's no housekeeping at hotels, that is accurate. There's jobs are way down in certain sectors, service, leisure and hospitality. They're up in others, warehousing, transportation. So while we do see people returning, we see them returning in different places. But you also point to underlying challenges in the labor market. Even if we return to 2019 labor force participation rates are very low by historical standards. So only 85% of men between the ages of 25 to 54 were working before the pandemic. So even after these challenges resolve, we're still going to need to deal with low labor force participation rates in order to generate a more dynamic, productive economy.
Larry, you want to weigh in on what you just heard?
I agree with Larry Fink and with Melissa that way beyond inflation, there are profound structural issues that our country faces, and we're not going to have a happy outcome on inflation and unemployment and that stuff if we don't address some of those profound structural issues. And to just underscore what Melissa just said, the fact that in 1960, 1 out of 20 men were not working, of working age, and today it is 3 out of 20. That is a lot of tragedies. That is a lot of lost economy. That is a lot of unhappy families. That is a lot of children who aren't being brought up as well as they could, and it is a profound issue. But just to go back to the wonky stuff about inflation and labor force participation and so forth, I think we're losing the thread into optimism a bit in two respects. First, how many people here have rethought the way they're living in some significant way because of COVID? How many are living just kind of the way they were before? Okay, so it's about half and half. So if half the people have rethought...
Aspen, though.
What?
Yeah. It's Aspen.
Oh, wait, I understand. But it's
getting a little...
I don't want to be more or less. Okay. But wait. I'm making serious... I'm making as much as I ever do, a serious comment. If half the people are kind of rethinking their lives, it shouldn't be that surprising to people that 1% of the people, 2% of the people who are rethinking their lives towards not working when they did before. So why we would think that there was some law of gravity that said the labor force participation rate's going to go back to where it was before, I can't imagine. So I think probably we just have less labor force participation. And so, you know, if you have a big bathtub, you put a lot of water in it. If you have a little bathtub, you put a little water in it. And the Fed just kind of has to understand that. The other thing is, I'm no doctor, I'm no epidemiologist, but from what I read and from my set of acquaintances, most people who have COVID get better and it's all fine. But 5% of the people, 10% of the people, I don't know what the number is, get some kind of long COVID. And I imagine a lot of them don't work, or at least don't work for 6 months. And so I don't have this optimism that labor force participation is rushing back, point one. Point two, there's just a basic confusion in the economics, which is, let's say 100,000 people more come back and work. Well, that'll increase labor supply, but they'll also earn money, and they'll also spend, and they'll buy something, and there'll be people involved in producing that. So that'll increase labor demand. Now, the increase in labor demand may not be as much as the increase in labor supply was, but almost. So one, I'm not sure participation is coming back. Two, even if participation does come back, it's not changing the supply-demand balance in the labor market in a profound way. Here are the just facts. On average, in the American economy, for every 10 unemployed people, there are 7 vacancies. Today, the highest it has been before this episode ever is 15 vacancies. Right now, after vacancies have come down, it is 18 vacancies for every 10 unemployed person. And every time historically that vacancies have fallen by more than 20%, unemployment has risen by 2 percentage points. So whether it started from a high level or whether it started from a low level. So look, anything can happen, statistical patterns break. I'm not saying anything's a certainty. But why anybody would say that their best guess was that we were going to be able to get all these vacancies to go away without any substantial increase in unemployment and have a soft landing. I mean, you know, I'm going to play golf later next week. Now, this weekend, I hope I shoot 80, but it probably won't happen based on the last 100 times I have played golf. It's nice for me to say to my wife, I hope I'm going to shoot 80 today. So it's great for the Fed to say, we hope we're going to have 4% unemployment. But I think if you want to be credible, it's really important also to be realistic around where the best guesses are. And I don't think any reasonable best guess is that we get out of this with a soft landing. We may, I'm not saying it can't happen, but it's not, I think, the best guess. And I think one of the reasons why we have some of the deep problems we do of lack of faith in public institutions is that people have just wanted to make people happy. And so they give optimistic forecasts because they think it's good to inject confidence into the situation. And that's kind of a short-sighted...
FedEx, USPS, they're announcing proposed temporary rate adjustments for holiday.
You and I have
just
never
watch
discussed
travel
this
stocks
question,
if they move
Larry,
off that. This is really good, man. They're keeping it real. I like it.
That you would rather underestimate how good it's going to be and overperform when you make public statements about BlackRock's prospects than the opposite. And I think we need that mentality in our politics, and we don't have it.
Well, let me bring this back to the Fed, Neil. Now, I've listened carefully.
I've been waiting.
Yeah. It always comes back to the Fed. I've been a careful listener to the press conferences, and I think it's notable that when Chair Powell gets asked the recession question, he doesn't say there won't be a recession. He doesn't say we're doing everything we can to avoid a recession. He says we hope to avoid a recession. which seems to be the kind of thing you say if you are trying to avoid being pinned down on a specific forecast. But I think one of the points that Larry and Melissa are getting at with respect to these dynamics in the labor market and somebody dropping out is we're trying to grope towards what is the new normal in the labor market. And in 2019, we had an amazingly good labor market with a 3.5% unemployment rate and low inflation and rising real wages. And you as a policymaker were especially vocal that the Fed had a responsibility to maintain this good situation as to the best of its ability. It had a dual mandate, not just stable prices, but also full employment, and that it had a part to play and that this could do a lot of positive things for a lot of people. Well, here we sit with that same 3.5% unemployment rate, but inflation way higher, real wages falling. Will we ever get back to that world 2019? And if not, what's the new normal look like?
I'm optimistic that we will, but I think the transition from where we are in this high inflation environment to that is not going to be linear. I mean, we may be in a recession in the near future. I don't know yet. But I agree with Chair Powell. We're going to do our best to avoid it, but we are going to get inflation back down to 2%. The transition is the part that's the most uncertain. Once we get there, I don't see any reason why we cannot have a robust economy with low unemployment, with real wage growth, with decent economic growth, and low inflation. So I don't see any reason why we shouldn't be able to get there. But I agree that the transition period from here to there is going to be challenging.
Let me actually ask you directly. If getting back to your 2% target involves a recession, will that deter you from doing what is needed to get back to that 2%?
It will not deter me from advocating that we do what is needed. And I sit in the FOMC meetings, I listen to my colleagues very carefully. All I can say to you is that we are united in our determination to meet the goals that Congress has assigned to us, which is long-term maximum employment and 2% inflation. And so we're going to do everything we can to get there.
Larry, I want to come back to you because you've touched on the energy thing, and I think in BlackRock's work has done a ton of work in terms of corporate governance on ESG and so forth. And here we sit today with an energy crisis. In fact, there are those who say this is worse than the 1970s because it involves not just oil, but also natural gas and electricity in a variety of ways. So how did we get here? And given what you see today, is the green transition something that we've spoken of in almost in a theoretical fashion? Is it still plausible? Is it going to cost us a lot more than we thought? Is the energy picture going to be a sustained source of upward pressure on inflation, downward pressure on standards of living for some time to come?
Yes to everything. No. No.
Throw me a bone here, man. I'm looking for something. Yeah.
Yeah, bro. Someone said it. It's like they're off truth serum right now or something. I don't know what's happening.
The green premium, depending on from steel or cement or any other mechanism or molecule for power, is just very expensive. We don't have the technology. Now, obviously, we have wind and solar that is very competitive, but it's intermittent, and there's been a lot of money plowing into that. I need to step back in first and say all the money that we manage is not our money. So it is the client's choice. Some clients want to really move forward in a decarbonized portfolio. Other clients do not wish to do that. And so we are trying to inform all our clients of what our views are. And we do believe long-term climate risk is going to represent investment risk. And so how do you weave that? And that's a very delicate issue. I write these letters to CEOs every year. We've always said that the transition is going to be messy. It's not going to be, it's not going to be linear. We have this green premium, and we're experiencing this right now. The problems that we're facing now, once again, are heavily policy. I mean, we have always been a big believer that gas is going to play a major role in the transition. We have more gas than almost any country in the world. We just can't get it out because we refuse pipelines. We could be working with our allies right now and helping them as an alternative to Russian gas today if we had pipelines from the Marcellus in Pennsylvania to the Northeast, or what we could possibly do in Alaska too. So there's things we can be doing to bring this down. Look, every transition has to have this whole concept of navigating the entirety of an economy. The displacement of jobs and the movement to more decarbonized technology is going to be very rough in some communities. More importantly, there are going to be as we move there, as we're witnessing higher gasoline prices and heating prices, it really has had a severe impact on the underserved people of our country. And so you have all these big social issues, and those social issues today are more prominent than the desire to decarbonize tomorrow. And getting back to my statements earlier, that these are all long-term issues. And the problem is we have 2-year, 4-year, 6-year voting cycles. This transition is a 30 to 50-year transition. And it's going to be very uneven. It's going to be very lumpy. It's going to have some communities accelerate for it and some communities in America that are going to be troubled by that. So it requires things called long-term planning. There is enough capital right now to accelerate the movement. The amount of interest that we are seeing from investors in terms of decarbonization. You wonder why food prices are up so much and why restaurant prices are up so much here in Aspen. I mean, fertilizer prices are up 150%. Why? Fertilizer is basically created by gas. You convert gas to ammonia. And so all these things we have, these are consequences that we should have predicted, and we need to have a plan. We need to have a plan working together. But I am very confident, despite the polarization of views right now, and that we will find the solutions. But the reality is right now in the political atmosphere that we're living in today in America is you have the far left attacking that we're not moving fast enough, and you have the far right attacking that we move too far. The reality is we are trying to work with every investor in the world saying, it's your money, here's the information that we can provide to you. We're trying to inform you this. We can help you invest in whatever outcome that you're looking for. And I do believe we're going to move forward in getting this done. I am personally very committed in being an advocate for the whole concept of decarbonization over a long period of time. I was pleased to see that we have, the bill that hopefully will be passed by the president, that we're going to move forward. And as a few, I would say, senators who've embraced this new bill, it is a combination of moving forward in decarbonization, but making sure that we have an energy transition that we can all afford and we could all be working together.
There's actually a point of this, unless I can see you.
Can you see?
I hope this is, we're thinking the same thing, because he talked about the human transition, right? So there's a lot of people who rely on the fossil fuel industry in one way, shape, or form for their living. What is in store for them in the scenario that Larry just laid out, and what do we do about it?
Exactly. So in addition to the higher prices that people are going to have to bear as we transition to a greener economy, this is something we talk about in the economic strategy group. This has the potential, if we don't do the long-term policy planning, to be the next China shock. And the non-college educated workers in particular in these affected communities will be displaced by the transition and are going to need to be entering different jobs, different industries, and that's going to require that's going to require us as policymakers paying attention to that and make sure that there's training available to them and that those people can make that transition. We can't have that same experience we had from the China shock, which, imports from China are great for the country. Everyone has lower prices, but some communities were really distressed. And this gets back to the men out of work, the decline in two-parent families, the social malaise in those communities. And so we have to be careful to avoid that.
Have we shown at all an ability to get this right? I mean, with respect to this shock, the coal power, look at coal. I mean,
I think we've shown that there are things we could do if we're committed to it. I mean, community colleges are everywhere in the country. They work with local community businesses. They're available to train people. They're underfunded. But when they work well, they work really well. And the Aspen Institute has, a whole program dedicated to excellence in community colleges. That's one place. There's promise there. So it's not just like, oh, we don't know, we have no idea what to do. A whole program dedicated to excellence in community colleges. That's one place. There's promise there. So it's not just we don't know, we have
Roblox
no
got
idea what to do.
another price target increase.
Productivity in the last year is down 2.5%.
So literally,
which is
Roblo
actually the worst
upgraded to
annual performance
43
since we
by
began the data
Jefferies
in
now.
1950. So my question to you is what's going on here? Are we, apart from all the cyclical issues that we've dealt with, is the secular stagnation that you warned about a few years ago still operative? Is that what awaits us whenever we get through the current cyclical problems with inflation?
I'm going to say three things. First, the energy stuff is really important to do right, and it's really important to keep the reliability of the fossil fuels going, and it's really important to make a transformation, and it's really important to care. But it's also important to have some perspective. There are only 50,000 coal miners in the United States of America right now. That is 1/6 of the number of manicurists in the United States of America. There are 4 million people who change jobs every month. So let's absolutely figure out the right community adjustment programs. But let's also understand that if we want to be America, we've got to have a dynamic economy. And let's, in our concern with not having transformation, in protection, let us also not become snowflake nation. And let us make sure that we do all the things that we need to do, but also that we are driving forward with dynamism, because I think that is enormously important in terms of the creation of jobs. Look, I think we have latent economic energy in this country that is second to none. If you look at where the ideas are, if you look at where the capital is, I used to say 25 years ago, and it's still almost true, that this was the only country in the world where you could raise your first $100 million before you bought your first suit. And you still can't raise your first $100 million before you buy your first suit in Europe, but you can in China now, and that's a serious issue. But we've got huge natural resources. We have huge advantages. We really do. But I just came back from Brazil. Relative to Latin America, relative to developing countries, they say the same thing in Brazil. They've got entrepreneurs, they've got natural resources, they've got huge Brazil. They will make a joke about it in Brazil. Brazil's the country of the future, and it always has been. That's a standard thing they say. That's a standard thing they say in Brazil. And what's happened is that there's all this great stuff, but the policy and the politics and the institutions and the polarization, it doesn't always work. It doesn't mostly work. It hasn't mostly worked historically there. And so the answer is, yeah, we can do it. There's no reason why we're condemned to a fate of secular stagnation, but it is not self-actualizing that will happen. It will require the right kinds of public policy decisions, and it will require the right kind of community spirit. And to say something that's maybe particularly appropriate to say in Aspen, to touch on something where I'm not so proud of everything I've done in my life, and where I think a lot of us could soul search a little bit, is the connections between elites and the broader population. And we just need to recognize the fact that a large fraction of the American population doesn't trust anything in the elites. They use the phrase up there. All the people who are up there at Harvard, up there in Washington, up there in Aspen, up there in corporate life, they're working for themselves. They're not working for me. They're not delivering. I don't trust them. Screw it. We've got to do something different. And that anger is very much at the heart of why it's so hard to do the things that we could all agree on this panel or in the Aspen Economic Strategy Group. And I think that's a question for all of us to face. The thing that occurred to me when I was on a panel here a couple weeks ago with Zoe Baird, who's done such fantastic work on community colleges, was that if every one of us who had some connection with a great university gave 10% as much money to the local community college and 10% as much time to the local community college as they gave to the great university that we'd had some affiliation with, that would add up over time to make a big difference. And you could say the same thing about tertiary hospitals and primary hospitals. You could say the same thing about prep schools and vocational training centers. And it's not just about philanthropy. But I think there is this huge need to engage with the vast majority of our fellow citizens who do not trust us as on their team.
Melissa?
Yeah. Larry ended where I wanted to jump in. I don't want to be misunderstood as saying, of course, the fact that some people are left behind in these transitions are hard. Those are not arguments for not doing them. But I think the mistake that we've repeatedly made as economists, as policymakers, is saying, trade is good, energy transitions are good. Immigration is really good. All of these things are really good for the economy. But the fact that we haven't paid enough attention to the small concentrated groups for which it's not that great, at least in the short term.
I don't know. I feel like we shouldn't be listening to this. I feel like they let us in on accident.
We no longer can just say,
I don't know what it is. This is fire, but Fed futures are responding. SPY getting a little bit of a red right now.
Stuck in distressed communities. And if we don't pay enough attention to the people who are harmed in the short term during the transition, politically it's going to be harder to make these investments and transitions going forward that we all think are good for the overall growth of the economy.
Now, I asked Larry whether he thought we were returning to secular stagnation, and he responded effectively, I hope not. But Larry also told me a few minutes ago that in economic policy and Gulf, what one should hope for and what one should expect are not the same thing. And there are certain things about the outlook which are probably somewhat insensitive to policy interventions in the short, possibly the long term. And one of them is demographics. Indeed, when Alvin Hansen first coined the term in the 1930s, it was based on the very low birth rates that had prevailed in the United States for some time. And Melissa, you're all over this stuff. If demographics are destiny, what is the U.S. destiny? You've looked at this carefully. What's in store for us?
Yeah, so this is another long-term challenge we're facing, which is the plummeting of fertility in the U.S. So I'll appeal to a different magic number 2. So you referred to the 2% inflation target. If we need, I should be careful how I word this. If, on average, women have 2.1 children over their lifetimes, then our native-born population remains constant. If women have fewer than 2 children over their lifetimes on average, then our population shrinks without immigration. Women in the US now are on average having 1.65 children. No one's having 1.65 children, but you know what I mean, right? So that's
that word average is doing a lot of work there, Melissa.
But that projection means that our population is going to be older, and our working age population is going to be smaller. And that results in a less dynamic, less productive economy, unless we take steps to address it.
Thanks very much. Neil, staying on the topic of what we can expect versus what's actually in store, it would be great if things came together that we could have that Goldilocks economy of 2019 back again. But a term you often hear nowadays is that we've gone through a regime shift, a regime where we had all these tailwinds holding inflation down to headwinds that are working in the opposite direction. Supply shocks, COVID, war in Ukraine, shortage, the green transition and all that. Are we in fact looking at a decade or so of a reversal, of a new regime where the trade-offs are just a lot harder And it's going to be much harder for you as a policymaker to basically deliver both stable inflation and full employment. And then American people need to be prepared to be disappointed that it's not going to be like it was before the pandemic.
You know, hard to know. I don't want to say it's impossible. Where does inflation come from? Let's just go back to inflation for a moment. It comes from demand exceeding supply. So if it turns out that the economy's supply potential is lower than we thought it was, is lower than the prior trends because of these repeated shocks that keep hitting us, then that means we at the Fed are going to have to do more work to bring demand down into balance with that smaller supply. Now, I hope not, but we will see. I don't want to declare that right now and say that that's a certainty. It's far from a certainty, but we need to keep our eyes open. One of the things that I've heard that's a slightly different story from several banks, Brian Moynihan, the CEO of Bank of America, has been saying this publicly for quite a while, that if they look at their cash balances of their lower income consumers, their cash balances keep going up. So I had thought all this stimulus was being put in the economy, that you would see customer balances declining as they spent that down. Well, right now what's happening is it seems to be an ongoing phenomenon. It seems to be self-sustaining. So that's not an issue of self-sustaining supply shocks. That's an issue where maybe we're in a high-pressure regime that is consistent with a higher inflation rate than 2%. If that's the case, and I don't know yet, then again, we have to do more work to bring the regime back to a regime consistent with 2% inflation. So there's a lot of uncertainty about what the economic future looks like, but regardless of what it is, I think our job at the Fed, at least, is quite clear.
Can I just say one thing?
Yeah.
What Neil just said. You said demand outpaced supply, but much of the supply issues was for 30 years, as we globalized the world, we created these incredibly efficient supply chains. And what we have realized
Roblox, another price target increase.
With the war in Ukraine,
I don't know what's happening,
that
man.
these supply chains are not as efficient. And many supply chains have broken down. At the same time, during COVID, we changed our investment, our consumption appetite. We bought more goods, less services, and that created all the supply shocks. There is no question that corporate America is reevaluating all the supply chains. And they realize now that we're going to need more redundancies in our supply chains. All of that is going to take 3, 4, 5 years. But during that transition, this is ultimately create more deflationary pressures as we move towards more redundancies. And so I actually believe this transition that you were talking about, Neil, is a transition of how we reimagine our supply chains, how we reimagine our work, how we make sure that we're delivering to our clients the things that we offered them, where you don't have to wait 7, 8 weeks for a part for a car, or if you have an accident or something, or a refrigerator, or whatever it may need. But every company is now reevaluating that, and I think this is going to be time, and this is that transitional period. At the same time, we have a transition in energy, we have a transition in so many other areas, and I think that's what's confronting so many Americans.
Larry, you wanted to?
I have a plane I'm going to have to catch, but I want to say just 2 things here. The first, on this question that Neil and Larry were discussing of, is it supply, is it demand, can you control the demand down to the supply, all that. Here's the way I think about that. Think about people's weights and think about their metabolism. Whether you have a fast metabolism or whether you have a slow metabolism, if you eat right, you can have a healthy weight. And that's Neil's point, that if the supply side of the economy is working badly, then the Fed's going to have to print less money in order to do it. It's also true that if you have a fast metabolism, it's easier to be thin than if you have a slow metabolism. And that's Larry's point about the absolute importance of getting the structural things right and doing a whole set of these things. I think the thing that hasn't been said on this panel, and I think is very important to say, is that our history as a country is of resilience. Our history as a country is that we have this tremendous capacity for the Jeremiad, for people to warn that it's all falling apart. Jimmy Carter talked about the crisis of the national spirit. In 1968, the country was so divided after assassinations and Vietnam War that the President of the United States could only speak on military bases for a year. People who came from the kind of places that I come from thought that McCarthyism, by purging rationality, was eliminating the case for thoughtful progress. FDR was told by a substantial majority of his advisors that he needed to declare dictatorial powers because democracy wouldn't be up to overcoming the Depression. Patrick Henry said in 1792 that the spirit of the American Revolution had already been lost. And so I think there's a message, which is it is precisely our capacity to become so alarmed that is why, as Churchill did not say, but it's a good line, but Churchill did not actually say it, America does the right thing always, but only after exhausting all the alternatives. And I think the fact that so many people come to participate in discussions like this because they're so concerned is part of a broad dynamic that, for all the things we see that discourage us, make us ultimately very, very resilient.
Thanks, Larry. We have just a few minutes for some questions. If you have a question, please raise your hand. We have mic runners who will bring you a mic.
I thought he was just about to dip and be like, all right, guys, I got to catch a plane.
And then I'll see what we can have. We start with you,
It's good so far. It's about to wrap up, and we're about to enter Power Hour. Spy right at VWAP. Watch chip stocks, and Roblo just keeps getting upgraded.
The aging population and the low birth rate and so forth, and we all understand that immigration is important. Can you discuss the illegal immigration that has occurred over the last 2 years of maybe 2 million people who have come in? How do they fit into our workforce and make it a better country?
Melissa, do you want to take that?
Yeah, what I could say to that is I do not know what the real numbers are in terms of how much illegal immigration there is now versus before. I know a lot of the people who are here illegally are overstaying their visas. My understanding of the issue is we have tremendous backlogs in the system, so people aren't getting processed. We have very tight immigration caps. That means many more people want to be here, would like to be here on permanent employment tracks than when we permit. And so until we're committed to really reforming this system and allowing more people here legally, which, as you were alluding to, would help address both our working age population and our declining population growth problem, then we're not going to make headway on it. But you're absolutely right to suggest that addressing the immigration problem will help a lot of these other challenges.
Larry, I know you feel strongly about immigration. Did you want to make a few observations on that?
I feel strongly about legal immigration. I feel strongly that we have to be, we're educating a few million foreigners every year in our universities, and it's hard for them to stay in our country now. And so, we're educating the world without getting the benefit. And so there are many things that we should be doing related to legal immigration to make it more robust and more resilient. And
that sounds good. I think a question up here.
This question is for Mr. This question is for Mr.
It's okay. Just go ahead. I can hear you. I'll repeat the question. Yeah, we can hear you.
This question is for Mr. Fink. You've talked about how you're making long-term investments with retirement funds, and you also talked about climate change and that it's a left versus right issue, but in fact it's the UN scientists that say that we have 7 years left. And we just saw a bill passed where $400 billion said that we could cut greenhouse gas emission by 40% by 2030. You run a pretty large investment company that makes investments in things like clean energy, and we see how cheap it is in order to get closer and closer to zero emission. what kind of things do you think are possible from the private sector?
Oh, why did I felt like he was going to ask like a bombshell, but then he didn't.
So we could get off of the fossil fuels that are creating so many of these problems.
Well, thank you for the question. Once again, it's we have our clients are the ones who are making the decision where they want to put their money. But there are where there's trillions of dollars of money that is looking to put money to work in a combination of decarbonization technology and infrastructure. I believe where we are going to see new technologies, very rapid change, is going to be in the form of hydrogen. We just invested in a hydrogen company in Nebraska that is converting gas into ammonia for farmers in the Midwest. We see real opportunities in hydrogen as a major power source for big machinery. We will be able to use the same pipelines, gas pipelines, to get to retrofit them because hydrogen is very corrosive. But we're seeing large pools of money that is looking to seek out these type of opportunities. And I do believe the next 100 unicorns are not going to be food delivery companies. They're going to be companies that are focusing on new technologies related to bringing decarbonization technology, accelerating that, and moving it forward. But at the same time, the interconnectivity between our power base in the world is still so highly dependent on hydrocarbons. And if we don't have the whole world moving together, even if the United States moves very rapidly, if we cannot change the emerging world faster, and I don't see any good outcome at the moment for the emerging world in terms of moving forward. That is why this year, with higher energy prices, coal utilization is higher this year than it was last year and the year before. So it's not just having a US or a European solution, it's having a global solution. Talking about capital, if we're going to really move capital to the emerging world, we have to reorient the way we do international finance. After Bretton Woods, we created the IMF and the World Bank. They are the big intermediaries for capital going into the emerging world. It is estimated we need trillions of dollars every year to decarbonize the emerging world. And right now we have a fraction of that going into the emerging world. And so we have to really start thinking about how can we deliver capital there safely in respect to our retirees, that their returns are going to be strong, and we're going to get our full capital back plus the return. We have to have better protections if we're going to be really investing our clients' money in these parts of the world. And so it's a mistake that we're not talking about how to deliver a better financial system so more capital can move towards those areas. So there's no question in my mind that we are moving forward. We strongly see evidence that climate risk is investment risk over time. But at the same time, this transition is very hard, and politically it is a very broad and angry conversation right now. Correct, Greg?
Yeah. You say that about a lot of topics. We had a question up there. Yeah, thank you. Yes.
Can you hear me?
Yes,
No?
we can hear you.
Yeah,
Yes,
okay.
thank you.
I feel like we didn't touch on tax policy at all during this conversation, and my bias would say that we sort of sugared ourselves up for this inflationary moment, given the tax policy of the previous administration. And we never talk about that in terms of contextualizing what's happening now. And I guess the other thing would be that Professor Summers advised us to look to our better angels and give money away philanthropically. Is there some kind of statement that could be said that it was a redistributionist moment that he had there, and maybe there should be some reflection of that in tax policy? I don't know. You guys are...
Well, we actually have a bill that is supposed to pass the House on Friday, which actually does raise some taxes on corporations. Anybody on the panel want to comment on the appropriateness or the effects of that?
Am I allowed to say in Aspen that I wish the carried interest went through? That would have raised a lot of money very progressively.
Can I echo that? It's a crazy tax. It's crazy.
The loophole.
The loophole.
The loophole
survived.
survived.
Okay, yeah.
It's
So
insane.
if you're feeling philanthropic, stop lobbying. Anyone you know, ask them to stop lobbying for that provision to be maintained.
Neil, it's fiscal policy. Are you allowed to talk about taxes?
I have deferred to my esteemed colleagues.
Well, that's a good note to end on. Okay, we're at the time limit. Thanks very much for being a terrific audience.
Thank you.
Good work. Great conversation. Great conversation. Thank you.
Yeah, great conversation.
Sorry, I couldn't. Yeah.
Hot mic. That was good, man. I genuinely feel like we got invited to a different party, and I just felt like that was like their talks, and we weren't supposed to be there. But no, that was very, very good. Honestly, they talked about a lot. Again, Neil Kashkari kind of drove it home about not pinning the Fed into a corner, saying how they're going to do more. Again, the Fed futures started to rise up when Kashkari said they would still continue to do what they needed to do even if there was a recession. So honestly, it was very, very hawkish. It was very, very hawkish in many, many ways. Some points you guys have heard from like Larry Fink. You've heard a little bit of the immigration stuff. Again, they talked a lot about the climate and all there. But as far as like stagflation, the economy, and the rate, I mean, they did ask the questions that the market was looking for. And even though Kashkari was hawkish, it raised the Fed futures a little bit, just slightly more than Evans, but it really didn't do much there. So right now it's looking like we got most of events out of the way after the CPI coming in lower today. Things are looking very, very positive. We've got the Fed speakers, and honestly, they did not do enough to derail it right now. So we are about 5 minutes into power hour. We'll see where this ends. You got PPI tomorrow, and then consumer sentiment on Friday. But man, that was a good one, man. That was good. We woke up early. We were, we've been streaming a lot longer here. I got to really listen on that. I was sitting there, but that one was very, very exciting. Let's do push-ups. Let's get it, baby. Get beside your desk. Do 10 push-ups. You can't do 10, you do 5. Can't do 5, you do 4. Can't do 4, you do 2. Can't do 1, get on your knees, do a push-up, plank the worm, anything. But get the body moving, ladies and gentlemen. I know it's power hour. Usually we skip it, but let's go. Because I was listening, bro. I was like intense in that. I'm not going to lie to you. I took a dump during that too, but I was still listening and I was sitting there. I kept going back and forth. I would check the Fed futures. I don't know. All right, man. Is anybody going to explain why Roblox keeps getting upgraded? That too. Every time I would look at the screen and be like, Roblo. But let's go. Body moving, shoulders down. I'm already resistancing. Chest to the sun, baby. Legs in front of you, or you could, come on, you could just stand up a little bit, baby. Oh, man. Probably because retail is buying it. No, bro, no. It's honestly the only difference is Nancy. That's it. Bro, the last thing I expected today, and again, I hope you realize as somebody who owns a decent amount of Roblox, I hope you guys can respect my reaction, because this is how I felt with like Airbnb and looking at it. But bro, the last thing I expected was to get 4 price target upgrades anywhere from 10 to 50% higher than where the stock was at. Like, what is happening, man? So just keep that in mind. Got blocks like Nancy, tips like Ramsey. I wish a motherfucker would. Then you could call me Kathy. Actually, all these bars, I feel like Johnson Matthey. Whew. They don't feel me. You think it keeps pumping? It's possible. It's definitely possible. Just again, we're gonna have the PPI will affect it a little bit, but also consumer sentiment. That could be a what's it called move. It pretty much the consumer sentiment could add to the bullishness, or it could take away a little. It just depends if those dropped with inflation. But now that inflation is dropped, I can only imagine what consumer expectations are on that University of Michigan survey. California regulators approve offshore wind development target. Offshore wind calls for up to 5 gigawatts by 2030. Why are materials? Because commodities. So even though inflation's coming down, remember, how things play out. Like commodities, they've dropped a lot, but they could still kind of benefit off of it. So, I mean, one thing to notice is just like the market's finally feeling a little bit better, but this is coming off of about 2 months of commodity declines. ExxonMobil said to be considering global trading expansion, reworking pay structure for traders, including bonuses. I don't know if it's going to move the stock. Supposed to build some of those in Humboldt near Eureka. But does anybody know, Palm Springs? Like when you drive, Exxon, XOM, they're traders. Again, ExxonMobil. But the windmills on the way to Palm Springs, I love that shit. I'm telling you, I love it. But how much electricity does that generate? I've never really looked into it because I was like, bro, they got mad. Does anybody know what I'm talking about? Someone has to know the damn windmills on the way to Palm Springs. You're looking at them right now. Oh, it's beautiful, man. Like Morongo, exactly. Barely any, no way. Bro, because I used to think, when I was a kid, I used to think that powered all of the electricity in Palm Springs. I'll be like, oh, yeah, that's how they power the hotels and the casino. But that's a big one, bro. That's like miles. That's like miles of wind, and it's windy out there, bro. It's windy out there. Me too, yeah, bro. Except half are never working, I feel you. It's 2.7 megawatts each. How many megawatts do you need to get a gigawatt? Palm Springs is dangerous. I like Palm Springs. I've never had a dangerous experience in Palm Springs except for a sunburn. You know how much energy it takes to make a windmill, tons of coal. Don't forget the material needed. I feel you, but they do look cool. Like, I'm just saying, when they start dancing, bro, like some of them, it look like diamonds. You know what I'm saying? Like sometimes the thing, they just start dancing, bro, and it looks kind of dope. That's the only thing I could. Otherwise, I don't really know that much about wind energy. Do you have an opinion on lab-grown diamonds versus grown? I mean, the only person who will know the difference will be a jeweler, but pretty much if you buy jewelry with the intention of reselling it down the road, you're going to want real diamonds. But if you're buying jewelry simply that you plan to keep, then there's really no difference with the lab-grown. So, I don't know if you've ever seen it. They'll test, VVS diamonds against lab-grown. No, you couldn't even tell. I'm telling you, nobody... lab-grown diamonds nowadays are very, very nice, and they're somewhat cheaper, but it's just if you want it for look and actual appearance, then you might as well save your money and go with lab-grown. But then if you actually are trying to do it for an investment and you're looking for investment value, natural diamonds are going to have a higher chance of actually catching the resale bid, especially if you bought a piece that would actually appreciate. Who diamond test? No, lab grown will show up on a diamond tester. And a lot of people do you guys know half of the diamond testers that you see on videos are fake? Do you you realize you turn up the sensitivity? So you could take a diamond tester and put it on anything and you just turn up the sensitivity, and a lot of them it's stupid. It's it's weird how they work. The only you have to put it under an X-ray to determine if it's lab grown or not. Roblo fighting to go green. Lab grown is a fourth. Natural diamond can suck it. Yeah, but that's the thing. If you plan on selling it down the road, the lab grown is going to hit you on the resale value. Again, if you're buying it cheap, it's probably going to stay cheap. Or again, people are going to, look at it a little bit different, whereas natural will always kind of keep its price more or less. You guys have put it under like a black light. Yeah, that's what it is, like the X-ray thing. Josh going harder down. I'm just guess. It was an interesting question. No one's really asked about jewelry. So I thought that was an interesting investment way to look at it. I don't know if you know that. Why do watches lose value when they get bust down? Same thing with cars. If you put, like, when I was little, man, like when I had my Honda, man, I legitimately thought I was going to put a body kit, a hood, a roof spoiler, a spoiler, coilovers, and rims, and an exhaust. And I thought I was going to spend all this money on a Honda and make it like, I was like, yeah, and then I'll just resell it for more. And then they keep on spinning. And then I thought it was going to be good, but it's just aftermarket. At the end of the day, like, you have to realize, like, if you buy like a bust down Rolex, the only thing that's Rolex that you're really buying is the dial and like the bezel, maybe, if you're lucky. So if you go and buy like a Rolex and it has a bust down diamond on it, like the bracelet of it, it's just like, that's not even a Rolex bracelet. It's not Rolex diamonds. It's not like, it's just aftermarket. It's literally like putting aftermarket products on your car. It's like the movement will be Rolex, yeah, but it's just not. It's that they call them Frankenstein Rolexes. That's why most of the bust downs are just literally like, they love it, bro. I'm telling you, the jewelers, oh, they love all these motherfuckers who buy them because that's where they make their big money off of it. Because you could get like a bust down Rollie for like 20 or 40 grand, but again, it's really like maybe $4,000 of real like Rolex pieces, more or less. So it's not necessarily, you want, like, if you're going to hold any sort of jewelry or anything, you want it to be original, and you have to think about resale value. That's it. So a bust down looks cool, and it might be dope if that's what you're into, but the resale value, you're not buying the original product. You are not buying all of that. Like a cheaper Rolex with a box will be better off in 5 years than that. Like if you went and bought like a $10,000, $15,000 Rolex instead of a $20,000 VVS bust down Rolex, in 5 years you'll make more money on the normal Rolex. Bust down means just diamonds, just like when they put diamonds in the face, diamonds on the bracelet, everything. So to get a lot of younger think the cured diamonds is the way to go. Can't get full value when resold, and it's hard to get insurance on cured diamonds. Yeah, that's another. I mean, the insurance factor is like, that's depending on the value of it. But I feel you. It's just simple. Like, you have to, when it comes down to jewelry, like, you can have investment value, but you just have to determine what you want. Do you want to look good, or do you want something with investment value? That's the only two options. It's either appearance or value. And that's it. That's all it is. Roblo, a little bit of a pop. Even Apple's at a high right now too. I take an original over bust down. Well, that's the thing. Don't be afraid of the diamonds though. Like with Rolex, if you've ever seen like the Rainbow Daytona, that thing used to go for 30 or 40 grand. It's worth like $250,000 now. If it's factory diamonds, it will hold its value a lot better. If it becomes even that much more rare, if it is factory, because they don't make as many of them, and usually they're higher priced when they come out. They're discussed in the Daytona one. I like it. I like the Rainbow Daytona. A video of Unreal Engine 5. Oh, did we show that one? I saw some. I thought it was like Unreal Engine 6. Then maybe it was 5. But like, I saw it and it was crazy. I thought it was real. It was like the coolest thing I ever witnessed. I think it was the Matrix game. That's the video clip. I think we showed it on here. But yeah, it's nuts. Big fan. Roblo Premium. We were up like $30 prior. Again, Fed futures moved a little bit. Oh yeah, we got some gains. You got like $50 of gains. Not bad. Nvidia's looking good up there too. Again, all of the chips did great. I actually haven't checked on banks in a while. JPM not as much. Bank of America holding up, and XLF as a whole. XLP, yeah, it is a little bit of a rotation out of defensives, yeah, without a doubt. I mean, again, that report today gave enough for the bulls, but it's not fully there because it's not as if you're watching them dump. I mean, the part about today is everything is still green. So as long as you have everything green, there is a minor rotation, but it's just pretty much, I think people are just positioning way heavier on the other side. But there is some elements of the rotation, but I think, to really like call it and say boom, like people are, it's not like they're dumping the defensives, but people are definitely putting more money to work on growth. I mean, that's what we did here today. Again, I mean, every play I bought today was a call. We got it right in the morning. We talked about it. So a little bit more of a risk on attitude. And again, the next 2 days of data should kind of bring us home. HSCS IPO Ripper. Yeah, we saw that one the other day. Came on the high ticker a couple times. Stepping lightly, yeah. So that's what I'm saying. It's not as if I think some people are selling, but it's not like everyone's like, okay, dump the value and go to the risk on. But it's definitely more or less, I could see some trimming or more just hold the value and then just go really hard on the growth. That I could see more likely. Apple inches closer to erasing 2022 losses as inflation cools. That talk about a headline. Roblox baby calls up 100. Are they really? I guess if we paid 30 cents for them, give or take. We paid 37. I don't know what they're going for now. 55. Yeah, they are up almost 100. I missed that. Oh, kind of, yeah. We get adjusted inflation number. Nah, they won't adjust. That one. It'll come out a little bit later, but that's it. Roblo back to positive less than 24 hours. Bro, Roblo is weird. I'm telling you, like that was just a bad earnings. I've for a stock like Roblox, I didn't think them saying 1 quarter looking good was like enough to like, okay, yeah. Everyone's like, yeah. You guys, so you're long duration, extremely high PE. Oh, and you guided lower and you missed below it. But you looking good for next quarter? All right, we'll take it. They didn't even give like official guidance. They just said third quarter numbers are higher. That's it. And then Stifle, BTIG, Morgan Stanley, they're all like, yeah, I think this one's it. Tesla. Honestly, it's very conflicting. Tesla's coming back up. Remember, it's up 6 in the morning. Corinne said we had 0% inflation. That's because the number didn't move. So technically, she's referring to the month over month. But yeah. So here's just a little gander of Roblo. This morning, you wake up, 32 price target by Morgan Stanley. Then BTIG comes in, says $58 price target. And then 20 minutes later, Stifle comes in and says $50 price target on Roblo. And then you got Jeffries coming in about an hour later saying $43 price target. These are all upgrades too. Every single one of these is an upgrade. And then 55 Ed need him 20 minutes after that. It didn't decrease, but it didn't go up. So like month over month inflation technically was 0. It doesn't mean you have 0% inflation, but it just means compared to last month, CPI did not move. So just, I feel you. It's all wording, man. It's all wording. 0% increase. Wonder with the reasonings. I mean, whatever it is, it's just, I'm like I said, this whole thing's fascinating me because I want to like expose the part, and I want to see what is driving these reactions because the logic just isn't really there. So it's like, that's what I'm saying. I want to figure it out because if we can, then we will be a lot more prepared for any other plays. But there's a wide spread between how they're judging stocks post earnings. And again, I'm not the only one who noticed this. There's a big FactSet article that came out, and people are already discussing the paradox of what we are seeing. Let's see. 419 is still, again, we've only hit 420 once for a little bit. I'm still holding. No, I'm going to hold Roblo. Again, I'm not, like, my opinion doesn't change on the company, whether it was, I hope you realize I act the same way whether I benefit or lose off of it, whether it's Airbnb or Roblox. Again, I have a shit ton of Roblo, and I'm making money on this type of move. I mean, I'm not disappointed by it, but I am still like, it's just but there's a big disconnect as to why it's doing that. So I'm not going to sell the stock. I mean, if anything, we're benefiting off of it. This doesn't change how I view the company. This is changing how I view the market and analysts. I'm telling you what it is, faulty algo. So, like, if it is a faulty algo, what is the metric that it's tripping up on? I was trying to figure that out with Airbnb. I'm like, is it price to earnings? Is it price to book? Is it EV to EBITDA? Is it price to cash flow? Are people looking at the cash flow versus, expenses? Like, what is it about like, what factor is it? There has to be an input that is tripping it up. That's what I'm saying. It's like you have to really look at these earnings because it's like they're all really different. And people are reacting very differently even to the same things. And that's what it is. So if you have an answer to that, I would love to hear it. I think they're paid to say what they want them to. I mean, that's the easy explanation, but it's definitely, I mean, maybe it is a social answer to all of it, but it is, I mean, there's something there. But it's just like you could see it because when I try to compare one input to the other, it just doesn't make sense. Otherwise, because if it's just high PE, then none of these should be up. But then if it's EV to EBITDA, then AMD and a lot of other companies should be clapped right now, but they're not. So it's just a weird metric, and it's interesting. I guess every company is different, but that's kind of the whole issue and what I'm looking at. But moral of the story, Roblo is insane. It was a HSCS? What is it? HSCK? No, it's like HSCS? Yeah, that's the one. Josh, the brain wants it. Thank you for reeling, John. I got you, man. We'll see, little by little. But that's what I've been going, like, I don't know. That's why someone said, oh, like, you're heated about it today. But it's like, honestly, it just really sparked my interest to, like, dive a little deeper in the market. And I'm trying to figure it out because I'm like, wow, this is a interesting point. It may prove to be a phenomena. I mean, if this doesn't show up at next earnings too, it might just kind of be the, sign of the times more or less. But it is very, this is got the interest drawn out. See who Pelosi's holding. I haven't checked the last ones on there. Holding Roblo. Yeah, we have another Roblo play. Again, we have good plays today. NVIDIA, Netflix, Roblo is looking good. Gosh, I'm getting swole. Amen, baby. That's the plan. Thank you for your sane perspective on this madness. Well, you're welcome. I appreciate it. I mean, again, it's always good. That's why I appreciate the same thing back. That's why I love these conversations. And if we, again, you guys bring up very good points, and I know we have a lot of people in here, and we could source a lot of information. And I had this talk with my girlfriend yesterday because she was asking me. She was like, "Do you still think everything is like you don't know what's happening or this and that?" And I told her, I was like, in the sense of like, I feel like I have an idea of what's going on. It's not as if I'm like clueless. Again, I think we really have something with the yield curve, and I think we have enough macro data to really have an idea of a couple of the next steps. But I was just explaining to her, it's like the overall like theoretical idea that anybody knows anything right now is like, that doesn't make any sense. Like, that's it. That's what I'm saying, where it's like, even myself included, I don't know what's going to happen. I have a good idea of some things that can occur, and I have a good idea. It's like I feel confident in the yield curve, but I think anybody right now claiming they know, it's like the age-old philosophical question of man trying to explain God, when it's like, if it's God and above you, I mean, it doesn't make sense how even man would be able to explain it. And really what I'm trying to say is that right now, no matter what and who it is, there's just no way you could accurately predict where anything is going. So that's what I mean when I'm like, yo, nobody knows anything, myself included. It's just like there is no high level of certainty, and it's just like nobody could really say that and be like, yeah, I'm confident and know that. But there is other things that we know that are happening right now, and that's what affects it. Heard the shadows in the cave thing? Nah, it sounds very familiar. Are we talking the Plato in the cave? Palantir, I'd form chief data of the Department of Defense. Yeah, the Plato cave allegory, yeah. Mm-hmm. Yeah, and I just think in general, it's just like we are in a situation where all it takes is one thing to change it. That's it. So that's why it's like, no, with all the data overseas, all the things happening right now, what the data is going to show, what Powell's going to do, you can't forecast how retail, consumer are going to behave, sentiment, all of that. It's just like, I think it only takes one thing to mess up all of that or to really change the forecast. And I mean, even then, today's CPI, like if I'm going to say anything like super crazy today, today's CPI was very bearish in the sense that, again, everybody missed it. Do you see what, like, I don't know how scary this is to you, but this could definitely increase my fear level, is that not only has everybody been wrong on the bad side, you mean to tell me everybody was even wrong on the good side? Do you see what I'm saying? One guy got it right. There was more. It's 10% versus 0. Like the last two meetings, it was a flat-out donut. Not one person ever predicted that number that we reported. This time around, it was like 10 out of 60 economists hit the mark, more or less, and only one of them hit it on core. So, but do you see what I'm saying? It's like, again, like I said, today was the best bad news we've gotten in 10 months, and that's why it feels good. But like I'm saying, the real negative thing, if I really wanted to take anything out of this, it was, again, it's like, that confidence level, that's not reassuring to me that all of these economists are wrong on the top and bottom side. That does say that, yo, maybe we are in a very weird environment right now where, again, you're like, we're operating within like a standard, 2 standard deviations on all these guys who are the experts. So it's very, very scary in that sense. But other than that, I mean, we'll see where it's going. But that's what I say to my point. All it takes is one thing, 2 things, but nobody could really accurately say, yes, this is going to happen. But I do, like I was explaining to my girlfriend, I'm like, I look at the yield curve, I could give you history. It will tell me a lot once that thing moves, and depending how it moves, I'm very confident in that. I'm very confident in the signals with the dollar, global currencies, all of that, but you just do not know what will be produced from it until it becomes very, very obvious, or the other stuff. So trying to pinpoint what's going on in the market here, I genuinely think everybody is off base, and I would include myself on the shorter term, but the mid to long term, there's a lot more stuff you could look at that could give confidence, but everything else is just, it's pretty wicked right now. Yeah, the 2 10-years did come back. I didn't know it was at 4.4. Yep. So all of that was very, very little reaction. We'll see how this plays in. And Fed futures came back up a little bit, 2% higher than after Evans. Roblox is green. I feel you. That's definitely the what the F stock for me today. Even Coinbase, though. I thought Coinbase was going to get demolished. Inherently, people know something's wrong. They can feel it. No one's figured it out. That's the thing. Yeah, I could agree with that. It's like, you know, there's a robber outside, but you don't know what door he's going to come in. Or maybe it's like a game of Plinko. Have you ever played a game of Plinko? And you know how like it like boop, 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 boop. You know, I'm talking like Price is Right Plinko. And it's just like you see it moving, but all it takes is one little bounce and it goes left and then it goes right. Or then it just like, it's literally a giant game of Plinko. And that's what I'm saying. A lot of people are dropping the Plinko chip from the top and then they're saying, boom, it's going to land right there. But it's like, no. It's just like, no, because nobody has been able to call it now. And whether it's good or bad, all of the economists are wrong on it now, that it's just showing something's out of touch right here. You talked about diamonds and jewelry. I'm getting ads for it now. You probably looked into it, man. You were probably already looking up Rolexes. I know you were already looking at diamond chains. You like, what's up, man? You know what I'm saying? Because, like, I feel you, but that's just what happens. I still like the free put play. Hell yeah. Why? I mean, it's free. So I don't lose even then. Even if the market rallies, it costs me nothing. As long as the market doesn't drop to 340, I can't lose any money on that play. I still do have that Rolly. I've never worn. It's unworn. I have it brand new. I still have the stickers on the watch, everything like that. I was like, all right, whatever then. You know, that watch has a weird history behind it. We just keep like, I got it as a gift. I try to give it as a gift, and then I got it back as a gift, and now it just sits there. It's literally the damn camera stand. That's literally all I use it for. Do you gain money on the market going up? No, but I don't lose any money. Again, I have no premium to pay. So I paid 0 premium. But the thing that sucks is I had to put money down on it, so it takes up my balance. Like, I don't know if you remember this morning, like it was saying I couldn't execute trades because my margin, when that volatility with all the futures and then that type of play, they raised my margin requirement. But like I have a lot of cash. That's why I was like, what the hell is going on? But now it's like, it's letting me trade as the market is chilled out. But that's the only downside, is it ties up capital in the meantime. Bros, I like how they've held up, but that's about it. And I still have yet to try the coffee. I've yet to do it. I think today shows peaks priced in. Well, we'll see at 420. If you lose it, does it lose resale value? A little bit, but not much. But then if you have it unworn, because like there's like a Rolex sticker on the bottom, so like you could tell if the watch has literally been unworn, it just it just makes it way easier to sell, and it increases the value. So it's like a fine bottle of wine that's never been opened, more or less. Yeah, green ticker, again, watch 420, though, Because whether or not this rally's priced in or the CPI coming down, we will see what happens. I still wear mine. I still got the sticker. Scammer. It does. I don't know. How does the sticker look, though, still? LRCX. Apple's coming up. Dude, even Coinbase is rocketing up. Nvidia's chilling out, but the rest of the market's going up again. Watch financials as well. Again, financials are picking up again. That could be wave 2 here. A lot of volume actually coming into banks. We only got 20 minutes left. Vita moves crazy. Josh gonna wear it in the video tonight. I'll show you on that. I don't know. Like, I've never even. I like watches for like resale value, but it's like it's 10th on the list, man. Like, I'd rather I've made more money buying luxury cars and flipping those like as a thing. I don't know. I've just never been a watch person. That's it. That's why. Like, me and Uncle, like, just no, we ain't. I don't know. It's never been the style. I've never been about that life. Apple Watch, tiny risk. I did wear the Apple Watch for a little bit, and then I started getting bugged by it. It was reminding me how much he was like, your heart is beating fast. Now your heart's beating slow. Now maybe you should go for a walk. Congratulations, you stood up 12 times today. I'm like, shut up, man. And then, like, you can't even, like, and then I can't even, like, put my phone down and, like, just, like, because usually, like, I need my peace, bro, and it's like, ding, ding, ding. I'm like, okay, man, that's crazy. 5% of your portfolio did. Well, it's good, though. You could be nervous about it, but having some good weighting won't be bad. Let's just see. You can always get puts if they're cheap enough. BHC getting news. Boss Health. Thank you for today. You guys, dude, I can't believe we've been going on for like an extra, hour and a half? Yeah, we've already been live for 7.5 hours right now. Oh, man, today's going to be an 8-hour day, 9-hour day maybe. Oh, no. I'm holding Netflix for the earnings on Disney. Yeah, I like it. And then if Disney does good, the Netflix plays are actually up almost 100%. But if Netflix does good, or Disney, it's going to be beautiful. Because, again, on the small long term, we're already up 11% on Netflix. And then the big account, I'm up like 2% on it. So, I mean, they are in a pole position to go crazy. Biotech, tech, TECH. Thank you for all your work. Thank you for being appreciative. I appreciate you. God bless you. Hey, shout out that call, baby. Yeah, 75 basis points did drop a lot, but we'll see how that comes back. You're getting back to the high, you guys. 419.95, about 7 minutes till 10-minute rig, so let's see what happens. Is the Roblo climbing? Yeah, Roblo, you have almost $100 in profit. Again, but I think it's almost 100%. Bottom at 37, now they're going for 58. Disney is today after hours today. And then 419.98, the high of the day is 420.03 or 09, I think. This is the one Disney movie that got canceled and country's going to go to earnings. I think, it was Buzz Lightyear. Bro, I watched it. Nah, man. I don't know. I don't like, certain things when they get, like, shoved down your throat all the time, but the Buzz Lightyear, I actually liked the movie, and it really wasn't that, like, aggressive. Like, it wasn't like it was like fully like a woke film. Like, it was just like, I think a couple of scenes. I love the movie. I'm a big Buzz Lightyear fan, but I liked it. I was surprised. Like, bro, I thought it was going to be like, I thought it was going to be like Buzz Lightyear acting a fool. And like, yeah, like I thought I was, I thought it was gonna be like, I thought it was about to be like, cause I just heard people say, oh, they canceled it cause of this, but it wasn't like it was very subtle. Yeah, other countries did ban it though. Yeah, I thought Buzz Lightyear was gonna be doing drag or something crazy, but it wasn't like it wasn't totally like I've seen way more wokeness and other stuff in very, very different elements. I'm gutted they changed. I feel you. I'm a big Buzz Lightyear fan, man. It was a little. I noticed that was like I was like, it's not. It looked like Buzz. It kind of sounded like Buzz, but it really wasn't him. My legal said I can't write covered calls on company shares. No way. So literally, I guess Lending Tips is listening after me saying that about Buzz Lightyear. His text, stop sucking up to YouTube. I'm just keeping it real, man. I don't care. I've already given up. I'm no one change anybody's opinion. I've already got to the point. That's it. My social credit score is already clapped. I don't care. Honestly, at this point, I don't know if you could notice it, but what it's coming down to is I'll just tell you how it is. I thought it was going to be wild. It wasn't that bad. It was not that bad. Especially as a Buzz Lightyear fan, it was not that bad. I don't care. YouTube, even if I suck up to YouTube, they ain't going, nah, they still don't like me. And Vita. Now it's really going crazy. This was getting called out a lot, but now it's like really going nuts. Yeah, like you and a couple other people, and they were like, chat, Navita. I didn't know it was up 250. I thought it was up like 75 there and like kind of holding. But now it is kind of going nutty. That's Kathy Wood. Kathy Woods owns this? No way. Oh, yeah, maybe. Wow. I thought this was like a pink sheet. Would you look at that? Yeah, D-Sane was calling out. You were calling out a lot. I'm going to stay for Disney earnings, yeah. Roblo. Still going. SPY 420 now. There it is. New high. And then 3 minutes here until 10-minute rigged. And then Disney's pricing in about 6% for earnings. Early in the morning, options are pricing around 8%. Oh, JD on the low. China, JD, and then Troy says City with the Chicle. Yo, JD's getting knocked. No, JD. Look at that one. We need news on that. JD, no, I'm not seeing anything right now. Nothing official on the wire just yet, but that's a pretty big candle. Downside watch, nothing else. Keep a lookout for it. Let's see. FINRA, debate with latest arbitrage proposal. That's not it. Baba, little Chicle too. JD earnings 823. SPY falling a little bit. Oh, it was just moving into the highs. Yeah. Baba and JD, something's happened here. It's about to snap some of the other growth stocks there. Baba a little bit, but JD more or less. K-Web too. Baba, JD. Where's Baidu? Baidu a little bit, but JD is definitely a standout on that one. JD, no, nothing, dude. No China news. It's bouncing a little. That's just a weird candle, considering what we just had. Yang pop. It may not last. Yeah, just shares going down. That's it. Nothing else. Baidu's pop in, JD. Keep watch on JD, though. That one's interesting. 1 minute till 10-minute rig, so get ready. Chinese retaliation news. We'll see. Really depends. Something happened. Well, JD was already weaker on the day. Remember, Baba was up and the rest of the China plays are up. I don't have a price target on Roblox. I mean, a bunch came out today. In between like 38 and 55, I think was the highest, but that's it. 10-minute rigged. VWAP has barely moved from here again. We clipped the second high of the day, slightly higher than the first time, but now we are coming back here with 10 minutes remaining, ladies and gentlemen. Yeah, what a day. The rig is real. 10 minutes, man. 10 minutes. New analyst. Roblo's doing... I can't believe the stock is positive. After all. I mean, it's still holding... It was up higher. Remember, it did hit 50, but damn. I guess, is NetEase still holding? I guess so. Anything's possible. Spy squeeze can continue. Well, we'll find out with the data. Even without the data, I do kind of agree with that, but we have just 2 more slight data sets, which will either add fuel or maybe kind of cool things down. That's what we're going to find out. And Vita, sell the news. We'll just see the market stripping out. Roblo still going to a high. Spy right below 420, 419.77. Mego help in the NASDAQ, maybe. If SPX expires in the money, it depends on, like, if you're on today. I don't know if SPX operates the same way. Usually they use the average price between close and opening to determine, but most SPX contracts settle in cash. So they shouldn't make you go short. They should just actually just pay you whatever you're up. But just make sure, depending on what contract you're at, the settle price may be based on the close and opening, and that's where you're going to get screwed. SPX cash settles in the money. How do you feel about private well and septics on homes? Not a big fan. If I could avoid it, I can. I think my cabin has like septic, or I think my cabin has like I have to fill up like a propane tank and shit. And it's not preferable. If you could avoid it, I definitely would. There's usually a lot of problems and a lot of expensives. JD again? I thought it was over. Yeah. JD is coming down again. I mean, there was China. I would say what's it called will react, though. You'll watch Baba go down with it. But Baba's really not playing along. And then Daniel, did you have you accepted an offer on the house yet? City's still selling. Yeah, XLF is even coming down. JP Morgan, Bank of America too. Yeah, banks are giving up, but City's kind of outperforming and giving it up. K-Web. Remember, by SPY puts, now's the time. It doesn't want 420. Well, it's gotten above it, but it hasn't held. But I see what you're saying. That's why the next couple days, I mean, we're going to find out. Yes, we are in escrow. God is good, baby. Congratulations. Roblo pop, man. So the plays are up 100. The debit spread itself should be up 100% right now. Yeah, you're at 63, or I guess 72 if we paid 37. or 74. You're just below 100% on that one. Holy, I'm almost green from January. That's what I was saying. I'm like, dude, this has been a monster rally. Even the long term, even now, average downs we bought are going green. It's like this is that point where, again, financial conditions can ease up real quickly from here, and that's both a blessing and a curse, depending on how it plays out. JD K-Web. JD's bouncing now. AMD's on the high, making a final push. You got Roblo. Unity contract is at 4. I even think your ghetto spread is up too. So if you actually sell the ghetto spread, you'll make $20 on it, and then you could just sell the contract and realize it if you'd like. I don't trust this. I trust it more than last time. GME Web 3 tweet. Welcome to the World Wide Web. Coming soon. Public alpha. Or you guys want to play Roblox? I'm down. JD's bouncing now. Let's see the final push. 5 minutes left, ladies and gentlemen. Abby Vi pushing up. Do you trust this rally because of the inflation data? Yeah, I mean, that's it. Like the other, it was sketchier when we were running off of an idea of Powell that every Fed person said, nah. And then now this was the worst data we've gotten in 10 months. So, I mean, that is the only thing that's really going to be able to, make things a little bit better than not. Let's go. Team on the low. Atlassian. Why are they dropping? They're positive. Team is on the low right now. Again, it looks like a couple things are balancing out, but we'll find out here. And then back to 420 again. A lot of other names is Netflix. Netflix even coming into the high. Again, that plays almost up 100% too. You're 30 cents below that. Or no. You're 20 cents. And then the Nvidias are actually doing great work too. Apocalypse was just transitory. Buckled up. Ready for landing. That's good, baby. All right, ladies and gentlemen, we're making our final approach. So we make our final approach. If you guys are holding on to any bags, please stow them in overhead bins above or firmly beneath your seats. We'll be coming through the aisles with a trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in the description. That's going to be your nightly watchlist and main channel layover around 4:30 p.m. Pacific time at the Trading Fraternity terminal. And then we're going to be taking out promptly around 6 a.m., 6:10 out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 84 degrees and sunny. Looking like a beautiful day to go outside, maybe get a little bit high, or only if you're trading on the S&P, but we are still under COVID guidelines. No masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Cole Rapid Rewards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Go, 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 go. Bring it home. Honestly, I said get high because I was talking about the stock market, and then it didn't click and then I already committed to saying it. So I don't know. That's why maybe don't go get high. I meant like high. Like that was supposed to be an S&P joke about how bullish we were today. But I guess, as some of you were vibing with it, you didn't even notice. You're like, amen. You're like, yeah, hell yeah, Josh. Hell yeah. Hell yeah, bro. I feel it. More party, baby. Oh, there you go. Another gift to the Chaz. God bless you, my friend. Amen. Amen. I I hope you guys are ready for it. Wrap it up. 1 minute. Go, 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 go. Bring it home, ladies and gentlemen. Less than 1 minute remaining. You got a little bit of data tomorrow. Then Friday, one more bigger set, but all eyes are on CPI. What happens to Fed futures? You got a couple earnings after the bell. So finalize that and wrap it up. But speak now or forever hold your peace, baby. 4, 3, 2, 1. Ding 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 ding. Oh no! Let's go, baby! Let's go! We did it! We made it! We did it! We made it! Ladies and gentlemen, boys and girls, it don't matter if you made or lost money. I need a GG because at least you learned something, baby. Oh, God bless the code. Let's go, baby. GG. Oh, it don't matter who you are. All my real money traders, I need a GG. If you working on that craft, I need a GG. All my lovers, all my lurkers, all my laggers, it don't matter. I need a GG right now. Stop playing with me. This was 8 hours in the books, and today was ridiculous. Oh my gosh, good game, bro. No, you played good, bro. You played good. Honestly, good commentary. No, you had some good comments. Thank you for contributing, bro. Seriously, good game, bro. Good game, good game. Shout out to Chad, baby. Oh, all the people that contributed. Good game. I love you, man. All the members, good game, good game. Stream alerts, good game. Let's go. I see you, Twitch. I see you, baby. Oh my gosh, what a fucking day. I can only imagine next quarter, bro. Good game, good game.
Show you the top, every bottom my pop, both the key and the lock. Don't believe me, just watch. Use my freedom a lot.
I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Cut it, baby. Oh my gosh. Chatadonia. What an amazing day, man. Chatadonia, what an amazing day. This guy sounds good, man. I like this guy. I like this Josh guy. He's great. But no, bro, that's it, man. That is the day. I love you. Thank you for being here. We are still sticking around for Disney earnings, but for real, this was a wild day. It's culminating a lot of what we've seen already. I hope you realize why we talk about the long term so much, because this has been a wild couple of weeks, man, but we have a lot more we're going to deal with. We're going to see where this takes us. But Chad, God bless you and thank you for being here, baby. Is Disney out? Let me see. Until Disney comes out, no, let me just tell you how grateful I am to be here. Oh, 2.2 thousand likes, baby. Oh, let's go. They don't feel me. They don't feel me. Amen. Amen. So for real, man, God bless you. If you clicked on the video today, and especially if you contributed in a positive fashion and just made this a good place to be, like, for real, I hope you guys, especially if you were new, were able to sit here and realize what we do. Again, we've been live for like 8.5 hours. This is what we do every day. We got a lot of people who work hard, a lot of people who contribute, and if you made that effort to actually contribute and provided something here and really came to learn and not for whatever other reason it may have been, man, we really appreciate it and thank you, and I hope you guys realize every time you like the video, every time you share the video, again, nobody knows about us unless it is word of mouth. That's how we do it, bro. For real, again, we already got in trouble with YouTube and a lot of things, so I hope you realize every time you guys support the channel, like the video, do all of that, you are helping us complete the mission and spread it and give people free news 8 hours a day with a lot more with it, baby. So God bless you and thank you, and shout out all of the Chads who got to participate with me today. Amen, amen, amen. Nah, so for real, appreciate you guys. Thank you. Don't matter if you got a membership badge or not, because like I'm saying, man, thank you guys for supporting and spreading it, because everything is free. We got the stream alerts, and shout out to the stream alerts, baby. But if you're here on stream, you don't have to pay for anything, man. That's how we get down. So I hope you guys realize it's free 99, and we love you. And if you came in here and took care of the community, and you didn't litter, and you really participated and played, no matter what, man, I just got to say I salute you and thank you. Big shout out to all the members and all those badges, bro. I'm telling you, it's a very humbling experience, but you see those badges every day. That is people who have watched this show for years. I don't think y'all feel me on this one, man. You know what I'm saying? The good, the bad, the ugly. Y'all know how it is. Y'all got to see it all, man. But members, thank you for riding with me every single day. And like I said, man, a lot of stuff going on. We are working hard, and we are going to make sure if y'all are paying attention and putting in the work, man, you riding with me, we all going to get it, baby. Let's go. If I eat, you going to eat. It don't matter what it is. But I'm just saying, man, some of y'all been holding it down. And for real, man, I appreciate you guys. And thank you for riding along with everything we got going on. And finally, last but not least, man, them stream alerts. We love y'all. If you got stream alerts and you here all the time, you a real one. Thank you for supporting. Again, it's just amazing the support that we receive. And again, all of what we have is just all through independent support off of everybody in here, man. And it's crazy to think about. So God bless you and thank you. Stream alerts. I'm going to tell you every day until it happens. You are not going to miss anything. And one day you are going to get a stream alert that is going to scare you and it's going to make you excited. That's all I got to say, baby. Amen. Amen, baby. Let's go. Here it is, Disney. Oh, my gosh. Disney killed it on subscribers. Hold on. Where's Netflix? Are they going up off that? They're actually benefiting. Dude, Disney killed it. Killed it. Oh, my goodness. They added 152 million subscribers. Estimate was 148. EPS was 109. Estimate was 96 cents. Revenue was 21.5 billion. Estimate was 21. Total ESPN 22.8 million subscribers. Estimate was 23. So they missed. Hulu missed by 0.1. And then Parks and Experiences operating income 2.1 billion. But total Disney Plus subscribers 152. Estimate 148. And then they said that they're going to raise ad-free streaming price by 38%. So price raise, member ads, beat on top and bottom line, and the parks did good as well too. That's a home run. Literally a home run, but let's see if the market sells them off. That's it. I don't even know how to handle a home run anymore because I'm like, wait a minute. I feel like they would have done better if they did bad, but not too bad. Does that make sense? We'll see, though. I think some of the ugliness will come up. But, yeah, no, that was, honestly, that was a really good report. Again, even it's so good that they outpaced Netflix, and even Netflix is getting a part of it. But I think it's because they're raising prices. So now all of Netflix's price raises, it doesn't hit the same when all of your competitors raise prices. You see what I'm saying? So that's actually very, very bullish for Netflix, and I think it's bullish for Disney now, too. They're raising all of them. Again, ad-free viewing prices are going to go up. Disney shares gained 4, subscribers beat. That's the big one. Oh, man. So, yeah, again, ESPN Plus, they missed on subscribers barely. 22.8 versus 23. Total Hulu, 46.2 million versus 46.4. Disney to introduce ad-supported version of Disney Plus on December 8th. Wow. Hold up. Disney is going to roll ad Disney Plus before Netflix? Oh, my gosh. So that's going to be interesting because then that could factor into Netflix. No, they're going, bro, what? Like, why is Disney is going to be launching ad-supported Disney Plus on December 8th. That's in like a couple of months. So I wonder how that's going to affect Netflix. And then Disney third quarter EPS 109, estimate 96. And then third quarter media and entertainment operating income 1.3 billion, revenue 21.5 versus 21. It looks like Disney nicely beat estimates on earnings. It also beat on all of the important Disney Plus subscriber figures. Yeah, bro. Disney, 10% is huge for Disney. Disney don't really move like that. So now Netflix is going down a little bit, but I think honestly that should carry them home. They beat Netflix to the punch, but it might benefit Netflix though, because now Netflix is going to get a trial run on Disney. That's it. You're going to get to see how people react to it, kind of the numbers that people get from it, and then Disney raising their prices is good. But overall, this is just like oh, shit, we have a random play on Disney, huh? Oh, Colt, you're coming back to life, bro. Oh, I forgot about that. We do have a random play on Disney. Oh, whoa, the random account rocketed today, yeah. Bro, the random play on Disney is already up over $180 now. Oh, I forgot about that. Yeah, Disney, we have a 116 call. So that play will be in the money tomorrow. So that one might go up 1,000, and it'll be at least 500% tomorrow. Damn, one dude. That's back-to-back randoms. Back-to-back randoms, Chad. I think that's 3 in a row because it went J-Alt with Origin, and then it went Amazon, and then now we had the Disney on there. But yeah, no, that's solid, man. Let's go, Chad. I think market trends really pick up with that random account, man. Oh my goodness. Oh my goodness. More Vegas value. I got you, man. Whatever you want, man. You let me know. What can I do for you, Chad? What can I do for you? So Disney jumped 6. Investors are closely watching increase in streaming service prices as the company has chosen to hike Disney Plus fee by 38%. Company is introducing ad-supported version, raising the price of ad-free to $11 a month. So they're killing it off of that. They're still doing good. I want to go to Vegas. Well, let's go. Who was that on the last one? We got to get the name from it on who it was. I think I took a picture. But like I said, I mean, I gave one. I know we hit one of them. Somebody hit one. I PayPal'd them $100. I told Dev the Lurker, if you want a Vegas room, you let me know. If not, I mean, I got a lot of perks. I got Yeezys I can't wear. I don't know, man. I want the random active, bro. I want the random active. I just want high quality, bro. I'm going to incentivize the shit out of it. I don't give a fuck. Like, this is straight capitalism at its finest. I will get any and said, what, you want a free night in Vegas, bro? Bellagio, Aria, I'll give you 2 free nights, bro, and $100 room credit. What else you want, man? We can run it, man. We can run it. We can run it, man. Oh, my goodness. Oh, my goodness. So, yeah, that's fire. That's it. I think Disney, that's just going to add to any bullishness. Netflix will probably catch some off of that. We got a random play hitting, and then that's it. Reach out. If you are the random play, reach out. But if not, don't reach out. All I care about is random play. Again, if you post on the Monday watch list and that play hits, I'm in your debt, my friend. I'm in your debt. I'm not going to lie to you, though. The Yeezys I could give away, I wore them once. I'm not going to lie to you. I wore them, and they were the most uncomfortable shoes I've ever worn in my life. So that's why I'm like, I can't do. I was about to light them on fire, bro. So they are worn once, slightly worn, but my feet odor might be in there for you, so I don't know if that adds any extra value. I only say that because somebody was really trying to get my mic cover off of me, bro. Nah, like, I ain't even going to lie. Nah, it's like the other Yeezys, man. It's like the other Yeezys, like, the weird-looking ones, and then it, like, wraps up your foot. And, like, bro, it's the most uncomfortable shit I've ever worn. I like the other Yeezys, but it was the one Lending Tips got me. I was like, nah, man, these things, I'm already flat-footed, bro. The mic cover, yeah, bro. I had 4 people reach out to me about the mic cover. Like, no lie. Like, I was down at first, but then I was like, I don't know, man. I feel like somebody going to try to, like, clone me or something. Or, like, I don't know if y'all do, like, I don't know what it's going to lead to, man, but then I'm still honored by it. So you have to understand that. The random account is up 50%. No. Excuse me. No, the random account is up 600%. So we started it with $500, and I've never added to this once. That's it. I put in the initial $500 when we had this idea, and we started the account, and then it went crazy. It went up as high as 5,000, and then as this reflects almost everybody, and then it dropped really, really bad, and then it popped up here from 2,000. So 500 into $3,000, and then it should be a little bit higher after tomorrow. But even though, I mean, think about it. We lost on this account for probably about a year straight, almost, give or take. There was a couple of of bounces in there, but again, the strategy itself has done very, very well. Just, I mean, one play a week, keeping it below $100. I mean, it's very hard to clap yourself again. So watch out for over trading is the message there. Rona decline caused the random on the upside, but even after losing all of them, I mean, you see it. It's just, honestly, I think it has something to do with the market, and that's why too. It's like it's an element of randomness, who participates, the quality of plays, all of that. But even then, it's kind of cool to see that thing is still actually up 600% from 2019 till today. We could continue the route. Again, these earnings are fire. So we'll find out. But Chattadonia, I think that's the day, ladies and gentlemen. So, Chad, I love you. I hope you have a wonderful day. Check out the links. First link for the Scream Alerts Bootcamp and Real Estate course. Second link for the Nightly Watchlist and main channel. Third link for that membership badge. Fourth link for some ultra breathable merch. Again, this is what we do sell. If anybody tries to sell you anything, I know Stream Alerts, we have that, but if you want Stream, baby, it's free $99. But anything else, I'm going to sell you that merch, baby. I'll sell you that merch. So follow me on Instagram at The Trading Fraternity. But if fake Josh hits you up and he's not selling you breathable merchandise, you know you got the wrong one. You know what I'm saying? Amen, amen. So check that out. Check out the new channels, Cold Real Estate, Cold Cars, and Cold PHILO. And is this Cold Real Estate? Yeah, you guys better be subscribed to this channel because they're going to go live today. So if you want to join the real estate call, if you want to participate on the Zoom call, email cultrealestate@gmail.com. But if you want to just listen in and see if you want to see how they got to build a team that has done over 150 million in transactions already this year and 100 million last year, you might want to check it out. But check it out. It's free $99. We will see you live in direct. So email if you want to join the Zoom. If not, we will see you on everything else, baby. We will see you on everything else, baby. So God bless you. Shout out to Chad and Chattadonia, and God bless the cult. And thank you, Tyler and Trey, as always, baby, and all the real estate people. Amen, amen. Amen. We love it. And then how option pricing works, I promise you will watch this video and learn something very, very great. Oh, it went up to 11,000 likes. Wow. So that's amazing. It was 10,000 likes before on this video. So a lot of people like this video. You should check it out. You will definitely learn something, how to set up our long-term portfolio and dividend investing. This one will go a very, very long way. Again, this is the whole point with what we've been saying. If the market rally continues, even throughout all the pain we've seen, you'll quickly watch a lot of things come back to life. So keep that in mind. And then finally, baby, amen, amen. Prayer request wall. This is what we believe in, man. If it can't flow through you, it won't flow to you. We want to put your jersey on our back. We are rooting for everybody. Me and my mom pray for you guys every single day, every single weekend, man. And honestly, I don't know. I'm kind of changing the pitch because, I don't really care about it in the sense of it doesn't matter what is filled out. I just want I want you to hear this. I for real want you to just hear it so you know we are praying for you no matter what. That's it, Chad. So I don't care if you think you a demon. You I'm on demon time. Shut up. No, you not. I'm still praying for your angel ass, okay? You're fine, bro. We praying for all of you. It don't matter who you are, whether you like it, whether you like me or not. Even if I have a pending lawsuit against you, my friend, I am still praying for all of you, and I want all of you to really actually know that, okay? For real, we praying for you, and I encourage you, pray for all your Chads, because we praying for you whether or not you fill it out. You can fill it out, that's fine, but I just want you to know there is literally at least 2 people, me and my mom, praying for you, and at the very least a couple thousand of Chads. You know what I'm saying? Amen, baby. They don't feel me. Amen. Amen. So that's it. We praying for you, Chad. That's it. Fill it out if you like. Do your thing. Don't be too shy. It don't matter, though. You getting prayed for than not. I'm just saying it's a different energy. It's a different spirit we got here. We go about it different, man. And that's why I say what I say every day after the bell, bro. To be surrounded by this many people who I know I share a lot of thoughts and minds with, honestly, in a world where I can't even say half the shit I want to say, but I know people vibe, bro. And I know people are there, and I know they're thinking higher and trying to do better for themselves. And bro, I'm just telling you, it's a little different. So just know you getting prayed for. And we hope you're blessed, and it's blessings no matter what. It's blessings even if you a hater, man. I don't think they really get it, man. So amen, amen, baby. Let's go. God bless the Chad, baby. God bless the Chad. But that's the day, man, all right? That's it, man. That's it. That's the day. I love you. I hope we see you guys tonight on the watch list. It'll be a good one, but if not, man, we'll get ready for an epic rally. Oh, man, and random plays. That got me hyped, man. God bless you guys. But Check it out. Read the books, Richest Man in Babylon, Proverbs New Living Translation, Strangest Secret in the World, and Lead the Field by Earl Nightingale if you're feeling extra, okay? Those are awesome, good books. But before we head out, what's a good song? I don't know what song I want. I don't know what song. Man, we can hit it. God bless the call, baby. Let's go. Backs against the ropes, but we kept on bouncing back. This is a different song, though, so don't get too crazy. God bless the Chad. Amen.
Yeah. Wake up in the morning, I be eating. Money still my back, take a knee and thank the man. Then I get back to the trade, seeing houses in the evening. They go to LA, brought a tear to mama's eyes. We should see how far we came, not to pray in the evening. Ain't promised a day, so this money that I'm saving is some money on the way. Another day, another season. Bitch, I ain't afraid, cause the Lord can give a lie and the Lord can take away. Yeah. On my job, feeling Joe. Quit $1 million for the whip, $20 for the clothes. So I don't forget the days that I barely stayed afloat. Hope you picking up the game, I ain't saying this shit to close. Don't trust him, don't eat. It don't matter if you dining with the king. Cause your weapon take can kill you before you blink. That's a pride and it's talking about the great. Crazy but I'm diligent, contrary and a dissident. I keep the peace, don't be naive, I'm moving like I'm militant. I translated transitory, there was no equivalent. Everything except the president is unprecedented. Damn, you might get that in a minute. We're on a second listen, I son him, that's repetition. The Father got all the knowledge and granted me with the wisdom. The truth is still hard to swallow, ain't following what I'm spitting. Valley of the death, I be walking, chilling, seeing what I see, yeah, card and vision. Got a lot of skies, but they taught me lessons. We gon' take it far, if that's what God's willing. Morning I be eating, money still my back. Take a knee and thank the man, then I get back to the trade. Seeing houses in the evening, they go to LA. Brought a tear to mama's eyes, you should see how far we came. Wait, ain't got time to even finish hooks. I'm busy making plays and just waiting to get the puts. Ain't caught up in what they talking, cause often they overlook the progress we making often and focus on what we couldn't. You don't bring now, don't eat. That's reality, that shit ain't up to me. You can look, but that don't mean you really see. Price inflated, but still the land of the free. Fuck you, you ain't feeling it. Me and you, no semblance. Mama was an immigrant, and look at what we did with it. You look like you think you quit, but nobody gon' give a shit. That's between the future you, I hope that you could deal with it. Damn, I should cool it for a minute, cause I ain't really tripping. It's different, the PHILO hitting. I deal with the dealer different, and wholesaling for the difference. I got a tree planting trees, and it's feeding my children. In the morning, I be eating. Money still my back, take a knee and thank the man. Then I get back to the trade, seeing houses in the evening. They go to LA, brought a tear to mama's eyes. We should see how far we came, not to pray
PHILO, baby.
Ain't promised a day, so this money that I'm saving is some money on the way.
Another day, another season.
Bitch, I ain't afraid,
cause the Lord can give a lot and the Lord can take away. Oh, man. Okay, one more. I just need to listen to it.
Treat this like my first. Treat this like my last.
Real quick.
Anything could work. It happens slow or fast.
Smoking on that hope. I'm gonna need an ounce of that. Our back was on the ropes, but we kept on bouncing back.
Treat this like my first. Treat this like my last. Anything could work. It happens slow or fast. Smoking on that hope. I'm gonna need an ounce of that. Our back was on the ropes, but we kept on bouncing back. Treat this like my first. Treat this like my last. Anything could work. It happens slow or fast. Smoking on that hope. I'm gonna need an ounce of that. Our back was on the ropes, but we kept on bouncing back. Shout out to my rhymes. Help me do this right. The Lord control the fire, but you can roll the dice. I care more about the ownership, I don't care about the price. You think I was a loner, I just don't really waste time. Nah. Comment, I commit. Take some notes and grab a pen. Money don't make you a man. Lose some friends, think you the man.
That's the worst.
People love to play pretend. Love to play the middleman. Love to say that they your friend, but where they at when it's the end? I know everything
Think
I do
would never be enough, but that ain't stop me from developing and
always showing up. They always love to say what's up before they ask me for some stuff. But I built this shit on love and I ain't never expected none. There's a lot of things I should be showing off. All God, this a war. You should see my battle scars. Trying to be the richest man of Babylon. Tag along. Hope you say that 10% and bought a home. Gone.
Oh my gosh. Our back was against the ropes, but we kept on bouncing back. Oh my gosh. How's you thinking? Wow. I know everything I do would never be enough, But that ain't stopped me from developing and always showing up. Chadadonia. Let me just read you the latest Bloomberg alert I got on my phone. Everyone wants in. An improbable equity market bounce is threatening to become a melt-up. Oh, man. I don't even know if I'm, like, excited to be, like, bullish or like, bearish on it. But I'm just like, man, we have gone through such wild shit in the last couple weeks. So, Chad, it's been a great day. Again, it's been a wild one, honestly, just great in the sense we got our data. We can move with a little bit more confidence, but I hope you realize you've been through a lot already. It's only going to get crazier from here. We still got a lot more, so hopefully you're able to have been learning on all of this, but just get ready. We're probably going to see a lot more activity up and down as we move forward. But if I can say anything, you made it this far. So congratulations. I just like Uncle better, honestly. I just need some Uncle. You know what I'm saying? Man, I don't even know. Man, it's so good. Okay, that's it. But Chad, I love you. Enjoy the day. I'm going to get going. I'm going to see you on the watch list. Good luck and God bless all of you. And please go do something positive, or at least take this energy and do something with it, man. At least control what you can control. You know, get on some Epictetus vibes if you can, please. Or at the very least, man, just don't forget what we said on the PHILO, man. Okay? Don't give up the 80% going for the 20%. Yeah, strengthen what you got, baby. Strengthen what you got. Double down on it. You know you got something working in there, baby. Oh, you don't need to look for the next best thing. It's right. It's already right in front of you. Oh, you just got to work on it. Oh, they don't feel me. So, Chad, I love you. I hope you have a wonderful day, and just don't ever forget why we're here, man. Okay, why we keep going, why we want to keep our focus on that glorious future, no matter what it looks like now, and keep pushing, keep working hard, because we know we gonna reap what we sow, baby. Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. So, Chad, I love you. I'll see you on the watch list, and I'll see you tonight. And it's been a good day, man. It's been a very good day. Peace out. Oh, hey, wait, Josh. I want to melt up inflation, pony. Okay, love you. Bye. I tell you, what do you mean melt up? When I was president, all you did was melt up, unless I sent out a tweet. Come on, what are you excited about? You're excited about the S&P? What's it at? 400, 410, 413? That's rookie numbers. Come on, when I was president, I was bringing it up there. Have you checked your 401k? It's still down. Come on. And now they're investigating me. What did I do? I can't talk about it, but what did I do? I didn't do nothing. What did I do? All I'm saying, you know how the economy was. Shut this guy up. All right, yeah, watch. First, I'm gonna send the DOJ, bitch. And then next, I'm going to audit you. And I'm going to audit anybody who even looks at you. Come on, why? Can you see that number today? That's all me, baby. All me, 8.5% CPI. You want to know what the CPI was? Month over month, 0, bitch. Come on, no, come on. I'm not joking. Hey, I really mean it. I really mean it. The CPI is not moving. That's why. Where's all the people who said it was moving? You know where they are? They're in a gas vehicle. Wow, we're building. And we got a bill for chips. It's a bill. And then bill, it's a big bill. It's gonna, inflation is coming down. And that's what you gotta see. I told you it's important to me. Okay? So I love you, okay? God bless you. I wish you a happy Kwanzaa and just a good morning, okay? Goodbye. Or welcome. I just repeat, end it. Just end it. Yeah, end it. How do you do it? Why is Zoom so much harder? Easier. Fuck. Where's the Paxlovid?